Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to today's edition of Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Hope everyone had a great, relaxing weekend because it is anything but a relaxing market this morning. Markets are in the red, but we got a lot of news just flying left and right. So we'll cover as much of it as we can. Our guest today is Tim Quast. It is Market Structure Mondays. We've got to have Tim on. He is the founder and CEO of Modern IR and Market Structure Edge. Today's show is also sponsored by Market Structure Edge. I'll put the link up on the screen right there to learn more about their platform once I find the link. Okay. That's the breakdown of the show. News. Tim Quast, 8:35, and then at 9, I'm bringing my own guest, guys. You can hang out or you can leave. Eric Balchunas, who is like one of my favorite people on Twitter in the markets. He's a ETF analyst at Bloomberg. He's gonna come on with me at 9, talk ETF. So big show today, a lot to get to. Joel, bring out those charts. How are we doing this morning in the pre-market session?
All right, Spencer. Not well. We're down 33 handles. I battled a little bit last night. Got up to 39.14.5 and then completely fell apart. We have over a 50-point range so far, so that's a little bit over the 9-day average trading range. The low, 61.25. That's no big deal. We're just back where we were on February 5th. The intraday low, or the Globex low, was 38.60. No big deal. Just giving back some of February's gains. Crude, that's in the green by 60 cents at 59.86. Gold digging its way out of the bottom of the trading range. Gold is up 17.60 at 17.95. Silver's in the green too by 23 cents at 27.48. And Bitcoin getting volatile, hit 57,790. And now we're down. Well, let's call it $1,600. Let's just call it 5,400. Triple D. Do you got any disasters on your hands today?
Oh yeah, there's quite a few here. Oh yeah, a little bit under siege. Anything long tech is like, you're working it, and that's not even looking at the long-term investment account, which is obviously loaded in tech. This is an ugly day. Yeah, you don't look on down days, right? In your long-term portfolio, anyways. Can't open my trading account. Their losses are sitting in front of me. So anything tech, not pretty here this morning. So a lot of rotation. I mean, we're seeing a lot of stocks that are actually trading higher here this morning. Some of the more defensive names. A lot of news stuff. Coal's up $5 here. They got an activist in there. You're seeing Oracle trade higher. Some of your banks are holding on okay. I mean, a Discovery, which I do have a position in. I'm pretty much hedged though. Actually, it's trading up substantially on earnings, but you do have some good stories, but you got a lot of ugliness. Just a lot.
Do you know why Oracle's up?
Why?
Cover it, Barron's.
Is that what it was?
Yep.
They like that.
Yep. They're coming in.
Barron's still has influence.
Yeah. Before I used to read all the articles and stuff, and now I don't know. It's kind of like reading the show from last week, a lot of it,
They listen to our show and publish it?
Yeah, exactly. But, Oracle's getting a pop. I see. So what do you, like, Dennis, when you wake up, you see the big red, what do you think? What do you attribute it to? I kind of caught you late on the...
I don't even know. When I see the big red, I'm not going, what is it attributed to? I'm going, how do I control the damage? So I'm in damage control. I haven't had any time to really look through. I know I saw a headline, Europe is weaker or something.
No, it's not Europe.
Say. Well, that's what they try to say. I don't know what the reason is. I mean, we've been in the mega caps. We've been worried about them for a while, and you know what? They keep rolling over here. They're not looking healthy. It's not good for my long-term portfolio. I'll tell you that much. But the mega caps have not looked healthy here for a bit. Apple has looked weak. Amazon wouldn't go up, and now it's starting to go down. So, I mean, there is weakness in the mega caps. A lot of money hiding in those places. We know it's moved from mega caps to speculation. If it starts coming
Not
out,
good.
and it's been coming out of speculation, you think maybe it's going to go back to mega caps. Maybe it's going to come out of everything. So we're in a big bubble. There's no doubt. So we're going to have pullbacks here when you're in a bubble. Is the bubble going to get bigger, though? Like, how big's the bubble get? You know, are we here on the bubble? Are we here on the bubble? Are we here on the bubble? Nobody knows. Nobody knows anything. But I can tell you we're in a bubble. It's just a matter of how big the bubble gets before it goes pop. Did it pop already? On some stocks, it definitely has. Like we were talking about SunPower last week. I mean, you're talking about a stock that's 55, it's 35. That's a 35, 40% correction right there.
I got a new thing. When you sell, when you buy half, you get killed, right?
Yeah.
And when you want to sell half, sell all.
Sell all. Just sell all.
Well, no,
Hit the
for
sell
you,
all
I'm not
button.
talking about, you never sell stocks, but like you sold that Where'd you sell that SunPower last
53.
week?
53.
Yeah, I mean, you can't get much. I mean,
It went higher after that. It went to 57. I sold it early, I think. I was like, right when those 4 or 5 days from January, when the short squeeze was happening, I was squeezing this too. It felt like upside capitulation. So I sold 80% of the position. I literally just kept a small
80.
piece.
Oh, that's good.
I sold
good.
a huge chunk of SunPower.
Good.
And that was a good one. I mean, I bought it at 8, and I sold at 53.
Oof.
So
That's
it's
crazy.
You can't, those are good gains. I mean, you can't argue with that one. They're not all like that. I'll tell you that much. It's one of my better ones because I normally sell too early. I get up 100%. I usually sell half. Play with the house's money. So, anyways, it's a tough market but people. Here you're so inclined. You're like, okay, what can I buy? What can I buy? I get that's the mentality out there. That's what people are looking at on a day like this. What can I buy? What can I buy? Because there's no fear out there. All there is fear of missing out. This day isn't going to start the fear. One day, if you get some follow through, then you're going to start to get some fear, and it could get ugly. So, am I coming in and buying the dip here on select stocks? Look at your portfolio. What do you need? Stay diversified. If you're all in on some penny stock here and it's getting killed today, well, you kind of get what you asked for. Because we teach on this show to stay diversified. Have at least 5, 10 positions at least. And not all small caps, have to be diversified across industries too. Because if you're all diversified in tech right now, it's not helping you this morning. So
it's rates, Dennis. It's rates. It's rates.
Is that what they're worried about?
Yeah, the interest rate boogeyman is coming. Yeah.
But
that's
TLT
it.
isn't really moving that much here this morning. So.
But look at that chart, though.
Oh, I know.
I mean, that's like a ski slope.
Yeah.
That's like Mount. Yeah.
Well, and I've attributed that nobody wants to own any bonds when they're worried about I'm worried about inflation. I think the bonds are worried. My bond market's worried about inflation
there you
too.
Go. Yep.
I think it's a serious issue. We know that they say there's none, and they're not going to worry about inflation, but we know that's a lie. And then we look at what's happening around you. So I think that's why it's hard to be bearish stocks if you're in an inflationary environment because asset prices inflate. So I've been trying to buy more real estate, trying to do some different stuff because I'm very worried about inflation. The U.S. dollar has been the absolute worst place to be. And does it continue? That's why crypto's hot. I mean, people are worried about inflation. Well, crypto inflates in an inflationary environment. Do you think we're going to hyperinflation or we're going to go, the inflation's rate's going to jack up more? It's hard to be bearish stocks. That's why I'm fairly, that's for much as I get, I'm pretty much fully invested. So I do have some cash. I always have some cash, and
Gotta have cash.
Yeah, I always have some. So I'm never 100%, and I'm never on margin 200% and stuff like that. In my long-term investment portfolio, my trading account, it's always using margin. But in my long-term investing account, I'm not like in my retirement account hitting up margin and trying to get all in and trying to get rich. I just try to pay the bills. That's the goal. Pay the bills.
Faster reopening than expected, right? Kind of. That's a little bit inflationary. Now you got a couple trill in stimulus coming on down the line, and then you got the increase in the supposed increase in the minimum wage. So a lot of inflationary factors out there.
Well, I mean, what's minimum wage in Florida? What is it? Do we know, Spencer? Isn't it like $5 or something?
No, the federal minimum wage is like $7.20.
Is it $7?
Yeah, it's like $7.20. That's the federal.
Still, though, imagine trying to pay the bills on $7 an hour. It's tough, man. There's a lot of people that got
Florida,
it really hard.
I don't know why you asked about Florida, but it's $8.56.
$8.56.
I'm sorry. Now it's $8.65.
Okay, well, $8.65. Yeah. But you imagine working an 8-hour shift and getting $60, trying to pay the bills. It's tough, man.
Yeah.
It's tough.
All right.
A lot
Not
of people
possible.
got it tough.
It's not
A lot of
possible.
people got it tough.
Merger Monday. Merger Monday.
We got
What
a
do we
lot
got?
Of,
Two
we got a lot of
deals.
deals. Funny comment in the chat. I'm sorry, I forgot who said it a few moments ago. CTB Cooper Tire is up because people mistook it for copper. That's hilarious. But no, it's actually up because they're merging. They are actually they're being bought is to be more accurate.
Cooper Tires,
Goodyear
eh?
Tire. Goodyear Tire ticker GT is buying Cooper
What a
ticker
dog that
CTB
stock.
for $41.75 per share in cash, and there's stock attached too. The exchange
Nice.
rate, the exchange ratio, 0.907 shares of Goodyear.
0.907. I like it. Love when you give me the ratio.
0.907 shares of Goodyear stock for every share of Cooper Tire stock that you own.
And remember, so don't trade this on dollars where you go in 51. No, I got to do 5. You do one share to one share when you got a 0.97 or 0.90. So that's how you get there. Well, maybe 1.1, but you could trade it 1-to-1. So if you're for you risk arbs out there, you got 500 shares. You're doing 500 shares the other two. I know the dollars look funky, but that's the arb when you got a big cash component to it. GT getting hit on it. The acquirer typically does.
What a
CTB
dog.
going to trade off of that now. I don't know. Hard to get all excited about talking about a rubber merger.
Yeah, someone was asking in the chat what we thought. They had some positions in it. I mean, if you really want to be long Goodyear Tire and you think this is going to be good, then go ahead. I just think the whole thing with the way vehicles. I mean, are we going to need as many tires if we have all these ride sharing?
Joel short tires. we're going short tires because we're all going to be driving flying cars. You don't need tires if we're going to flying cars.
Look at the Goodyear chart. And my buddy Ross, who I used to swim with, man, he's worked there forever, and he's always moaning about the stock. I mean, if you think that this is it, this is what's going to turn it around, then you could take the shares. It's had a nice rally off the March low. Am I adding Goodyear Tire to my portfolio? No. If I was lucky enough to own Cooper Tire and I got this this deal, I'd go cha-ching and I would move on. But I don't give investment advice. So S&P's down 35 here off the low of the day.
And then you got a bank merger?
Bank merger.
Yeah. MTB, a bank that I had an account with once and took me a year to cancel that damn account. I'll never open an account with them again. M&T Bank is going to acquire People's United Financial. Ticker on that is PBCT. So it's going to be let me see
Not
here.
much of a premium.
Yeah,
Cash stock.
So it's a stock deal. People's United shareholders will receive 0.118 shares. Of M&T.
0.118. No cash?
No.
Well, it's
an all stock deal. All stock deal.
Yeah, that makes sense. 0.118.
Yeah.
So multiply the MTB price times 0.118 to get your PBCT price for you risk arb traders, and it'll trade off that. I love all stock deals. It gives me something to trade. Until they put that financial transaction tax in. And then
I saw you going at it. I saw you going at it with like an administrator this weekend.
I don't know who I was going. I go at it with everyone. I don't know.
Robert Reich?
I don't know.
He was like a former labor secretary or something like that?
I don't know. Was I going at it with him?
Not in Canada, he wasn't.
I went at it with a few people.
I forgot. You wouldn't know that.
People that are just promoting the financial transaction tax blindly.
Watch out.
Why wouldn't you do this? What's the reason not to do this? Oh, liquidity maybe? Oh, market maker exemptions? Because, it got brought up, and we're going to talk about this with Bill Hartz here this week. And Tim, we mentioned with Tim a little bit too, but Tim's got some other stuff as well, and Bill's going to be in on this too. But just, they're saying, oh yeah, well, and it was brought up in the hearing. Well, Hong Kong has one. They don't have any problems. What do they have in Hong Kong? A market maker exemption. What do they have in France? A market maker exemption. What are they going to have in the U.S.? A market maker exemption if they push this through. So Citadel's not going to pay. Virtue's not going to pay. Two Sigma's not going to pay. It's going to be you that pays. Anyways, that's my rant. There will be a market maker exemption on it.
Mitch is already clipping that one out right now to put up on the.
I'm telling you, people think let's punish these hedge funds. Well, the market making hedge funds are not going to get punished. They're not going to pay it. There's no way that they put that through without a market maker exemption because you'd have no liquidity. So there you go. Little guy pays.
Let's go with.
Wait,
So,
I
go ahead.
want
You want to
want
finish on the mergers?
I want to talk. Okay, or we can talk.
Yeah, you go through some of the SPAC deals too if you want.
Yeah,
That's what he was gonna do.
there's a. Well, I was actually going to go to RCL because their earnings were just out.
Oh yeah,
Okay,
yeah.
let's go. Let's go.
Yeah, they always report after 8 o'clock or around 8 o'clock. It seems like
Try
so.
to screw us on the show.
RCL adjusted EPS, they lost $5.02 per share last quarter,
That
which
sounds
actually is
pretty good.
better than people thought, better than estimates. Sales,
They
Is that
lost
you
$5
snickering,
a
Dennis?
share. They only lost $5 a share, but they're not even sailing. I don't even understand how they're only losing $5. How the hell do they have revenue when they don't even sail?
sales of 34.14 versus $35.6 million.
Where's all this revenue coming from? 34 million. They're not. There's no ships on the water, is there? Are they sailing yet? They must be sailing a few of them out there. The few ships out there.
I think maybe it's future bookings,
Must be. Yep, future
like-
bookings.
T-shirts or something. Or I don't know. Someone just put that DJ Wired. I did not steal that from you. I just thought
They're
that off the
t-shirts.
top of
They're
my
selling
head.
T-shirts, Royal Caribbean T-shirts.
All I have to say about this is I don't know when I put that kind of jagged 50% in there. I put it in. I know I put it in there a while ago. Probably last time this thing had earnings, and wherever it is exactly, it's respecting that. So whatever it is, 79, 80, 81, whatever that is, you get above there, hold above there, then you got a shot. But really been respecting that 50%. It got back to February high, but just hanging out. Can't really make the next move higher.
So you're telling me there's a chance?
Do you want
There's
to
a
encapsulate how Dennis feels about the cruise lines in 2 seconds?
Sure.
Yes.
I own one, though, remember?
That's Dennis running away.
That's Roadrunner.
I'm not running. I even own Norwegian. I still have NCLH.
Okay, fine.
Because I'm like with Raz. I'm like, if we're getting out of this thing, people are going to go on cruises. So you know what? I think that they buy a dip. If you get a dip in this, I think it gets bought.
The old
So
Roadrunner.
I'm sticking bullish the cruise lines. I've actually been bullish the cruise lines.
Okay.
Unless this
Thank
South
you.
African strain comes and really starts to spread. That's the wild card. And we know that the vaccine's not working as well. They don't know if it's going to be effective or not, but they know it doesn't give as many antibodies or something. I'm not an epidemiologist or biologist or anything like that. So, that's just what I read.
Yeah.
But, watching that South African strain's a wild card here. So that's
Is Norwegian, like, are they dipping their toe in the water or something? Because this stock looks better. That's cleared its 50% retracement.
There was a headline last week, I believe. Yeah.
Oh, look at CCL.
Yeah, it was Tuesday. They extended
It's
their
okay,
suspension.
They're up again today. The reopening trade is on.
It is.
It is. It's
should've
been on.
I should have listened to Ann Arlene. She'd been stuck in this, and she just decided at $10 just to make a stand. Just like, that's it. I'm making a stand at 10. And now look at it. Trying to break out today. Wow. There's good. There's a reopening trade. From that, do you want to go SPACs or you want to go airlines?
No, I want to go
Deutsche Bank.
I want to go
man.
airlines.
Let's go airlines.
Okay.
Well, Boeing. I guess that's in there.
Oh, Boeing.
That's what I
Okay,
was-
let's get the
Boeing,
bad news out of the way.
Boeing.
I'm not sure if you guys saw this video.
gonna show it?
I don't want to.
If you didn't, allow me to
All right.
show you that
Wow,
video.
Spencer's fancy guy. Gets in the office early and everything.
So imagine, imagine.
Yeah, imagine
you're-
looking out your window and seeing this.
You're out the You're looking out the window. You're at the window seat. Oh, great! I got the window seat. Not so great. Okay. Now imagine being this guy.
I'd be like, I'd push my little button above, and call the stewardess over. Is it okay that the wing's on fire?
No. Now imagine being this guy. You're just enjoying a cup of coffee.
And that falls in your yard.
Falls in your yard.
Man, that'd give you a headache.
Jeez.
Did you show the video yet?
Look at the snow they got
Yeah,
there.
I
Look,
just
so
showed-
much snow.
I just showed-
I was talking about the delay. Did Mitch see it?
I asked Mitch. It was over his flight path. It was over the flight path was over.
Mitch!
It was over Colorado.
Check your roof. Make sure you didn't lose any
check your
holes
roof.
in your roof. Go check your roof. Get your ladder out, Mitch.
Oh man.
All right. Anyway, everybody's fine, so we can laugh
Okay,
about it. 'cause
yeah,
everybody's
yeah,
fine, right?
Yeah. Okay. So everyone's
We're all
fine.
okay.
So,
Yeah, be careful.
it was a Boeing plane. The part was made by Pratt and Whitney. That's the engine, and that is a Raytheon company. So Boeing and RTX both trading down this morning in reaction to this over the weekend.
You know what? The Boeing the reopening trade is on. I think they buy the dip on Boeing. I know I don't like seeing planes on fire either. And is this going to bring up more concerns? Was this a Max? I hope it wasn't a Max.
No, it was not. No, it was a 777.
Okay, so a little wing caught, a little flame. That landed. Everybody's
right,
okay.
Exactly. The planes were meant to withstand this. It did. It landed. We can.
Yeah.
I think they have like a built-in like fire extinguisher and like spots.
We can laugh about it.
Do we have a second for some stupid Joel trivia?
Yeah, yes. We always do.
Who made the cotton gin?
Eli Whitney.
Okay, there you go.
Wait, that was it?
Yep.
I didn't know.
That's got nothing to do with anything we're talking about.
What are you talking about? He was working on that engine, Pratt and Whitney.
Oh, is that where the name comes from?
I don't know.
Oh, I know nothing. I don't even know what you guys are talking about. I'm completely lost now. I was going to say, Boeing, I kind of want to buy the dip on this.
Oh, go ahead.
I know. It's scary to buy the dip when you're buying stocks when their wings were on fire. But at 208, you got a level to lean on there. 208. And you know what's holding up in the pre-market too? I'm going to say that level holds. I kind of want to buy the dip on this. I kind of like Boeing.
All right, let me look at the chart.
I like it here. It's down I don't own it. 3%. I kind of want to own it because the reopening trade's back on. You know what? We're going to start.
Are we going to need
as
many planes? It's going to take a long time.
Yeah, I don't know.
Planes.
Business travel.
It seems like they got something going on. It seems like they got something on fire. They
haven't had a good couple of years here, Joel. We're not gonna. First they had the planes that are crashing, and now they got and then they had COVID. Now they got wings on fire. But you know what? I don't mind the chart, and I think the reopening trade's on. I think people are looking at this saying, "I've been wanting to get Boeing. Here's a little dip." I think people will be buying the dip on Boeing. I kind of like it.
They kind of did already. They kind of did already. I mean, you did. On the initial news, you did get a little dip to, what was that, 207 maybe? 207.22. Do you have anything on the dailies? I don't know. This is what I don't, well, you haven't broken down here yet. So I'll give you this, Dennis. You got all these lows right here in this area. Where's that come in? 2.9, 2.10? Oh, that's a little bit, 2.7. 2.7 to 2.10. That's real good support. You're nowhere near that. So it's not as bad a news as everyone thinks. If you're buying it here, be prepared to buy maybe more at 207, 208.
I kind of like it.
Good. Go for it.
All right. So Dennis is at his computer last night. He's doing some trading. He sees a headline.
What's
Starboard Value
is
going to merge with Xterra. And what does he say to himself?
Show me the money!
Show me the money.
Not really. It's not up enough.
Not really. Not really.
Wrong day. Why did they hold the headline? I mean, here is one thing. When you got an earnings report and it's scheduled, you got to report the earnings. But if you've got a deal, and, I mean, the rumors were out last night, but they officially reported this morning. You see the futures down 35. Hold the headline because you're not going to get people rushing in to say, oh, yeah, I love this deal. People are rushing out of stocks today. It's the wrong day to report a deal. The other one, too. What's the other one? NSTB. I own them both. And you know what? I kind of like the NSTB deal better than this one.
This one's very interesting.
Yeah, Apex Clearing. I mean, you got digital and the current. You got digital currencies in there.
Apex Clearing, as far as I understand, is the clearing firm of choice for the vast majority of these retail trading platforms. Right? I know. They don't use Robinhood is its own clearing, so they don't use Robinhood, but they're the clearing firm for Webull. They're the clearing firm for Gatsby. I think they clear for TD Ameritrade as well. If you want to place a bet on the retail trader, NSTB/Apex Clearing is maybe the way to go.
Yeah, and then it's got crypto too, right?
Yeah. Yep.
So I mean, you get a little bit of everything. I kind of like it. I think it's kind of sexy, but you know what? Wrong day. Won't report these deals on these days. We're down 35 points. Crypto's in a mess right now here this morning. So, I don't know. I wish they would have held the headline for an extra day. I kind of like the deal. I'm in them both. I don't know. I'll have to reevaluate. I sold some of the SVAC early this morning. Got up to 13. I got out a part of it up to 12.75, I think. Just because
that's not sexy for a SPAC. Don't they?
Well, yeah,
usually,
but you didn't think Starboard wasn't targeting crypto. They weren't targeting EV.
No,
it's
Joe-
actually a company that's making money. Did you see this? They got $680 million in revenue. That company they bought.
Joel, you want not
co-location?
sexy? I'll tell you not sexy.
What's not sexy?
FAII is a SPAC. They're merging or they're buying ATI Physical Therapy.
Boy,
What
oh
is
boy.
that?
It's a physical therapy chain.
There
Yeah,
must
that's
not be a
sexy.
very
What
good
were they
one.
supposed to be buying? Did they know? Because it's down.
Yeah, because it's not
12%.
sexy. That's what I'm saying.
That
Yeah.
chart's hurting.
That's what I'm
Well,
saying.
the chart's hurt now. That's all of a sudden they're buying something. Is that official or rumor?
I think it's official.
I hope someone got that in the chat because you guys didn't get it. They're buying a
That one's
physical
hurting.
therapy
We get
place.
it. We get it.
I didn't even hear what he said.
He said it's hurting.
Oh. Yeah, here, Joel.
We got all these sound effects.
Yeah, man.
We're like,
All
it's
right.
like CNBC all of a sudden.
That's what I spent my weekend doing. I don't know about you all, but that's what I spent my
it's
weekend
kind of
doing.
fun. I like the sound
FAII, that
effects.
deal is official.
All right.
So.
So they don't like that one either. So I
Yeah.
don't
That's
know
bad.
if I've traded this one. Fortress Value Acquisition. I own a bunch, but I don't even know if I own this one. I don't think so, but
Hopefully
I
not.
hope not. I hope not. But anyways, this is one of those days where if you're reporting deals, they ain't giving any forgiveness on anything today. So I know it's a Monday. Maybe they like to report these things. Again, I'll just say to the SPACs out there, if you're running a SPAC and you got a headline that you want to announce a deal, you see the futures down 35, hold the headline till the day the futures are up 35. You'll get rewarded better. So that's my tip to the SPACs.
Is that your based on your marketing and public relations
Yeah, sure.
education?
Well, I don't know. Why do you want to
agree
report
with
a deal with down 35 handles? This is
Man,
not the
these-
day to report a deal.
I tell you, silver and gold are hopping here, man. And they're trading up a storm here, and they're both trading green. Gold a little bit better, but man, they're hopping. Gold trying to get back into the
Like
1800 handle.
defense. Market playing defense.
Yeah.
Well,
Yep.
I mean, Bitcoin's off. That's good for.
Where's
They
Bitcoin?
had me shaking last week. They had me
Wh- wh-
shaking in the gold.
Where's
Gold
Bitcoin?
market.
Not where it
Yeah.
was last night. I'll tell you that.
Where is it now?
The futures are at 53,000. They're at almost 58,000.
Oh, so we're
last
leaking
night.
here. It's risk off. It's risk off Monday.
You know what? And I don't want anybody complaining to me that's long Tesla because I gave you guys plenty of warning in Tesla about that 780 level. So if anybody's stuck long Tesla, I don't want to hear
Just
about
cut through it, eh?
it. Yeah.
It's
Yeah.
sitting here hanging. There, you know what? The tech all doesn't look healthy. That's why it's hard to just come in here and say I'm going to load up tech. Because, like, obviously a lot of us have a lot of tech. I have a lot of tech as well. But coming in here and saying I want to get a margin, I want to be buying tech. I mean, the dips have been rewarded. Maybe it's the play, but the charts on a lot of these aren't healthy looking
They were bad
anymore.
before.
Well, they've stopped going up. I mean, that chart on Tesla. I mean, we've been in this uptrend, relentless uptrend for a long time. This could be consolidation to just go higher, but you got a nosebleed valuation, and you got a lot of people sitting on a lot of profits. So maybe it's time to shake us out to like the 600 level. Maybe that's time. It would still be way the hell up from 600 isn't absurd to think about on Tesla. I mean, that's where it was in December. So, but that's 160 points down from where it is now. So it's not absurd to think that you could get a pullback into that area. Do you get bearish Tesla, start shorting it here? It's tough. It's tough to short stocks. They just find a way to
Tough
bounce
to short
back.
this one. But
Yeah.
I don't know where it's going on the downside, but I know that it has absolutely no chance of upside until it gets back over 780.
There you go.
So I'm not.
Why be a hero trying to buy them when they're going down? This is what I've done wrong a lot of times, in my swing trading, my long-term investing, is you're trying to catch the falling knife. You're saying, okay, it's a big enough dip, it's going to come back. And in a bull market, all the buys work. You're not being, it's not maybe that you're trading well. It's just that all the buys work in a bull market. You get into a little bit of a sustained bear market or a good correction there, and then that stuff's not going to work as well. So it's been the environment where buy the dip has just worked on everything. I don't know. Like right now, I'm just a little bit concerned. Again, though, going back to the original thoughts, if you think hyperinflation's coming, then you probably are buying the dip on stocks because they probably continue to inflate.
I don't even know where you draw a meaningful retracement here in Tesla. I mean, because you had 400 maybe, 400 and 900. That's easy. 650 that would come in if you want to do a 50% off. That was at the that was the split move, right? when it blasted off of
Yeah.
400.
Yeah.
All right, we'll
The
keep an eye
400
on
to
it.
600 was the split, and then they split. We know, and that was the S&P ad. No, that was the S&P
Oh, that's right.
ad.
That's right.
400
Right.
to 600, and then 695, and I was like, man, that seemed high at that time. 695 seemed absurd, and then it pulled back, and I was like, maybe the high is in. Well, here we are 10 days later, and it took it out and kept going higher from 700 to 900. But you come down to 700 or 6, like if you think you're buying Tesla on the cheap at 759, you're not. You're not at all. So you just got to, if you're buying it here, you're just saying the bull market's continuing higher, and Tesla's going to be a big part of that. I
Real
can't
quick,
argue with that. It could happen. But
Sid-
Tesla's so nosebleed. I got burned in 1999. Tesla will not ever, at these prices, go on my long-term portfolio. Never. It
When
wouldn't
did
go
you
in
get
at 400, 500, 600. I mean, I've been wrong the whole time. I'm not putting it at 759. So
Sold puts once.
yeah, those were good. Well, I've traded it. I trade Tesla all the time. You know, day trade it, swing trade it a little bit. Just in my long-term investment account, like people saying I'm going to put Tesla away here at 759. It's tough. I mean, and when I put something in my long-term investment portfolio, I need the fundies too. I don't put stuff in my long-term investment portfolio that's trading, you know, like at ridiculous levels, because I did that back in 1999. And I watched, you know, stocks fall 80, 90%. And could that happen again? It could. Now, is Tesla going to do that? I don't know. It's such a storied stock. It's hard to be bearish the stock, but I'm not coming in here and investing in it at 759.
I want to. Well, first of all, we have a sliver of that in one portfolio. I would like to get rid of it.
You wanted to get rid of it. Lisa's held you in there. You wanted to get rid of that for the last 400 points.
I think 350 pre-split or something like
350 pre-split. Joel, like, I ain't out of this.
Gotta
Lisa
get
went
out
at
of
you.
this
We
thing.
follow Lisa. Lisa knows. She's
yeah.
good at trading these bull markets.
Anyway, real quick, Sid Stead, I doubt that's your real name. He's asking what I look at for my indicators for the market going up and down. It's the futures. It's not the S&P cash, because the S&P cash is, I got it up there. That's not open. It just trades from 9:30 to 4. So it's meaningless. I watch the March futures, and the symbol for that is H right now. I'm not sure what platform you're on. If you're on TradeStation, it's at ES. A lot of it is, at. And then I also watch the day session. And we are coming into a rollover. We got a little bit of time, but we're coming into that March futures expiration too. But that's a little ways away. 8:32. I've done a couple tangents there, Spencer.
Yeah, that's
so
okay.
That's
do you have
all right.
do you have a tangent soundboard? Like when you want to rein us in, maybe like a horse sound or something.
No, yeah, it's a work in progress. I've got a few other sounds here, but nothing that's appropriate for a tangent, I think.
Okay. All right. Let's.
I don't
What do we
know.
want to do? We got 2 minutes before we bring on the great Tim Quast.
I mean, you're on the dip here. Is there anything you guys are eyeing to buy on the dip?
I don't know. No.
Like I said, I like the Boeing on the dip. It's the only thing I like on the dip today is actually the plane that was on fire. So,
You know what's not down today, but the chart would say it is Fizz. Just PSA. National Beverage had a special dividend. They called it a 1-for-1 split.
Yeah, that's
But
weird.
they paid it out in the form of a dividend, so it's down
oh,
50%, but it's not down.
it's actually up.
It's actually up.
But-
right.
What is?
So
They must have announced that when it was near 100 or something.
yeah, they announced it a couple weeks
Okay.
ago.
That's a
Yeah.
weird thing. Fago.
Right.
Fago Red Pop.
Is that what they have? Do they have Fago? Do they
Yeah,
own Fago? I didn't know that.
I believe so.
I loved Fago. The grape one was the best one.
Anyway, all right. Smash that like button if you haven't already. Hit like, hit subscribe, hit share. Do all that
I'm
good stuff.
unliking this market right now, though. I'll tell you that. So I don't know. Do you think I would do is bounce back? I mean, that's what this market does. It's hard to just come in here and sell in the hole too. So do you get another shot? Probably.
Or we've hit a major long-term top, and we're going to be heading down.
well, one day that will happen.
Yeah.
One day that will happen.
I mean, you had the. We're still up huge for the year. So how can you get spooked, right? I mean, we're not even at February levels. I mean, come on. This is. I don't know if this is a buy the dip, but this is certainly nothing that's sounding alarm patterns yet.
Yeah, we're way too early to be all bearish here.
3,700.
I sold hardly nothing on my long-term portfolio, so we'll say that. In the
All
last little while, I'm still sticking, not fully bullish though, but stay diversified. It'll be okay.
We will do
Hopefully.
tickers.
Hopefully.
We will do ticker time after our guest, but I want to bring him on right now. Tim Quast. He is the founder and CEO of Market Structure Edge. Joins us every Monday for Market Structure Monday. Tim, how we doing?
I need to make that my ringtone on my phone.
It's such a good
Well,
beat.
thank you, Spencer. Good to see you. Joel, Dennis, you guys look happy.
Not really. We hide it well.
We're never
I'm
happy.
really sad inside.
Never
Well,
happy.
well, I was listening to your comments there in the last couple of minutes, and Dennis, about your feelings on the state of the market.
Yeah.
Don't you think that the appearance of Representative Maxine Waters on CNBC to talk about market structure, that's got to be the signal of a market top, doesn't it? I mean, if you read the classic texts on market structure, what you will find is history has shown that if Maxine Waters is on CNBC, on Squawk on the Street, that you should hedge for downside risk. I believe that's what it
That would have been a good thing to know last week. Tim, but it's all seriousness. Jump into your indicators and let's take a look here, because we can give you some specific stocks. But what are your thoughts on the market overall? I mean, we've had a good run. Do we need some cooling off?
Well, we certainly have, and it's been a good run on the ski slope in Steamboat Springs, by the way, too, because ever since the market.
Can we just? I always want to interrupt you, Tim. You're coming in and out. Your mic's coming in and out.
Are you wearing like a clip-on mic or something?
I am.
Yeah,
I am.
Are you on the ski slope right now?
We hear you and then we don't. We hear you then.
No, he's wearing a good mic.
It's
It's the positioning is janky. So just
is that what? Okay, did that improve it?
Just don't
Yeah.
move, just don't move a lot.
Okay. So before I answer your question, I was going to say, for those who like to ski, so ever since the market bottomed, which was, I think, the last Friday of January, and I was in the Caribbean, since that time we have had 90 inches of snow in Steamboat. So for those of you who remember your elementary school math, that's 8.5 feet of snow. So then back to your question about the market and how we think about it. We always look at how the short-term supply and demand, we think of that as market sentiment, market structure sentiment. And it's not mass psychology, it's the supply and demand for stocks. And there are factors to consider behind that, but we always look at that and whether it's rising or falling into options expirations, which were Wednesday, Thursday, Friday last week. And market structure sentiment, as we measure it, it has peaked. It peaked on the 18th. Today we have new options trading. If you go back a year, you'll remember that February 24th marked the beginning of the great and brief pandemic correction. And that was the day that new options were trading. And heading into that, demand for them fell 5%. And so that was an immediate indication of risk in the marketplace. And we look at the amount of trading volume that comes from what we describe as risk management. Those are trades tied to derivatives. And believe it or not, they're 18% of the market. So if you have a sudden deterioration in the belief of future prices for things like low volatility trades or options or futures, 18% of the market cap can vanish. We don't see that here. There has been a decline, however. There was about a 0.5% decline in demand for options. And then Friday is a big futures contract expiration.
In the month.
Exactly, used by trillions of dollars of passive money to true up tracking. And I think there are a lot of tracking errors in the market. So if you put this whole soup together, what do we think? Well, I think it's going to be very difficult short term for the market to reach new highs because of those factors. We'll see. I'm wrong at least half the time.
but 50% of the time, it works every time.
Right. The good news is that market structure sentiment is very reliable. I mean, it's prices are volatile and sentiment is not. That's the good news. So.
Okay, we're going to jump into specific stocks then too. Can you do some specific stocks and jump into your indicators?
Yeah,
We've been talking Tesla all morning. I want to get what your thoughts here, looking at your indicators here with Tesla, because stock has just been kind of hanging out here for a month, leaking slowly. Now we're down $20. It's taken out the lows of the move. Joel's been concerned about the 780 level. We're piercing through that this morning. What are your thoughts here on TSLA?
So let's add that, and there's another thing that Spencer, I was thinking about after you and I traded notes that I want to talk about, because this idea of short squeezes has really dominated the discussion. So I'm going to add Tesla here. By the way, traders, you can go to Market Structure Edge and do exactly what I am doing for free. Just go try it. You don't need a credit card or anything. You can set up a portfolio and do exactly what I'm doing here. I added Tesla to this portfolio, and I just want to go look at sentiment. Notice it's 1.8. So here's Tesla. Market structure sentiment is 1.8. It's a 10-point scale. So it's way below 5. If it's above 5, it rises. If it's below 5, it doesn't. And it's very statistically and significantly true. So, and the sentiment trend is down, and it's 56% short. So if you want to buy Tesla, you want these things to be the opposite. You want this to be up, and you want this number to be below half of the trading volume. So, and you can see these things coming. So if you look at the sentiment, here's where you should have left. Right here, when the sentiment begins to decline and short volume rises above trend, just leave. You may miss a little higher low here, but you're going to avoid all that volatility. And look,
what day was that?
This would be, so the optimal time would have been about the 20, let's see here, what is that date?
Looks like
right
20th?
here.
22nd.
The 22nd of January.
Right.
And just leave right there, and then just wait for these conditions to improve, and then you can come back. When this line, this is sentiment and it's not volatile, this is price is volatile, wait for this line to begin rising and this line to begin to revert to the trend, and you will get gains. You know, there's always an exception to the rule, but that is the rule, and the rule is very reliable.
Yeah, so you're looking here, it doesn't seem to be the time to buy the dip on Tesla right now if you're looking at this.
Exactly. And the same would be true for cannabis stocks, something that everybody has been fascinated with. They're not, there are not many of them, and they're a tough group because they don't represent a lot of market structure, or market capitalization rather. But if you look at that group, you can create a portfolio and look at them, you'll see that the trend in all of them is down, and short volume in half of them is over 50%. Anyway, so Spencer, I wanted to point this out, if I may. So this idea of very high short volume, you can screen for that in Edge, and the point isn't to highlight what all you can do with Edge, but I just wanted to note this, that if you're in a portfolio and you want to go screen for things that have very high short volume, that different from short interest, you can do that, or very low. I just put a little query in here because I wanted to see what stuff is the most shorted in the entire market from a volume perspective, and it's Oyster Point Pharma and PROS Holding. They're 86% short. So the likelihood, if you were selling options, you would want to sell calls on those, because it's very likely that you would keep the premium. Those are very unlikely to post gains so long as those conditions exist.
Yeah, it's kind of the opposite of thinking, because people are looking at a short interest and they're jumping in saying, oh, this could squeeze, where you're looking at, from a different perspective here is the opposite, that these could actually continue to show weakness, because you're not looking at short interest here, you're looking at short volume.
Hey, can I hop in for a second here, Tim?
Absolutely, Joe.
We're getting some questions here about time perspective on these trades, and I think that's one thing that we got to do a better job of figuring out. What are people's time perspectives here? Right. Things. So talk. When you try and quantify or qualify day trading long term. I know I can just tell when you're talking. You're not talking about day trading, but just for our listeners, please.
I think of the approach that market structure offers as medium frequency trading. So high frequency traders would say they have an investment horizon of a day or less. And Dennis, you probably do too, but you're an expert, right? You're capable of doing things that maybe the average individual can't. So the hardest thing is to know, when do you come and go? What are your entries and exits? Yeah. And in medium frequency trading, you should keep in mind that you have about a 10-day window. That's it. You have 10 days to enter and exit. But if you do that consistently and you make 3 or 4%, do the math on that.
Yeah.
You will make 75, 100%. That's a very, very good return. And I think the firm that taught us that short-termism, and I realize it defies the Benjamin Graham classic fundamental value investment thesis, but the rules that govern trading today make this true. That the firm that taught us this is Renaissance Technologies. They perfected the art of medium frequency trading, short-term trades, and I think that suits the market that we have today.
Yeah, that's a great point here.
Did you
What
read
happens
that
if they
book
put
yet,
this
Dennis?
financial transaction tax on?
Oh,
Because we were
Right.
looking at stats on the weekend. I had a weekend talking about a lot. We're going to have Bill Hertz talk on it tomorrow, but
Good.
obviously Tim Quast knows this stuff too. So I want to get your thoughts here as well, Tim. Just on, we had it brought up in the hearing last week. I mean, there is this, thought process that, hey, we need to curb this speculation. Let's stick a financial transaction tax and curb the speculation. Obviously, I've argued I think it does the opposite. I don't think it curbs speculation. I think it hurts liquidity. But, let's get your thoughts here.
Well, it's ironic to me that Congress would entertain a notion of taxing the structure they created, right? The national market system exists because Congress added the national market system amendments to the Securities Acts of 1933 and 34 as amended in 1975. And the wheels of bureaucracy spin ponderously, and it took a long time for regulators to get around to crafting that marketplace. But there are 2-3 key things here. Number one, that is why we have a national market system that wants 100 shares to buy and 100 shares to sell all the time. It is impossible for any market to always have a supply of product. If you go to the grocery store and you head to the fresh produce area and there's no spinach, the grocery store cannot manufacture spinach so that you have some. There's none to buy. But the stock market does. And the regulators created that. The regulators gave market makers an exemption from the locate rules that the rest of us have to follow if we're shorting stocks. And so most of the time, the offer to sell is coming from manufactured stock. So that's necessarily going to speed up the process and create immense amounts of volume because prices will change all the time. So then for Congress to create this structure to try to ensure that there's always something to buy and sell and then tax it to boot is like telling everybody to stand up and then penalizing anyone who isn't sitting down. It's but will they do it? Well, yes. It reminds one of the line by Mark Twain, who said, "Suppose I was an idiot, and suppose I was a member of Congress, but I repeat myself." Not that I. It's a good line. So will they do something like that? I will hope that the regulators who know, the members of the SEC, they're not unintelligent individuals.
Yeah,
they know that
they understand market structure.
do. Section 31 fees fund the SEC. If we add something else to it, not only will we create, as you said, Dennis, a market that doesn't have the supply that the whole market now depends on, like it or not, this is the way that the market works, but we will probably damage the SEC's ability to fund itself. If volumes fall, it will have to raise those Section 31 fees, and they just cut them, as we talked about a couple of weeks ago.
Well, they cut them from $22 per million to $5.10 per million.
Right.
So to put that in perspective, what's being proposed? What's 0.1%? So right now the SEC is funded on the $5.10 per million. 0.1% is $1,000 per million. So you're talking about increasing it 200 times. 200 times. It's not like, let's double it. No, let's increase it 200 times.
Yeah.
And the SECs are only on the sells.
Right.
The 0.1% they were proposing on the buy and the sell. So then it would be 400 times higher.
Exactly.
It's insane.
And so then what would Ken Griffin and Citadel, which is routinely almost 50% of all market volume and the consumer of 90+% of retail order flow from the 60 million online accounts that exist at the big firms, what would they do? Do you think that they're just going to absorb that and continue to to pay that kind of fee? No, either the cost of your trade, retail traders, is suddenly going to return, because it will not be possible for Citadel to afford to buy those orders if the cost of trading goes up 200
Spreads
times.
are going to go boom.
Exactly. Yep. So
They
I
pass
hope,
through.
cool.
Either way, Main
Right.
Street pays.
Exactly right. Yeah. There is no free lunch.
No, we see that.
Yeah.
So, okay, last thoughts, Tim. I mean, we look here and
Yeah, market thoughts, overall.
Yeah,
market.
back to the market thoughts. I mean, we kind of
Right.
started with this, but maybe we should finish with it as well. Or maybe you should go talk. What's on your mind? I mean, we didn't ask you what's on your mind here, so we're
well-
throwing in questions. What's on Tim Quast's mind?
You know, that so to that point, we use what's called, we call it broad market sentiment as our manage overall risk strategy. And generally and what you see on the screen here, I'm going to back this up 6 months. So the wobbly line is SPY. So it's the S&P 500 ETF. And then the smooth line is market structure sentiment for the S&P 500. We're not taking the index, but we're taking the 500 stocks that comprise it, and we average that data. And so it is very consistently true that when that line is, when market structure sentiment is over the red line, the market stops rising. It doesn't always mean it will fall. And when sentiment goes below the green line, the market rises. Well, where is it now? Well, it's way over the red line. So from a broad risk management perspective, short term, we would tell people, you want to cut back your exposure in the market until this line bottoms and begins rising again. So how long will that take? About 10 days. That's what we think at present.
Huh. So not buy the dip. No, I mean, it's
Not buy
good
the
to
dip
look
on
at
day
the-
one.
Yeah, exactly. That's right.
This is the only entry point the market has really given it full scale, where you can say, oh, I'm shoving all of my chips in. We almost had one at the end of January. Got all the way to that green line, and it would tell us that stocks are going to rise. But now there is clear risk, at least for 10 days, just for 10 days, that the market is really going to struggle to rise and probably pulls back. And so you want to avoid that. That's our view.
All right, Tim Quast is the founder and CEO of Market Structure Edge. Also, Modern IR joins us every Monday for Market Structure Mondays. Tim, we're getting a lot of people in the chat, or maybe it's the same person, I don't know, who keeps saying that you look like Tim Allen. So Tim Allen, who runs a Market Structure website.
Really? Not the guy from Home and what was it? Home and
Yeah, that's the
Yeah.
guy.
Is
Did
it?
you get that?
Yeah,
Is it?
yeah. That's what he's saying. You look like.
So
So I guess that's a compliment.
Yeah, well, he's saying I'm getting old. That's because Tim Allen and I are both getting old.
Maybe. All right,
He's
Tim.
a Detroit. He's a Detroit guy. Isn't
Yeah,
he?
Oh,
he's
well,
a
there you
Michigan
go.
guy.
Yeah. Well, he's
All
got
right.
to be a good fella.
Tim, thanks a lot. We
to see
appreciate
you
your
guys.
time as always.
Thanks,
Talk
Tim.
again.
Thanks, Tim.
All right. Hat tip to Richard Judge, who just dropped us a 50 spot. Actually, no,
Nice.
it was $49.99.
Nice.
Yeah.
We're going retail prices here.
Yeah.
But thanks
to
a
make it
lot,
look a little smaller than the tip.
Richard Judge. We appreciate that. Thank you
Yeah,
so
we love
much.
tips.
Also, we
No,
got
Ring
no
the tip bell. We need the tip for your sound
No
effects.
Bitcoin.
Ding, ding.
It was
Ding,
dollars. It's not. It's
no.
dollars, not Bitcoin.
it's not in Bitcoin, Joel, but we do have
We like
26
dollars.
2,600 people watching the stream right now, and only 300 likes. We gotta get that like number up, guys.
Oh,
All
maybe
right,
they
I
like
just
it.
liked
Button.
you. I liked
Come
our
on.
show. I
Yeah,
did
you-
it. I liked our own.
You know what?
show.
Let's talk. Let's talk. Well, we've gone 54 minutes and we haven't mentioned who Dennis has his biggest crush on.
Uh-oh. I don't know.
Kathy
who that
Wood.
would be.
Kathy
I didn't
Wood.
talk Kathy.
Yeah, well,
Yeah.
let's
You know
see.
what? On the down days, Kathy's stocks don't work that well. All right, so she did do some buying on Friday night, or
did.
Friday day, and announced Friday night. Intuit. I'll go
Yeah.
through the list. I have it in front of me.
Okay.
PayPal, and this is all getting hammered this morning because tech is off this morning, so she's not getting rewarded for these buys. Viva Systems, VEEV. Small one, that might be up. Oh, yeah, it is up slightly because of Kathy. The small ones still get a lift. CMLF, slight lift in that one. EXAS is down $3. It's not helping there. We got
I own that.
SGFY.
I own that.
Do you?
Yep.
Tesla. She bought some more Tesla. Not helping there. She bought some U. She bought some Beam. She bought some TXG. VU Zebra I.
That's up.
That's a big one. Okay, there's one. Has she bought that one
Lizzie.
before?
Yeah. She's bought it before. Let me
It's up
scroll.
17%. She's already bought it once. Holy!
Let me scroll on Benzinga Pro.
Is there
'cause
other
we
news on
post
that?
it every day. You know what? Maybe not.
It might be a new one. When she
Maybe.
buys something for the first time and it's small, they really get a pop. They're like, "Oh, Kathy likes it. I like it now too."
Yeah, you know,
So-
because we post her buys every day in Pro, and I don't see Vuzi.
That's why it's up 17%. It's a new Kathy buy. So we
Yeah.
should start talking. There's a big difference between Kathy buy and new Kathy buy. And there's a big difference if she's a new Kathy buy on something big versus something small. This is something small, new Kathy buy, 17% pop.
Yep.
Yeah.
Did she sell any Palantir?
Don't actually know.
Now that if she starts doing that, that's interesting.
Yeah, no, I was just wondering because that was my stock of the day.
It's
Friday.
up again $1, and I
Yeah.
had this. I thought it was. I thought 27 was overdone.
Yeah, yep.
30. It's still, yeah, Kathy gets behind it. 5 million shares. They can't stop buying. So the 25 level worked. I thought 27 was good. 25 to 27. No, it's going to 30. I actually thought you maybe even have a shorting opportunity that it could give it back. Not the
Yeah,
case.
good
so.
thing you later. Good thing you weren't trading intraday on that one.
No.
No,
Bad call on
this
that
one, I gotta pat myself on the back on this one. Came down to that 25 area, then she backed up the truck, and then it got the pop, and it just kept on going. But this is what you want to look for here, folks. You got a gap fill. If that was from earnings, so it wasn't treated well on earnings, this is one I want to see. I want to see this go up to 31.34, fill that gap, and then hold in there and see what it does. So I'd be interested to see if you get the gap fill, also the 50 retrace 50% of this move, which was definitely a good move. That comes in. Ooh, that's higher. That comes in over 35. So maybe we'll get a gap fill there, 31.34, and then keep on going. But nice technical trading there by Kathy on PLTR.
All right, 8:57. I'm going to have Eric Bartunas from Bloomberg on in a couple of minutes, but let's do some tickers from the chat. Well, Palantir was a ticker from the chat.
Of course, everyone wants to talk about
30 is
wants to talk
big. I mean, this
Palantir.
30 level is just the level.
Yeah, that was a high on
it's
Friday.
huge.
Yep.
Yep, and
Yep.
it's right here again. It's a big level. Can it take
Wait,
out
I'm
30?
sorry. Did you say it's a huge level?
Yeah. Is there a sound
Huge
effect?
level.
He's got the what is the
Huge
soundboard?
level.
Dentist soundboard now.
I have some for
It's a
Joel too.
huge level.
I have some
Gosh,
for
man, you're almost making me want to come in the office now.
Huge level.
You know what's
Got the
shameful?
Dentist soundboard going.
You know what's shameful is, and this is entirely Luke's fault, but the show that I pulled that from is 5 years old.
How do you have the patience to listen to that?
I was listening to shows from February of 2016.
Wow.
Oh, jeez.
Man, we were
This is
terrible
all
back
Luke
then.
Jacoby's fault.
We're still terrible, but
Were we
way
on
worse back
Skype or
then.
something?
all
there
Luke
back then?
Jacoby's fault.
Uvu.
You know, we should do a show on all the different platforms we've been on.
There's been a lot of there's a lot of bad shows if you go and look at it. They're all up there. They're all up there somewhere on YouTube, I think. But
All I know is after listening to 5-year-old shows this weekend, I had one conclusion, and that was
These guys are smart.
oh, he's
okay?
got another sound effect.
that was it.
Oh, that was the sound effect.
That was
was-
me.
that
That
was-
was me.
Perfect. That was it. You want to do it again?
Yeah.
Yes. These guys are smart. Okay. That's our chat. That's our chat. I was talking about the
The chat
afternoon,
is smart. We have
the
the
afternoon
smartest chat.
chat.
We have the smartest chat.
Anyway,
All right, let's get another
We get so
stock
many good
then.
stocks from these guys.
All right,
Guys and girls in the chat.
Chat coming
I don't
through.
think there's many girls.
There's some. There's quite a few in there. There's quite a
Alright,
few.
thanks. Okay, let's do a couple more tickers from the chat before we bring on Eric Bartunas from Bloomberg. Givo gets thrown in there every day. I mean, Rocket
talk
same
about it.
Rocket same thing. Gets thrown in there every day. Oh, man.
Rocket just can't get off the floor. 20 support. It's at support, but I mean, it's been in the gutters.
Now
so
we
it's
know
tough.
why Rocket's not going up. It's because of
Because that
rates.
UWMC one, right?
It's because of rates. It's
Rates
because
aren't
people are
helping.
worried about rates. And you know what I think? This Redfin, are they getting into finance? I thought Rocket did a deal with them. Or was that with Zillow? I don't know. I can't figure it out. If it's rates, but these stocks are really taken off. I don't know. We'll see. It's not going anywhere.
Okay,
though.
let's go 3 stocks next 3 minutes, and I got to go.
Oh man.
Wait, we don't got 3 minutes because we got a guy coming on from
Well, he can wait.
Bloomberg.
Okay,
Apple. Let's go.
Apple.
It's broken. The
I've been
chart's
talking
broken right now.
126, 127. I've been
Yeah.
talking about that for a month.
Yeah, I don't like the chart right now. I'm long at those stuff.
Oh, this is big support here. Don't
Yeah.
take this out, baby.
Not liking the chart. I
126.
think you wait on Apple if you're looking to get in.
CCIV guys, we discussed that like an hour ago.
It's a SPAC talk.
Go back.
They announced we don't know if they've officially announced the deal yet.
No, it's supposed to be tomorrow. it says.
Oh my lord!
Was it
I don't know
Reuters
what
or
to do.
Bloomberg? I'm not
Absolutely don't know what to do with this stock. 65 all-time high.
Oh man, Cisco. What do you want? Cisco? Wow. Okay.
Boys are boring. Cisco. I don't like Cisco either. Next. I don't like it as a stock. I don't like it as a company.
That's fine. Okay. Consumer staples. KO. Coke.
Coke. Oh, you went to all the boring ones. I'm going to take over. It's boring too. All this stuff is. You know what? These kind of stocks, if we start to get a sell-off, could actually get some money into them. So they've been out of favor because we're all after the quick buck. The quick buck's not working right now. So today may not be a bad day to nibble for a day trades on staples. But, we'll see.
So someone that's backing up the truck at like 50, 80, but we backed away from there.
It's good value there. It's just been out of favor.
All right, Square has earnings tomorrow. Square.
Oh, Square. Let's see here.
And this will be the last one, and then I'm bringing Eric on.
If you want to sell it near the all-time high before the report, go ahead.
There you go. Not a bad call.
All right. My next guest, guys, I'm going to nerd out here for a moment. Eric Balchunas is, like, hands down, my favorite Twitter follow on financial Twitter. He is a senior ETF analyst at Bloomberg. Joining me now, Eric, welcome to the show. Thanks for coming on. It is seriously a pleasure to talk to you.
It's nice to be here. By the way, nice job on the Rocky. Are you in Philly?
No, you're in Philly.
I'm in Philly. No. That's why you see Rocky stuff all over the city, so I feel like I'm at home looking at you.
No. I listen. I listen to your podcast. I follow you on Twitter. I feel like I know you, even though I don't. This is awesome for me. Eric, you've been tweeting a lot about the Bitcoin ETF that debuted last week in Canada. Let's talk about that. Give us some stats. Put that in perspective, because the first day was pretty wild, wasn't it?
Yeah, I mean, wild is an understatement. We expected interest. Obviously, it's a Bitcoin ETF. But you have to understand, Canada is a very small market, and you can't really get this ETF unless you live there. I mean, there's some other ways to get it if you have a brokerage there, but largely this is going to be Canada investors. So we thought, okay, there'll probably be some interest, but it traded more than the most traded ETF in Canada. So it would be like a Bitcoin ETF launching here and trading more than SPY. That could never happen. I mean, normally a new launch is lucky to get, I don't know, we'll say 5 to 50 million in volume. And this thing traded about 250 million, and that's in Canada. So if you do the math, that's about $8 billion in trading. And the flows, which obviously there's nobody selling it at that point, so those are all buys. So that volume is just pure buy orders, and it did convert to almost $500 million in flows in 2 days, which again, translating to U.S. value would be, it's almost a $10 billion ETF in U.S. terms if you proportionally compare it to that market. And who knows if this is just a quick week of crazy buying and it settles down, I don't know. But those numbers are off the charts. For Canada, it blows away the biggest launch there ever, and it would have been a big deal here. And it just shows that if there's an ETF that comes out in the U.S., my God, it's going to just like, it'll be interesting how fast and how quick it gets to, say, $10 billion in assets. Could be a couple days.
Well, even though BTCC, that's the ticker, it trades in Canada, it does trade in both U.S. and Canadian dollars, right?
It does. So there's two tickers. So one's for USD, one's for Canada. The Canada one had the majority.
Okay.
The other thing that's interesting, by the way, is just if you look, there was another ETF approved called EBIT, the Evolve one, and it got approved where it launched 24 hours after the Purpose one. And I mean, it got like 1 million. I mean, it barely got any action. And that just shows you the importance of being first to market and why they've spent tens of millions probably in the U.S. with lawyers, SEC, working with the SEC, prospectuses to try to get out first. And now there's probably going to be about, 10-ish issuers who are jockeying to be the first one out here. And I don't know what the SEC is going to do. It's going to be very interesting to see who they pick, or if they approve all at once. I don't know.
Do you think this year is a reasonable time frame?
I do. We have seen a history of Canada being first. They're just more liberal, the regulators up there. And so time and time again, when Canada's first, like let's look at the last example, the marijuana ETF.
Yeah.
They let HMMJ out first. MJ came, I believe, about 8 months after that. And so we're going with about 8 months. Now, there's a lot of technical, legal details I won't get into where our regulatory guy thinks it'll be longer. But I just think once the SEC, like let's say this ETF starts rising and all of a sudden it's like one of the top 5 biggest ETFs in Canada, which it could happen in like 2 weeks. That's how fast this is moving. I think they're just going to, the issue will be forced, and all that stuff they worried about in their rejections, they're just going to get over. And the market forces, they'll just be like, all right, and they'll tell the issuers, we're ready to do this. And all that time, it'll all just be sped up. That's my guess. But again, this is a wild guess. I don't know. So I'm guessing maybe late September if I had to pick.
All right. Deutsche Bank is upgrading the airline stocks this morning. Maybe they're watching what's happening with jets because you've been tweeting about this as well. It is an inflows machine, right? And then I also got the personal life indicator where somebody from my life called me this weekend and asked me whether like tell me, explain jets to me, explain the jets ETF to me. And I was like, oh boy. So tell us about jets. It is just an inflows monster, right?
Yeah, and compared to Cathie Wood, I heard you talking about Cathie Wood earlier. She's an inflow monster. Yeah. This is like a mini-me version of ARKK. I mean, we're talking $3 billion. But what's fascinating about Jets is it took the $3 billion in after falling 50%. So in March, April last year, normally these theme ETFs or these shiny objects, as we call them, only get money when the performance spikes.
Right.
This one was the opposite. They bought in. You can see that dip down. They bought in April, May. And remember, Dave Portnoy started to become, all over FinTwit, and he was like putting out videos saying, we fly in this country. And so Jets was basically being looked at as a proxy for the reopening or how overstated Fauci was being. And so it became like a way to stick it to the man. And so a lot of people were buying Jets probably too early, but ultimately they were right. And it's up 76% since May, which is when Buffett said he was selling. And the flows were very good. They took in 70 days straight of flows, which is the third most of any ETF all time, and the only non-Vanguard ETF in the top 10. So this was just I compared it to Linsanity when Jeremy Lin took over the country for a couple of weeks there. This is the equivalent of some bench player coming out and just like schooling Kobe. It just was like, wow, what's going on here? So that's why we gave it so much attention. Although it kind of like moderated a little bit in August and through October, November, and I started pulling back, and that's when Cathie Wood took over and ARK blew up, and so Jets kind of got moved to the back burner. But it's still an interesting story.
Wait, but so how are the flows now, though?
They're pretty good. Let me just pull up a chart real quick. I don't know if they've taken any. It was not as insane as it was back in the summer. Okay. Yeah, they're okay. They're coming in. They're just it's like $70 million, 2 million, 0, 0, 0, -5. It's more like normalized a little bit. Back then it was all inflows for 70 days straight, which is crazy. All
right. You mentioned ARK and Cathie Wood. Every day we talk about the stocks that she's adding, never the stocks that she's selling. God forbid the market care about that at all. But you're coming at this from an ETF perspective, ARKK, KW, KF, KG. What will stop this train?
It's a good question because, she kind of reminds me of the currency hedge craze of 2013. DXJ was the way to sort of go long Japan, but hedge out the currency, and it just crushed. And it built WisdomTree up, and the DXJ got to about $18 billion within about a year and a half. ARK has done that, but now it's surpassed it a little bit. But unlike DXJ and other ETF crazes that we've seen, Cathie Wood is a human being, and she has emotional connection with a lot of her investors. You guys talked earlier about, I love this, the Cathie buys versus Cathie new buys. Yeah. It's just there's actually apps now like about what she's buying, and you can buy merchandise. I mean, this is a different situation. It's almost like a DXJ meets the Rockstar portfolio manager of the 90s. And we haven't ever seen that kind of come together. So I would say that a long year, 12 months or more of bad performance where the drawdowns like 40% would probably knock out a bunch of the performance chasers who have come in. That said, I still think she has a core of fans who are going to be in here for a long time. And we saw evidence of that in March. In March, she was down 37% in a month. That's a pretty steep, quick drawdown. And she saw inflows almost every day. I mean, it was like Vanguardian in terms of just defying the move down. So I think some people at the first leg down are going to look at it as a buying opportunity. And so you're going to have a nice support. But if, I don't know, some crazy black swan event happens, it could be tough. The other thing that she's vulnerable to, in my opinion, is some kind of a regime change to small cap value, where if small caps and value start working, we actually looked at that. When that happens, she'll actually do worse than almost every single quadrant.
Well, hasn't that been the case though?
Well, right now everything's working. I'm just saying if like small cap value works and then growth and large caps actually start to severely lag, it would have to be more extreme than it is and for longer than it is. But every time we've seen this kind of move to value, it's always been very short-lived and weak. Yeah. And we'd have to see one where everybody's mind changes and it's not a head fake or some kind of false, I guess something that's just longer and more psychological for people in the market.
Do you have any insight as to who is buying or who owns the ARK funds? Is it mostly retail driven, like these flows? Is it hedge fund driven? Do you know?
Yeah. So if you look at her flows, I'd say on average, about 80% will be retail, and 20% will be advisors or even hedge funds. I did see one hedge fund on Twitter saying he's going to start to short ARKK, because don't forget, ETFs you can short. So now you can short a manager that you think is just too lucky or too good or whatever. So we're going to see a lot of volume in ARKK. That's what's interesting to me. There's a lot of flows coming in, sure, but the volume in ARKK, every day you look at the most traded ETFs, ARKK is in the top 10 now. It's up there with GLD, EEM, and that's people selling and there are some people shorting. And so it's going to be interesting to watch her ETF play out during a bad stretch. You may see some hedge funds try to come in and short. You've also seen some hedge funds, I think, what they're doing with ARK. You guys talked about the Kathy, you guys looking at the stocks she trades. They're probably going to start buying the stocks that are the least liquid that she owns the most of. That's where the flows would have the biggest impact, right? And then they may short the bigger stocks where the flows have the least impact in order to sort of like isolate, sort of like a market neutral capacity trade on the ARK ETF. So you may see hedge funds do some interesting things, because we looked at some of the stocks that ARK has owned, and before those flows came into ARK in like November to December, these stocks didn't trade that much. They all jumped by like 10 times in volume, and they stayed there, even though ARK has only made up a tiny fraction of that volume. So she's producing this crazy buying and speculation around any stock that she gets a large position in. So the ecosystem that she's creating around her is going to be interesting. And there's some people saying, this could be rough if there's outflows. It could be like a downward spiral instead of this upward spiral. And that's why this whole thing's so interesting. It's like watching someone on a high wire.
You had a good interview a couple months ago with the prior manager of the Janus 20 fund. It was kind of like the hot mutual fund of the .com bubble. And with that in mind, how sustainable is this?
So it's a good question. I was speaking with one of my colleagues, Dave Nadig, yesterday, and he was talking about this love we have of pattern recognition. Mm-hmm. Well, Janus went up, it went down. This is, the same thing's probably going to happen here. I mean, yeah, patterns are important, but who knows? If the Fed is just seen as having the markets back and refuses to let the market go down, maybe she could just keep going on for years. I don't know. I would have thought there would have been something by now, to be honest. But we've looked at some examples in the past, like Janus. We looked at the CMG or CGM, I forget which one it is. That was a focus fund in the early 2000s. That one also had a similar 900% gain, and then it crashed in 2008. So I just don't know. And that's why when I have friends text me about ARK, they're like, oh, should I buy ARKK? And I'm like, well, look, I wouldn't like replace your S&P 500 with it. Yeah. And I would also tell you, she's up 800-900%. So just know you're buying something that's already done that. And just warning people. But I would have said that, 80% ago too. So that's why I try to caveat that with, I just have no idea what's going to happen. But I will say there's a chance that if this sort of market continues and the Fed is seen as backstopping things, and there's just this, I don't know, like risk and fear is just removed for a while, It's possible that she builds like a new Janus. I mean, she could be like the premier active fund manager, because you have to understand a lot of the big old active shops that we know, Janus, Fidelity, a lot of their assets are mirage assets. They're just because the market went up. They've seen tons of outflows. Her assets are organic. They're all built sort of the hard way through getting new investors in. So she's built up a real legitimate active fund shop. The question is, again, if the sell-off happens, how many people will stay? But her growth is organic. Most every other active shops is market return asset growth that offsets and overcomes outflows, which is not organic and is not going to last as well, I think, in a sell-off.
On the topic of shorting, Kathy, or any ETF, couldn't that theoretically also help drive the ETF higher if they're receiving those loan payments, right? Those loans from shorting, from the short.
One more time, say it again.
On the topic of just shorting ETFs, if there's going to be a high short interest or whatever.
Yeah, I see. Okay, yeah.
Yeah.
Creates a lend, yeah. Yeah. So sometimes, like, remember when Trump was running and he was like bashing Mexico? And it looked like he might win. People started to borrow the Mexico ETF just to short it. And so we saw this sudden spike in flows into the Mexico ETF, even though it was going down. And it was possible we see that with Kathy. So my guess is if you see a downturn, it's possible she could see inflows for a while. But I think the downturn will overcome that. I think that's a temporary sort of cross current, but I don't think it will overwhelm a sell-off and overwhelm a mass exodus. But it is a good point and something that you could see that could look a little puzzling for a little while, but it wouldn't like overcome a massive sentiment change, I don't think.
All right, Eric Balchunas is a senior ETF analyst at Bloomberg. He's at Eric Balchunas on Twitter, a tremendous Twitter follow if you're into ETFs like I am. Eric, it's been a pleasure. Thank you so much for the time. We appreciate it.
Hey, thanks for having me. Have a good day.
All right. Yeah, guys, that was like the most fun I've had in a hot second right there. So thanks again to Eric. Tons of fun. Yeah, I may have been nerding out a little bit. I'm not going to lie to you. I may have been looking forward to that all weekend. So yeah, that was tons of fun. I will have to have Eric back. If you missed it on Friday, I had my debut. The first ever Benzinga ETF show was Friday at 2:30. It is up on YouTube. I had a conversation with Wilshire Phoenix. They had launched a new gold fund last week, so we talked about that. I'll be doing a week ETF show at the very least every Friday going forward. So you can look forward to that. I'll have to get Eric on that ETF show. We can have a more nuanced discussion about ETFs. And yeah, Doc and Dave, pretty nerdy. You're damn right. It's pretty nerdy. If 21-year-old me could see myself now, he would be blown the F away. But hey, that's where we are, right? ETFs are like the coolest thing ever. So, okay. 9:18, we're going to have Get Technical with Neil Hamilton on in about 11 or so minutes from now. I want to run through today's schedule real fast. Again, today's programming schedule is in the description of our YouTube video. We've got Get Technical with Neil Hamilton at 9:30. We've got Trading with Benzinga Pro at 10:30. A quick Newsdesk update at 10:45. SPAC Attack at 11. Today it's going to be Mitch and myself on SPAC Attack. Chris it had to take a day. He'll be back tomorrow, I'm told. But Mitch and myself on at SPAC Attack at 11 o'clock Eastern Time. Benzinga Nation Power Hour with Luke Jacoby, or I should say Hot Stocks Luke Jacoby and Jason Raznick at noon Eastern Time. Options Advantage with Mozzie Trades at 2 o'clock. Biotech Buzz with Vivi Biotech at 2:30. Pre-market prep at the close at 3:30. And then at 3 o'clock, we'll do some ticker time when we'll just sort of hang out. For that half hour. So then, of course, the Benzinga Pro Power Hour at 4 o'clock to wrap up the day. So a full day of programming to get to. Lots of news, lots of headlines. Let's just run through the headlines in the morning because I know we discussed a few of them, but there are others that we missed. Real quick on the ratings front, I mentioned Deutsche Bank. They are getting bullish. the airlines this morning. Deutsche Bank is upgrading Southwest Airlines to a buy, giving it $64 price target. They're upgrading UAL, what timing there, to a buy, giving it a $60 price target. Upgrading American to a buy, giving it a $23 price target. And upgrading Delta to a buy, giving it a $55 price target. Also upgrading Spirit to a buy, giving it a $44 price target. JetBlue gets a buy rating, $21 price target. And Alaska Air gets a buy at gets a $75 price target. Also, SkyWest gets a buy. Geez, they upgraded every airline. So SkyWest gets a buy, $65 PT there. So Deutsche Bank getting bullish airlines across the board. Wow. Okay. What timing on that? Because that was a United flight that had the emergency landing yesterday. So that was interesting. Okay. Yeah, just running through the headlines of the morning. We, of course, had Merger Monday today. Couple of deals, a tire deal and a bank deal. Goodyear Tire is buying Cooper Tires for comes out to $2.8 billion in cash and stock. And M&T Bank, ticker is MTB, is buying PBCT, People's United Financial. There, a couple of SPAC deals as well. We mentioned, of course, earlier in the hour, earlier on the broadcast. Not a good day to announce those deals, but nonetheless, Starboard Value is buying Sixterra. This is a a tech. What's the word I'm looking for? Tech center footprint. God, I'm blanking on the words now. You know what? Let me just Google it because clearly I don't know what I'm talking about. Yeah, retail co-location and interconnection services. So call center, basically. They own the real estate. They own those. So that's going to be SVAC, which of course Dennis and I are both long. It's his fault. I'm long. So if you're mad, don't be mad at me. Be mad at Dennis. NSTB. This one is super interesting. Northern Star Investment. We'll discuss this more on SPAC Attack, but they're buying Apex Clearing, which provides the clearing for a lot of retail brokers. They used to do Robinhood before Robinhood made their own clearing services, but they do clearing for Webull. They do clearing for Gatsby. I believe they do clearing for Public. They do clearing for TD Ameritrade, I believe. So that's a way to trade the retail trade. If you want to, buy or go long retail trading and retail activity in the markets, NSTB is a way. Like you can do it by, buying the retail brokers. There aren't that many anymore, right? You can buy IBKR, you can buy Charles Schwab, but NSTB is now going to be a way to get exposure to that trade. So that's very, very interesting. And the timing is interesting too, because we just had sort of all this market structure chaos in the form of the GameStop and Robinhood. So the timing of this deal, very interesting. It's a very large deal, right? They're buying Apex for essentially what comes out to $4.7 billion of enterprise value. So this is a big, big deal. They also do have some crypto exposure. Thank you, Jonas, for reminding me of that. So I'm going to be watching. I don't own NSTB, but I will be watching this very closely because it's a very interesting business, especially in the context of the GameStop chaos and the clearing and the DTCC and all that chaos there. CCIV is once again in the headlines. Is it up this morning? Of course it's up this morning. Why wouldn't it be up this morning? Report over the weekend from Bloomberg that a deal with Lucid Motors could be announced as soon as Tuesday. God forbid they announce it today, right? God forbid. Let me pull up a chart there, CCIV, so you can see what I'm seeing. I'll zoom in. There we go. There's my chart. You can see it up, Jesus, up $9 this morning. My goodness, guys. Wow. Chris Kotche had a great tweet. I want to read Chris Kotche's tweet on CCIV from the other day. I have to find it first, though. One second. Here we go. This is a tweet from our own Chris Kotche And I'll read reminder. This is from Saturday. Reminder for everyone: if CCIV deal gets done at $15 billion, that is based on shares at $10. There is a huge premium built in, and the company will be valued at over $60 billion already. Also, CCIV will not own all of the company. So Chris is long CCIV, but just please be careful on these SPACs. And on the SPAC note, if you didn't attend the Benzinga Bootcamp Saturday, you missed a great show. Mitch was there. Chris was there. I was watching. I was not there. I was there in spirit. But you can find that recording. You can buy that recording by going to benzingabootcamp.com. It was SPACs and options focused. Highly recommend that. Those guys put on a great show. It was a full day of content. Tremendous stuff. So thank you, XII in the chat. Thank you, Popcorn89. Appreciate that. Next time, I hope I get invited. Well, Neil was there. Maybe he'll invite me next time because he was invited and I was not. Okay, 9:26. Got 4 minutes until the open. 4 minutes until get technical. Looking at the biggest movers in the morning. We haven't talked about downside yet. I mean, we talked about the market being down, but as far as individual stocks, biggest movers on my list as far as downside, there's OTIC. Autonomy is down 50% in the pre-market this morning. They announced results for a phase 3 clinical trial in patients with Meniere's disease, and it did not achieve the primary endpoint. So OTIC getting cracked on that this morning. I mentioned Fizz. It is not really down 46%. They had a 1-for-1 split paid as a dividend, kind of strange. So it's actually reflecting the split, not down by half. EBIX is also down 41% this morning. Looks like they actually reiterated their positive guidance for the year. Had a press release talking about their cash equivalents, their gift card business. Don't really know what's going on with EBIX. They pull up a chart so you can see what I'm seeing on EBIX. Ouch. Was it earnings? No, it was not earnings. Interesting. Back to my movers tool. On the downside, Just Energy, JE, also down 31% this morning. I mention the movers tool all the time. I use this tool every single day. It is the first thing I look at when I sit down at my desk just to see what's up and what's down. And that's how you find news, right? That's how you find news. Because you just see, oh crap, a stock's up big, or crap, stock is down big, find out why. That's it, right? So JE down this morning. It looks like the continuation from last week where they delayed they delayed financial filings. Oh gosh. You never want to see that. Delaying filings. Oh geez. Not what you want to see. MoneyGram had earnings this morning. MGI down 20%. Their earnings beat, their sales missed, and their Q1 sales guidance was light. MGI, let's pull up that chart. Yeah, boring stock, down $2. Big deal. How's RCL doing? Kind of holding steady, not doing a ton. I mean, it's up on a day the market's down, so that tells us something. But in a vacuum, it's up $0.50. I don't know. Not doing a ton for me there. Conference call scheduled. You can see there for 10 a.m. Eastern time. Okay. It is about 9:30, which means I'm getting ready to hop off and let Neil Hamilton take the wheel on Get Technical. He will be joined by a guest later in the show. That guest is Alex Cole. He's the CEO and Chief Market Strategist at Go No Go Charts. He's going to have his own special indicators and charts to walk through at 10 o'clock. Neil, I see you're here. How are we doing?
I'm doing great.
Hope you had a great weekend.
Yeah, you too.
Oh, no, you're way too quiet.
Oh, no.
Fix your mic.
How's this? Is this getting better? How does it work? How about now?
There
about
we go. That's better. 5 seconds until the open. 3, 2, 1. Let's roll that intro.
3, 2, 1.
Here we go.
Welcome into the open where we get technical. You should have investments in long-term growth. How's it going, guys? I'm Neil. This is Get Technical. I'm not a financial advisor. This is purely for entertainment and educational purposes only, hopefully in equal measure. Guys, yeah, everyone talking about my hair. That's the thing of the day. Should I cut it or should I grow it out? My goal is to have the longest ponytail in finance. I know you know what ponytails I'm talking about if you've been looking at educators out in the space. So let me know. Give me a 1 in chat if you want me to grow it out down to my butt. Give me a 2 if you want me to cut it. Let's go ahead and get the screen up and let's talk about the agenda for today. Grow it out and braid it. Thank you, Global. This guy knows what I'm talking about. This guy knows what's up. For today, guys, FPRX. FPRX. I'm not doing a buzz cut, guys. I'm a balding 31-year-old man. I kind of am leaning toward growing it out while I can, guys. FPRX. FPRX. Who got in? Give me a 1 in chat if you got in on FPRX. Yeah, boy. Red. Very good. Very good. Very good. Give me a 1 in chat if you got in. Give me a 2 if you don't know what I'm talking about. Next up is my favorite stock of the week so far. Looking for movement on it today. That's why I want to get to it real quick so we can get in. Full disclosure on this stock. I did purchase some during the pre-market hours. Thank you, Berlin. Grow your hair out now. You will miss it later. That's exactly my thoughts. ETF and crypto check-in. We're going to check in on those ETFs, baby. You guys know I like those thematic ETFs. You know, I'm a Kathy Woods guy, Kathy Wood. So we'll take a look at those. Is it time to get out? Is it time to stay in thematic ETFs, or is it time to switch over to something a little more stable over the long term and less susceptible to taking big old dips as market structure changes and markets overall change? Kind of a cyclical thing there. Is oil and energy still in play? If you guys have been watching the show, you guys know what I think about that over the short term. All right. Don't quote me on long-term oil and energy, but you should know what I think about it for the short term. We've got some plays. We're going to check in on some old ones, and I got some new ones. Guest lesson. We've got Alex Cole, former Bloomberg, now the founder and CEO of Go No Go, which is a patented. I don't know if he actually has patent on that, so don't quote me on that. But it is a completely unique technical indicator tool that basically looks at charts, bakes in a bunch of technical indicators that I talk about and other people use probably a lot better than I do, and gives you a very simple go or no go signal. So he's going to give us a little lesson on technicals. He's the technical man. He's also a CMT and has done a lot of education on CMT, which is the Chartered Market Technician. I'm pretty sure that's what it stands for. Maybe Spencer, if you can check me on CMT, what that stands for. That's a
that's correct.
Okay, thank you. Yeah, CMT, super cool. That's my dream, is to get the CMT to pass the CMT test. Guys, if you don't know what that is, check it out. And even if you don't want to do the CMT test, if you love technical analysis, seriously look at this stuff. Probably a lot of the people you follow on Twitter or that you follow that are technicians or technical traders, a good amount of them are CMTs. So check out what the CMT is and the learning materials for it. It's just great stuff to teach you the foundation of technical analysis. All right, picks from the chat after that. That's enough of me talking about what we're going to do, and now it's time to start doing it. Let's look at FPRX. Guys. When it goes, doesn't it? let me close out this Bollinger Band. Let me close out this moving average. Let me close out this moving average. Let me get rid of my drawings and we can just go back to basics. All right, guys. No lines, pure price action. Called this out last week. We had a nice cup and handle. Why is it a cup and handle? Well, let's dive into it. We've got a high point right here. We've got another high point right here. In between those 2 points, we've got a dip. All right. And this is following a large uptrend. Number one, when we're looking at these bullish continuation patterns, what do we like to see? We like to see my paintbrush tool, and we do an uptrend. And boy, was that a powerful uptrend. The bulls are loving this stock. Then when we hit resistance on our cup that we have formed, we had a little flag here. Why was my line invisible? Why is my line invisible? God, it's so hard when it's full screen, guys, because I can't see my tools. If anyone knows how to make the tools appear on full screen, let me know in chat. We've got a little flag, right? We hit resistance. We bounced off of it. We formed a little flag. That's the handle on our cup. Cute little cup. It's adorable. All right. And then what happened? We had what we were looking for, what we were watching for, is a close above this upper resistance slope on that handle pattern. We had that close above, and now we're going up, and the bulls are piling in, and the RSI is getting a little bit overbought, but look what it did previously. All right. We love this stock right now. So let's look at our price targets. I'm going to use the new method that was taught to me by one of the watchers of Get Technical. I'm going to use my Fibonacci extension tool, which is available. Press the star left for tools. Okay, thanks. I'll check that in a minute. I'm going to use my Fibonacci extension tool. First point I'm drawing is at the absolute lowest point of my cup part of this formation up to the highest point, which is that first resistance line. And then I have a third point to draw. That is going to be the lowest point on the flag that followed the second high in the cup, or the bottom of our handle. And when we do that, the first line that we see, this 100% line, is our conservative price target. You can see we're more than halfway there. What if you shaved your hair off the left side of your head along with your right eyebrow? Jerry, I'll consider it. I'll take that in serious consideration. Thank you. Staying on task. FPRX breaking out. Looks like we're blowing off a little bit of steam right now. We've got a red candle, but that is okay. I expect a stair formation up to the 100% line, keeping it conservative. Something else interesting, guys, as you know, we draw a line from the bottom of our cup up to the resistance line. This line is called our measured move. This is how much we expect this stock to go up. Let's draw this right at the low point of that handle and look at it line right up with that 100. So that's our price target. We're shooting for about 26. FPRX still in the running. Next up, my favorite stock of the week's got a lot of drawings on it, so let me remove that stuff. DocuSign. If anyone was at the boot camp, I think I talked about this one. Yeah, I did. I talked about DocuSign at the boot camp. Give me a 1 in chat if you like DocuSign, if you like what you see. Also, this is a very easy question to answer. Give me the pattern that you see on DocuSign forming. There are a couple correct answers to this, and I acknowledge that. It was pointed out to me during the boot camp. I acknowledge it. I've seen this chart on pretty much every increment. So we got ones. People like DocuSign. What is the pattern that we're looking for? Because we want to break out. We want a big jump. My interest is in having long-term high growth holdings in ETFs with good managers that I can rely on, like Kathy Wood. All right, that's the majority of my portfolio. So my money is working for me. But then I like to supplement that with breakouts and good entry points that I can buy options on or just buy shares on. Cup and handle. Boom, boom, boom. Voodoo. And a bull flag. It's both, guys. It is both. You're absolutely right. So you can do something like this. You can do something like this. Charts are weird, aren't they? Because we can see different things. That's, I mean, maybe that's why technical analysis so often gets compared to tea leaf reading, which is the mystical science of having a cup of tea and then looking at the leafy residue left on the bottom and then seeing the future. So at any rate, I see that Alex is backstage. He's here quite early, like the guitars in the background. Got to say that, Alex. So looking at this from a cup and handle perspective, let's get rid of our flag. Let's get rid of it. Boom. Boom. Trash can. It's gone. Then where did I have this? From a cup and handle perspective, we've got our high up here. We've got another high. And then we've got a little bit of a sell-off at that resistance, right? We've got a nice trend up too. Let's go ahead and draw our U-shape. High to high to low. Okay? Looking like a cup so far. Yes, it's okay to have a slanted resistance line on your cup and handle. Absolutely. All right, and then let's zoom out so we can get this in context. This is following an uptrend. We've got a dip and then a return to resistance. And then when we hit this high point, we've got a little bit of a sell-off forming a small handle here. What can I do with this small handle to make this a true cup and handle? I use my U-shaped line at the high at the resistance and then up to the next peak. Cup and handle, guys. Cup and handle. All right, so this is DocuSign. Let's set our price targets. Let's talk about stop losses. Let's talk about return potential on DocuSign, which, by the way, has earnings coming up on March 11th. That might just be a major catalyst for a continuation of whatever we're looking at. So, Fibonacci extension tool, bottom of the cup, resistance on the cup, bottom of the handle, looking at a price target of about 340. Entry, close above resistance. This is why I've already entered. So if you look at this kind of slope here, we are down a little bit. I'm in it. So my hope is that we break up above this again, since I'm already in this. If I do see it start to break down past this support line, I will probably get out. So that would be a breakdown. So I'm drawing a line right here. I'm going to make it red. If we see DocuSign reverse and start to go down past this red line, I'm out. All right. So let's look at the return potential based on my current position. So I got in above this. It was in the pre-market. I think it was about here, about 261. Return potential, 32%. What I will say about this is that the options are super expensive. So typically with something like this, I like to get in the money options, do something very short term, timed based on when I think the breakout will occur. Use the numbers, dude. What do you mean? What else we can look at is Fibonacci retracement to see support. And we can see that from the low to the high here, we are sort of touching this first support line on the Fibonacci retracement tool. Use the force. All right, guys, that is Docu. That's my favorite stock for the week. I expect a breakout. I'm hoping for a breakout. Everything is in support of it. Yes, we're a little bit down today, but I expect good things. Most of the market is a little bit down today. Most of my portfolio is red. but the stocks that we have picked for breakouts on the show are mostly green. Let's take a look at our ETFs. All right, guys. We had a little bit of a sell-off recently. Might have spooked some people out of their longer-term holdings. But as you know, it's about the bigger picture. This is about... Oh, sorry, Susa. What did it... Let me go back. I said this instead of giving a number. I apologize for using a pronoun. Let me go back. So it's week 3, FRPX DocuSign. So entered around 259. My price target is 339. And then my stop loss, which actually right now for me is a mental stop loss, which I normally don't do because I'm busy. I work full time. So I like to have an actual stop loss on my brokerage because I can't pay attention all the time. But for this one, I'm going to keep an eye on it. My stop loss is 245, which is just a few ticks below where this handle, the low of this handle. That's it. That is it. Thank you for encouraging me to be more specific. Let's look at our Cathie Wood, our heavily Cathie Wood based portfolio. So guys, we had a little bit of a sell-off, guys. We're a little bit freaked out, but let's look at this in context using Bollinger Bands. If we look at our 20-day moving average, this ETF has been touching the 20-day and then bouncing back up 2 standard deviations, hitting the 20-day moving average, bouncing up 2 standard deviations. We actually have an acceleration of trend if this continues going up without touching this moving average or the mean, as you might call it. So guys, Bollinger Band on your long-term holdings to assess the trend continuation or potential reversal. What we see here, even though there was a little bit of sell-off, we were just blowing off some steam because we had some big growth, right? Okay, what are my continued thoughts? All right, so Sean, you're asking about Sabre. I'll go ahead and pull it up. Oh yeah, I do like it. Well, Sabre, it broke out. God, it's beautiful. So beautiful. So it broke out. So let's draw Sabre. Sabre, this one's a snack. Guys, this is a big old piece of cheese. SABR, we'll just take a look at what's happening. I want to look forward though, guys. I want to talk about trading opportunities that are still coming up. So I'll look at this now to placate you. But let's talk about what's happening in the future, because I definitely want to get into cryptocurrency, because if you guys don't know, there's a big old red candle on the biggest coins right now. So let's do what we always do with these double bottom patterns. This is pretty much a double bottom. You might make the case as more of a rounding bottom because there's a large percentage differential between this low and this low, but we'll go ahead and treat it like a double bottom. So what I do for that is use a rectangle, and I use the meat of the trading for my tops here. In this case, this is actually pretty meaty. If it was all wicks, I would not go all the way to the top of this. But in this case, I'm going to. Actually, you know what? So what we want to do, I take that back. That is not meaty. What I want to do is go back to the last green candle here that lines up. So let me get my rectangle tool. Boom. And as you can see, that's about at the bottom of that candle. So it's a nice little lineup. And then you see that this previous green candle, I hope you can see this on my screen. I'll actually full screen it in a second so you can see. This previous green candle high is lining up just about perfectly with this high on the other side of the pattern. All right. So this is the action. This is the battleground that we're watching, like vultures above a medieval battle. To swoop in. We've broken out. It wasn't a huge swing up, but it is a breakout nonetheless. Something I want to look at is see if we've got a golden cross, which is the 50 crossing over the 200. So let me just confirm this. Move out, get the 100 out of here. Yeah, so we've got the 50-day moving average crossing over the 200-day moving average, showing a trend change. This is usually a precursor to a trend change, upward trend, looking strong, and then the breakout happens right about here. Beautiful, beautiful breakout. Great call from whoever gave me Sabre. I didn't get into Sabre. I didn't get into it. Kind of wish that I had. Still room to go on it. Let's go ahead and do our measured move thing. I'll just use my ruler tool at the bottom of this, bring it the halfway line up to where the meat is, and say that we've got a price target for a resolution of this bottom out, the sideways consolidation over time of $17.20. You bought the red candle. Way to go. Way to go. All right, guys, let's talk about cryptocurrency. Wait, I didn't even get to the ETFs. Well, okay. The main thing with the ETFs, guys, the main things with the ETFs is watch them with the Bollinger Band. It's very simple. I'm not trying to get too complex with this one. Just use the Bollinger Band tool on your brokerage or your charting tool. Look at the daily chart and try to stay at ETFs that are maintaining an upward trend above the middle line. The middle line is this 20-day moving average. You want to stay above it. A lot of times the ups and downs in a healthy upward trend are bouncing off of that mean. If they're bouncing up all the way to the top line, which is 2 standard deviations away from the mean, down to the bottom one, which is two standard deviations below the mean, then you've got a more volatile trend happening. You've got a more volatile ETF. In that case, those are buy and sell signals if you want to be active with it. So with something like this, I like to hold it over the long term. And then if I'm piling in, or not necessarily piling in, but if I'm going to enter more, I like to wait to see it touch the mean. Or if it's more volatile, something like QQQ, I like to wait for it to touch the bottom before I get in, because I expect it to then return to the mean, which is that 20-day moving average, or above it, back 2 standard deviations up. We like healthy, zigzaggy steps climbing up on our long-term holdings. Crypto. Bitcoin. Holy smokes. So with Bitcoin, we hit I'm pretty sure we hit a nice price target here. So we had previously a nice descending triangle for entry. Got in at a break. I got in at a break above this slope. If you've been watching the show, you were with me when I drew this. We hit our price target here. Look at this beastly candle lining up almost perfectly with this price target. And then it kept on going. It kept on going, guys. Putting things in context. Let me look at the weekly. Because remember, with all of these big names, with the big 3, everything's a resolution of what happened back in December 2017. We're resolving these big rounding bottoms or double bottoms. All right. So Bitcoin has been a huge grower here. We've seen patterns all the way up, opportunities to get in. Now let's take a look at what's happening. When will the bleeding stop? When will the bleeding stop? Let's look at the daily. Let me close my bands here. The bands were not applying because this was such a strong upward trend that it was constantly changing the overall slope. It was going parabolic. It was curving up. So let's get that out of here. Let's close the Bollinger Band and just look at price and lines. So we've got a big sell-off. When you got a sell-off, guys, what's a good way to kind of get an idea of when it might stop? Are there any technical tools that you can get a good idea with? Yes. Number 1, and the best one is keep it old school. Keep it old school by looking at previous resistance that is now support. We've got a big, strong, meaningful candle here. People sold a little bit after that. This is a very important point. Our sell-off pretty much hit. Actually, if I raise this up even to the wick, our sell-off almost touch this previous resistance line. That's absolutely right. Watch the volume and resistance levels. We're still on sell volume, but it's not as high as it has been in the past. We've still got a day to take a look at this. We don't know what will happen, but we can see that we're getting a magnet kind of pulling it back up. All right. Let's get fancy now. Let's get Italian. Let's get Renaissance. We're going to use our Fibonacci retracement tool. So what is retracement? I've used this, I think one time on the show today, and I've used this in the past. Retracement is when a trend is going in another direction and it's retracing previous meaningful price points or price levels. All right. It's retracing lines that it has already covered, but in the other direction. All right. So when we see something like this and we start clenching our butt cheeks about our holdings, we need to take a chill pill, shotgun a Red Bull, and pull out the Fibonacci retracement tool. All right. So what we're going to do is go to this previous meaningful support line and then draw another point all the way up to our high. Look at this 38.2% line. We got just about down to it, and look how perfectly it lines up with that previous resistance, now support level. We are confirming this level. We are confirming our thesis on this price level using another technical analysis tool. That's what this is all about, using various technical analysis tools, making sure that they agree before we make decisions based on them. If you're going to make a decision just based on one aspect of technical analysis, just one aspect of reading a chart, always use price and then volume. But if you have access to these other tools, they can aid you to give you more clarity and more insight into what's going on. And we look for them to agree before making decisions with our money. All right, so Bitcoin looks like it's got some nice support around this level, bouncing right back up. In terms of growth potential, I'm open to you guys. Drop in chat right now what your short term, not long term. I don't want to hear 100,000. Give me your short term. I'm talking over the next 1 or 2 weeks price targets for Bitcoin if you're in. And while you're doing that, I'm going to switch to Ethereum. We got ETH. A lot of tools will have you look this up as ETH USD because this is currency comparisons. This is Ethereum to the US dollar. Let me know your targets for Bitcoin. 57, 64. Thank you guys for dropping those in. I'm going to get rid of what I have drawn here. So once again, guys, we have the wick for Ethereum dropping down to the wick of a previous important point in time, a previous important price level. Let me make that green because it's a good thing that it bounced. All right. So we know that we had support here. It bounced back up. This is Ethereum. Let's use our Fibonacci retracement from a previous point of importance. I'm going to use this point to see how it lines up, to see if it agrees with the line that I've just drawn. This is retracement going from the low point all the way up to my high point. And we see that just like Bitcoin, the 38.2 lines up almost on the dot with that level. Hey, Brent. Thanks for tuning in. Almost to the dot with that level. All right. So we've got a good agreement between two technical analysis tools. We've got a bounce here. Now let's talk about price targets, guys. That's a little bit more fun. I'm going to use something very lazy, but often effective. Lazy, but often effective. I'm just going to use the Fibonacci extension tool, which is 3 points. It's the beginning of that trend. It's the high of that trend. And then the retracement, right? The retracement is what we just talked about. It's at the support level. 100% is the conservative price target when you're using a Fibonacci extension. So just based on that, we are targeting $3,017 for Ethereum. Let's continue contextualizing this. Let's look at the longer term trend here. What do we got, guys? This is my favorite thing in the world. What do we got? What is this pattern that we see here on Ethereum? It's a favorite around here. Some might call it juicy. Some might call it big and fat. Some might call it a snack. It's a rounding bottom, guys. A big, old, long-term rounding bottom pattern. The longer the duration of time of your rounding bottom, the more powerful it is. And we love this. We love getting in on these rounding bottoms. All right? When everybody else is selling off and they forget about it, that's when we come scurrying in to the alleyways with the flickering street lamps. All right? Going through the dumpsters, rummaging, pulling out pieces of cheese, bologna sandwiches with like one bite out of them. We're going to nibble them up. All right? Rounding bottom, still looking to resolve. How do we measure our profit potential with this? We go to the absolute low point. We use our little fancy-dancy line tool, and we draw it up to our resistance levels. So we got this big sell-off here, the previous high, back when crypto mania was happening. And then we've got it right here again. Look at the consolidation happening, hitting this resistance line again. This is our rounding bottom, folks. We take this line, and we draw it on top of our resistance, ladies and gentlemen. We draw it on top. And that gives us our price target for the long-term resolution of this pattern. Am I spooked by this sell-off? Hell no. Do I believe in Ethereum going higher? Hell yes. Let me get an amen in chat if you are bullish on Ethereum and cryptocurrency in general, based purely on technical analysis. Do I know anything about the fundamentals or real-world applications for Ethereum? No. But I'm looking at the chart. I'm looking at what the markets are telling me. All right. That's what we do. Price target for Ethereum, 2,787, a little bit below that Fibonacci extension line. All right. Profit potential from this point in time using our handy dandy ruler tool, 80%, ladies and gentlemen. That's Ethereum. All right, guys. I have had enough coffee and enough of my own technical analysis for the day. It is my pleasure now to welcome Alex Cole for our, what day is it? Monday guest lesson on technical analysis. Spencer, Israel, would you be so kind as to bring Alex onto the show? Hey, man.
Good morning, sir. How are you?
I'm doing wonderful. I just really quick, shout out to the Gibson SG behind you, the double cutout. What is that? What's that yellow one?
This one?
Is that a Jackson or an Ibanez?
No, so this actually, this was the first guitar I ever bought, Neil, actually, when I was about 16. And it's a British guitar maker called Patrick Eggle, who I think went bankrupt and came back a few times. But he used to make some custom ones for some of the old British stars in like the 80s and 90s. Yeah.
Your amp is also British. That's an orange.
Yeah.
There's an orange Micro Terror, if I'm not mistaken.
Micro Terror. Yeah.
Hold on one second.
I wish I was sort of good enough to deserve all the guitars. I just love collecting them, and I play them as much as possible. But
a lot of folks collect guitars. I mean, they can be assets. Let me do something really quick. I want to bro out with you.
I see yours in the background there. What do you got over there?
That's my that's an RG model Ibanez.
Nice.
Yeah, I like to chug. So hold on one sec.
Baby. The micro dark. There you go.
Yeah, my neighbors love me.
Yeah, I bet.
All right, man.
Good stuff.
So tell folks, Alex, a little bit about yourself
Sure.
and what you can teach them today.
Yeah. So I'm a technical analyst. I worked for about 15 years for Bloomberg, working mostly with institutional buy-side, sell-side traders, PMs, money managers, sell-side research, but all in the technical space. And did I actually for the most of that time I was responsible for the training of all new hires into the financial training program, as well as a lot of external client trainings in technical analysis. And I love it. I love the charts. I was enjoying listening to you there, and I towards the end of my time at Bloomberg, I ended up in a sort of more of a niche fascination, I suppose, of trying to create custom charts for clients and trying to find out what they really look at in terms of technicals and build tools with Bloomberg's custom study writing to sort of highlight things like that on the chart. And since I've left Bloomberg, I've become this was a few years ago now. I'm now the subject matter expert for Wiley for the prep course for the CMT, which I'm sure your listeners know. The CMT is the Chartered Market Technician, sort of the equivalent to the CFA program for technicians. And now I consult, and I've got my own charting process called the Go No Go charts.
Wonderful introduction. Shout out to the CMT program. I'm just going to go ahead and drop a link to that in chat.
It's a great program. It's really thorough. It really gives you a thorough education in technical analysis.
Yep. All right. So what I would love to do, Alex, is have you share your screen, pull up a chart, and just take us through some of your picks. And I would also love it, Alex, if you're open to it, if chat could drop some tickers that they're interested in right now, and we can pull them up and just see what you think about them.
Yeah, absolutely. I mean, anything you want to do. I was following along with your crypto and with some of your other charts. I can pull some of those up and talk through them in terms of the go no go charts if you want to start there, and then while we wait for some tickers to come in, we could do something like that.
Yeah, sure. Yeah, so let's start with cryptocurrency.
Yes. So let me get my crypto. This is Ethereum that you were just looking at, and I guess let me give a 2-minute overview of just what you're looking at here. I'm a big fan of two sides of technical analysis, and one is using really good, well thought out, complicated in some ways tools like studies, indicators. You were throwing up Bollinger Bands, you were talking about volume, you're talking about Fibonacci's. And so I spent a long time getting more and more complex with my process. But then on the other extreme, I'm a really big believer in keeping it simple and using price analysis and looking for support and resistance and patterns, like you brought up some of those as well. And so my sort of problem over the years was, how do you have a really complicated or sort of not complicated, but a really well thought out, detailed technical process, but keep the chart simple. So that's what you're looking at here really is sort of my life's work of trying to blend the inputs or the tools of the concepts of technical analysis that I think are really valuable in terms of trend identification and momentum into a different kind of data visual so that you can still see price and price action. So that's what you're looking at here. So this is Ethereum. The blue shades for me are bullish, so we call those the go trend. So you've got the bright blue and the lighter blue showing some consolidation and some correction. And then the lower panel is our sister oscillator. So we've got about maybe 12 to 14 concepts in this chart. But it allows us to then, I know the technical picture from all of my indicators and concepts that are in here, but it allows me to do things like you were doing, which is find important levels. Like on Ethereum here, you can call this, when I teach, I like to say that patterns, you can call them whatever you want. Really, they're just the underlying market action dictates what you can draw, and it's really a representation of supply and demand. But if you're looking at this as an ascending triangle, you can still draw that on the chart because you don't have too much in the way of multiple moving averages, Bollinger Bands. Maybe people put on Donchian channels or Keltner bands, and in the end your price gets so small and hard to see that it becomes difficult to do this kind of basic technical analysis, which I think is really important. So yeah, I'm pretty much in agreement with you on Ethereum. If you extend this out, today's sell-off came right back down to support. So the concept of polarity, what was resistance becomes support, and that's the same with Bitcoin. So if that's an old level I've got on there, but you were talking about this being a triangle. You can totally see that, and a break. And again, you've got these prior high Bitcoin coming right back down close towards it. And like you said, the bounce is really positive. To see it coming back towards the top of the bar fairly quickly, that's pretty bullish, I would think. And then just let me go back to Ethereum, because I think there was nice. The other point that I would mention about these charts is just that you were looking for where could we find support, and what would be maybe a re-entry or some sort of signal to get back in if you're still bullish. And to that, I turn a lot to the oscillator. The oscillator is a blend of momentum inputs. And the way that this works, which is hopefully powerful compared to some other things, is that when the oscillator inputs, if you think about a momentum oscillator, you're thinking about RSI, or you're thinking about MACD, even Bollinger, the way it swings between the standard deviations. When those are neutral, right, which is quite normal in a trend, you've got a nice little run and then a pullback will send those oscillators neutral. The go-no-go oscillator will crash to the zero line, and you can use that as an objective level of support in an uptrend and resistance in a downtrend. So as this was consolidating in this triangle sideways, looking to the oscillator and seeing that the support was being found at zero there was really encouraging. And that's what these green icons are, that I label them as trend continuation or low risk entries when in a trend. So right now, I'd be looking to see what happens as the oscillator gets close to zero again. If it consolidates for a couple of days in these sort of levels, we'll probably see the oscillator hit the zero line, and any kind of bounce back up from there would signal a trend continuation icon on these charts. But that's where I would be on Bitcoin, kind of pretty much in line with you on those.
So just so folks might just be tuning in, if you didn't catch it, what Alex has done with his tool here, Go No Go, is blend in, I'm sure on a weighted basis, all of what he has found over the years to be the most efficacious technical indicators into a very simple single indicator on the price chart and on an oscillator. So cool, pretty cool stuff. All right, so we've got some tickers coming in. Can we look at KALA? Kenny did a little. Here, I'll show these. He did those little cute little things on either side of it. So I want to make sure we look at that.
Yep. So KL, this is Kala Pharmaceuticals. Looking good, and actually cut today, getting a re-entry. So we had a sharp rally. We have a correction and a pullback, which we see those paler bars. We see it come back to the zero line and ride the zero line for a few days. And now finding support there is giving us some trend continuation icons. Obviously, we've got the overhead supply at around $10, so it would be nice to see price consolidate and break above those prior highs. And also, the one piece that is also in the oscillator is volume. So when the volume is on average heavier than it has been in a defined period, then the oscillator will be darker blue, and when it's lighter blue, then volume is a little weaker. So we'd like to see volume pick up as well. But this is also, like I said at the beginning, I love traditional technical analysis. One of my favorite books when I first started studying technicals was the Edwards and McGee book, Neil, which I don't know if you've seen, but it's from like the 40s, and it's really, powerful information about how markets drive supply and demand, and how that can be seen on the chart in the form of pattern analysis. And so what I was trying to do with these flagging these situations with the green dots is try to automate how to find things like, and again, they're all slightly different in form, but bull flags, pennants, things like that. So, you could quite easily be looking at this and seeing some sort of bullish trend continuation pattern. Maybe this is some sort of bull flag, but the situation is the same. When this happens, you've got a sharp rally in price, you've got some sort of cooling or pullback, but the pullback shouldn't be enough to drive the oscillator into negative territory, because that would be saying that some of these indicators are oversold, which is, a bit of a concern if you're thinking you're in a good trend. It's a bit of you want to see heavy buying and then a pullback, and then heavy buying and then a pullback. That's what happens in trends, but you don't necessarily want to see oversold conditions. That's a bit more volatile. Like if you look further back on the chart, we tried to go into a go trend here, but the oscillator couldn't confirm, and it couldn't find the support at 0, and it broke below. So this is now a little bit more bullish. You've got a sharp rally, you've got a pullback, you've got maybe a break of this bull flag, and you've got your continuation icons coming from the oscillator finding support at the 0 line. So that's an interesting chart right there.
What about Vale? VALE.
So Vale is interesting. Vale's had a really nice run. Again, the start of the trend, the sort of the pullback, the bull flag, and then the re-entry. It's a bit more concerning towards the right part of the chart. The oscillator was unable to hold the 0 line. That caused some inability for the trend indicator to maintain the go colors, and we found a bit of uncertainty. The amber bars, Neil, are neutral, often found as a bridge between trends, so they're sort of a neutral directionless color. But it has tried to go back into the go trend, and this is what I would watch for now personally, is it's tried to re-identify a go trend, and now it's getting close to the 0 line again on today's price action. So I would watch to see if that 0 line can hold as support, and if it does, that would be a positive. And then, but again, you've got overhead, you've got some resistance at about 19. So if it can find support here, I'd expect price to try to take out those prior highs, or at least get back to them if we can find support on the oscillator at 0.
All right, let's do 2 more picks, guys. The first one I'm going to do is what I like to call a FOMO stock. But of the FOMO stocks, I think this one might still have potential. It's Naked, NAKD.
Yeah, same idea. In theory, everything should work the same way, right? Like technical, I'm a big. I loved what you said about, do I know anything about the fundamentals of cryptocurrencies? And you said no, and I love that about technical analysis. It really is the market telling you what you can see or what's happening. And there's a lot of great technicians that combine fundamentals with technicals. I'm not saying that fundamentals aren't important, but in theory, the price chart should do what it should do. And so you have a similar sort of situation here. You have a break and a consolidation with the paler aqua bars. And then you're looking at the 0 line on the oscillator, starts to find support. And then again, you've got a move up and a consolidation, but you find support at the oscillator, a move up and a consolidation. And right now, again, we're at that oscillator finding support at the 0 line. So with you, Neil, potentially, I don't know, we have to watch what happens, but if it finds support and rallies into positive territory, then you could certainly look for an initial target, maybe to try to get back to prior highs, which on a stock like this is significant return. And the other thing to point out, Neil, is that when you see these trend continuation icons, because the suggestion is that there is renewed momentum in the direction of the trend, you can set very tight stops. So, when I work,
And really quick, Alex.
yeah,
The trend continuation icons are green circles underneath the bar, right?
green circles underneath the price bar in an uptrend. There'd be red dots above the bar in a downtrend. But it's based on this interaction of the oscillator with the zero line. So if you're in a trend, momentum should not get oversold, right? So as you correct, it could cool off and go to neutral, but it should find support at the zero line. So that's what these are trying to identify automatically. But because of that, when it finds support at the zero line, you can suggest that momentum has come back in the direction of the trend, so you can set a tight stop. And so that's when I work with traders more so than long-term investors. That's something that they like, because you can easily set a stop. Let's say you see a trend continuation icon, you can set a stop maybe at the low of the prior bar, and so your risk is very small, but you can put your targets wherever you want. But a sensible place on this might be at a prior high. So if you were to get another rally into positive territory, you'd get another green dot, and you could set a tight stop, and your risk reward in that way, even on the ones that go against, like for example on this chart, these would all work out. This one, if you set a tight stop, you'd be stopped out, but you can set tight stops and have nice targets, and your risk reward ratio is pretty good that way. So yeah, there could well be some room to run for naked, but I'd be concerned if the oscillator breaks into negative territory.
So let's do one more really quick, because we're a little bit over on time. TAP. And then after that, Alex, I would love if you could tell folks more about Go No Go and how they can get hold of it.
Sure. So here's TAP. Not quite such a pretty picture. We had a nice go trend established back in November. And then one other thing to point out here with the count, the other side of the oscillator are these red arrows. So I'm sure that you're aware and your readers are aware, but an oscillator is designed to look for overbought and oversold conditions. So it's trying to find swings where price velocity has been too extreme. So you can still use this as any oscillator. So I was talking a lot about the zero line, which is that added piece. But if you find an oscillator which is at an extreme and then it comes back, that's typically a short-term correction indication, right? Like if you think about RSI crossing below 70, that's this kind of situation here. And I highlight those with these counter trend arrows. And then you can also, of course, use oscillator divergence, which is one of the most powerful concepts, in technical analysis. So you can still do your normal oscillator and price analysis with the Go No Go. It's just that I might have highlighted the zero line a bit more because that's, I think, an extra piece to it. But so on this chart, we had the nice move up. We had some indication that perhaps we were seeing some divergence, and then we had the weakening. And then in here, when you had this, we had the cross below zero, and now we've gone into an amber bar followed by a no-go. So this one now, I'd be looking to see if price. We've also got a gap here, which is very important. As price rallies up to this gap, the gap should become resistance. And if price does rally a little bit, then we'll see the oscillator come up to the zero line from below. And remember now, from below in a no-go, that zero line would be resistance. So we'd watch to see if it finds resistance, in which case maybe price rolls over. But again, that's simplistic, right? You want to look at things in the context of a larger time frame. And if you're if you're getting your market bias from a weekly chart, then maybe you're looking for entries into this. And if we can get back to zero and cross above and see some bullish indication, you'd be looking to go long if your larger time frame bias is a go. So, but there's definitely not the same picture here on this one.
So there you go, guys. Alex.
Yes, sir.
Where can folks find more from you and more from Go No Go?
Yeah. So the website, gonogocharts.com, is where you'd go. You find out all the information. We have, this is something that's been institutional really only, and something that we've just launched it really this year for for everybody. So we have a fledgling YouTube channel, which we've got, we've thrown up with, actually there's a Benzinga presentation on there that we did, I think in October, Neil. And then some webinars I've done for other things like there's a CMT summit that I did a webinar for them, as well as we do a weekly video that explains, we do a newsletter that talks about the macro outlook, from a asset class down to sectors and then down to specific ideas towards the end of the newsletter. So we review that every Friday. I do some shorter videos for like the investing channel during the week as well. So there's the YouTube channel. There's Twitter, Facebook, Instagram, but go to the website. That's where all the information is. There's also a page on the website that explains the indicators in a little bit more detail, some white papers, things like that. But yeah, love for everybody to check out the website.
Wonderful stuff, Alex. Thank you so much for coming on to Get Technical on a super short notice, might I add. I really appreciate it.
My pleasure. Anytime.
You've been a wonderful guest. Have a great day, my friend.
Thank you, sir.
Alex Cole, ladies and gents, GoNoGoCharts.com. Link is in the chat. Check them out. Fascinating stuff. Technology is evolving and making us better traders in the process. Let's check in on some of those stocks I've been talking about. Let me do a little screen share, guys. I mean, I'm not going to say that I was right about XOM, but it kind of looks like it. Who here got into XOM? ExxonMobil. We're back on the oil train, baby. Icky stuff, but boy, does this chart look good. What a time to be alive. That's right. Gap to close, and it has closed, folks, on our double bottom pattern on ExxonMobil. What did I do? I bought calls. I bought in the money calls on ExxonMobil, and they increased in value. That's how it works. That's how we do it. I'm going to buy myself a rotisserie chicken from Meijer, which is a regional supermarket chain. All right, let's take a look at Oxy. Guys, remember Oxy? Nice little candle. Not a huge move if you're just buying the stock. But what did I do? I bought in the money calls on Oxy in anticipation of some growth in an uptick at above this resistance line, which is now support. All right. Another double bottom on an oil stock. So tomorrow, give me a 1 in chat if you guys want to talk about options trading strategies for these stocks that we talk about every single day here on, I almost called the show Go No Go, on Get Technical. Give me a 1 in chat if you want to talk about options strategies. And just remember, I am not YOLOing these, not all the time YOLOing these options trades. All right. I try to keep it. This is not about gambling on something. This is about using options for leverage on, in my mind, to me, very well confirmed predictions. And this is not a large percentage of my portfolio. The largest percentage of my portfolio is long-term growth stocks and ETFs. So my money works for me over a long period. Why? Because I want to lease a Lamborghini. Actually, I probably will never. I want to rent a Lamborghini for like a week, drive it around, take a bunch of Instagram photos, and then brag about my stock picks. And this is what's going to allow me to do that. All right, so we'll talk about options tomorrow. Got nothing but ones in chat. Enough of the silly goose time. I want to thank everyone that made it to the boot camp on Saturday. I had a lot of fun. I learned a lot, and hopefully those of you that attended did too. A lot of in many cases, it's both a humbling experience as well as something that's somewhat empowering, because you realize that although the market is very complex and often unpredictable, it's possible to create solid strategies for making money. that become kind of simple. So I want to thank you guys all for attending the boot camp. That's what makes that's what keeps us in the biz. Also want to thank you all for tuning in this morning. I have a ton of fun with you guys every day. I will say that I was up late. I was very tired this morning. I almost felt like telling Spencer just do the show without me. But I pushed through. So I pushed through, and it's been very rewarding. So thank you guys so much for spending time with me on Get Technical this morning. That is all I have time for. It is now my great honor, pleasure, and something else to introduce to you Arfaluna on Twitter. The guy has more followers than me. Look, that's a gap I want to close. But the man is a wonderful, wonderful technical analyst and fundamentalist. Fundamentalist. That's maybe not the right term, Ryan. Gets us into messy territory.
I gotta say, Neil, I was having a great morning, and then I saw how epic your hair was, and so you might be trying to close the gap on the followers, but I'm trying to close the gap on the wave of the hair that you got going. I mean, it's just spectacular.
I don't know what's going on, but I'm sticking with it. I'm Conan O'Brien in this hair. All right.
Well, what's going on is working.
All right. Thanks, man. Good. Flow, as we call it. I will not cut my hair until Oxy hits $34. So let me put it that way. So Ryan, we got Ryan Faluna here to talk about some Benzinga Pro action and how you can be successful with that. That's it from me. I'm out. You're in good hands. Ryan, take it away, my friend.
Thank you, Neil. Much appreciated. Thank you for that awesome introduction. Happy Monday, everybody. I am your host, Ryan Faluna, and I am here to discuss how you can actually use Benzinga Pro. One of the things that we're going to talk about today are insider trades. And of course, I'm here with my partner in crime, as I like to call him, Jonathan Mallard. Jonathan, happy Monday. How are you today?
I'm doing great. I don't have hair like Neil, but I'm okay.
Yeah, you know what? That's okay, Jonathan, because it turns out that neither do I.
I'm all shiny right here.
Anyway, so I think one of the things that we were going to discuss today is insider trades, how you can find them in Pro, and some of the different options that we have available. Insider trades are definitely something that I follow. One caveat that I will say is that I try, in my own personal trading, I try not to use insider trades as the singular data point in order to buy or sell a stock. I often try to combine that with other data points. And now, so this is a valuable metric to be able to find, and it's even more valuable when you combine it with other metrics. So take it away, Jonathan. What is the first thing that we need to do in order to get this information?
Yeah, so great question. Basically, we're going to use two tools to find insider trades in three different ways. So the first tool we're going to go to is the news feed inside of Benzinga Pro. And so as you can see, Ryan just clicked on the news feed icon there. And the first way that we want to find these is with the raw data. We get the data straight from the Edgar database, so we can just search for those SEC filings in the sources button. So you click on sources in the upper left corner, and then you select SEC at the bottom, and you can deselect the default source, Benzinga Wire. Are you getting some feedback from?
I'm not getting any feedback at all. No, I don't.
Then we'll just continue. So anyways, the Securities and Exchange Commission, these are federally regulated filings that have to be turned in, and specifically Form 4 filings are when someone like a C-suite executive or a member of the board of directors is buying or selling shares of the stock. And so you just type in Form 4 there at the top, just like Ryan did. And here we have the raw data of all of the companies that have C-suite executives or members of the board of directors or something like that buying or selling shares of their stocks. Now, some of these are huge, and others are pretty non-consequential. A few $1,000. But then you have something like, what was it? I think it was the Pfizer president or CEO that bought or sold he sold $5 million worth of his stock at the peak of the COVID vaccine situation. So there are some of these that really do make a huge difference And you can, especially if you have a watch list that you're filtering this by, you just click on watch list there within the news feed, and then only get the Form 4s on your watch list of stocks that you're doing some deeper research on. So that's a great way to do it. So that's the first way. Now, the second way is for our professional news desk to literally give you these on a silver platter. And so to showcase this, we could just open up a second news feed within the same workspace here. And this time we're going to go to the category filters. So if we click on categories, and if you're not familiar with the categories, these are tags that are associated with different types of news articles. These can be manually applied to our news articles or headlines by our news desk, or they can be automatically applied by our AI system based off of certain keywords or phrases. So in this case, we're going to go down to the news category and click into that. And you'll see that there's a list of subcategories there. 2/3 of the way down, we have insider trades. So we just want to check that box. And that's telling our system, I only want to see this type of news. Then we click done in the bottom right corner. You can see there's not too many of these each day. This is a situation where our news desk is going through all of these SEC filings and something sticks out to them saying, hey, this is a big deal. And so I have to actually maximize the screen I'm looking at here. But we can see that, 17.3% stakeholder. Anyways, these are some bigger moves here. I'm just looking for a larger dollar amount move. But these will be hundreds of thousands or millions of dollars lots of times for very, very significant insider moves. Now, a caveat there is that these forms are only turned in, I think they have to be turned in 3 days after the transaction. Is that correct, Ryan?
Yeah, I believe that is the exact time frame. It's
like
very short after the transaction took place. So they're trying to get these out as soon as possible after that transaction has taken place.
Right. So it's not like you're not going to get this information like the day of, but it's pretty dang fast for like a swing trade or something like that. This is still usable information, and the stocks do move off of this information. And now, Ryan, I want to go over to unusual options, but is there anything else that you wanted to say about the newsfeed portion of the insider trades?
Yeah, I just wanted to comment on a couple of things here real quick before we swing on over there. First of all, I love the idea of laying both of these out together. Think of it at the one that we set up with the category filter from the news desk. Think of that as your starting off point. These may contain stocks that you don't have an edge on or you haven't followed, but the news desk has looked into it and say, hey, this particular buy is something of note. So that might be, I can say you could use that as a trade idea, but that might be your jumping off point. Now, the SEC feed that you had mentioned at the beginning of this, Jonathan, I've said this before, it bears repeating. I actually prefer to use the SEC feed in Pro more than going to edgar.gov or sec.gov, excuse me, because it's actually easier, in my opinion, in Pro to go through and find things that you need. You had a great example here where we set a watch list as a filter. So now I'm pretty much only seeing SEC forms for stocks that are on my watch list. But if you didn't want to do that, if you actually wanted to research, you can very easily do that. All you have to do is then add a ticker in here. So if I add Pfizer, one of the ones that you had mentioned before, now I'm only seeing Pfizer Form 4s. And I can add more than one ticker if I want. If for whatever reason I wanted Pfizer and Apple, I can go ahead and add both of them. And then you can remove both of them simply by using your arrow and deleting those tickers from the search bar. So you can actually use this as like a research tool. The more filtered you go, the farther back in time you're going to be able to go as well. And it's worth noting that when you open this, you actually open up the same form that you would find on sec.gov in the Edgar database. So it's just, I guess it just comes down to what you're comfortable with. And for me, this is a lot faster and a lot easier, which means I get to focus more on executing the trades and what's going on in the market.
Yeah, that's what it's all about. And down on Thursday, February 18 on the right hand side, there's a big one that I was talking about with Prothena. a purchase of 635,000 shares at $21.49 per share. That's like over $13 million. So that's one of those larger trades that that could definitely affect the market. Or, beneath that, you have a $350,000 trade for Corvus Pharmaceuticals. So, so yeah, definitely some interesting stuff that can move the market there. Now, let's hop over to maybe a new workspace with options activity calendar. For those of you who aren't familiar, there's a calendar tool. And then there's also this preset workspace with the calendar tool and the signals tool. But out of the 13 different calendars that are available, there's one for unusual options activity. And there's all sorts of reasons for large option orders. You have hedge funds, other institutions placing these orders. But when you're going into something like earnings season or a conference series or something like that, there's going to be insiders that have information that you don't. And so if you're making $1 million, $2 million, $10 million trade, you probably do some research there before that trade. And so this is where the filtering capabilities on here really come in handy. And so the first thing that I want to point out here is DTE. If we're talking about insider trades, days to expiration is really important, because if you knew what was going to happen in, say, a week, right, and you were going to use your $1 million to place a trade, would you want to pay all that premium for a leap contract that's a year or 2 years out, or would you want to leverage your money more for a shorter term trade? Well, probably shorter term. So that's where we go to filters there on the right hand side. So it says columns and filters on the far right-hand side. And then we go to DTE for days to expiration. And we change the logic to less than. And we could say, I don't know, less than 60, less than 2 months out. So immediately that filters out a whole bunch of information. Next, if we're looking for an insider trade, we could probably get rid of the ETFs. So then we would go down to security type under trade count and just deselect the ETFs. And then this is where we can talk about total trade price. And Ryan, if you could expand the total trade price column on the main table, I just want them to see very clearly where that's at. Now, you could just sort by total trade price, but you'll see there at the bottom, there were some $25,000 trades. That's probably not going to move the market. All the way up to millions and millions of dollars changing hands there. I usually filter by something like $250,000. But whatever floats your boat, you could go over to total trade price on the right hand side and say greater than 250,000. And so this is where you could just use it just like this. I mean, I usually sort by the symbols column just to see any patterns that are coming up with certain symbols. Or you could filter it further by things like volume over open interest. If you want to see a spike in volume for that contract, you could do a trade count if you want to see sweeps that have a large number of sources or exchanges that is being routed through. So there's a lot of ways you can mix and match this, but what it really comes down to is once you have that watch list, that's the one thing that I forgot to mention, Ryan. You have the watch list filter at the very top there. And so what I would have done in the first place is I would have built a watch list of these stocks that are announcing earnings in the upcoming week or have some sort of conference announcement in the upcoming week. And I would have filtered all of this by those stocks. So you know they have a binary catalyst that's coming up soon. And then you're looking for these big money options with a short-term expiration date and some other interesting statistics. So those are pretty much the filters that I use to find those insider trades.
Yeah, Jonathan, that's great. And this can be very, very helpful for doing research on the stocks that you are accustomed to trading. I had mentioned when we were talking about insider trades that I try not to use that as a sole data point. The same is true for unusual options. But like you mentioned, if you have a binary event coming up like earnings, or if there's something else that's playing into your trading plan, unusual options might help give you the direction and maybe even a time frame, like you were saying about having like a short-term catalyst on the horizon. So there's a number of different ways that you can use this. Well, I like the calendar a lot because you can apply those filters that you're talking about. And I like this layout in general because if anything comes across the wire in real time, I'm going to be able to spot it by watching the signals tool, which can also be filtered by a watch list. So very, very powerful tool. A lot you can do with it.
All right. I don't know if Spencer's back, but I'm just going to keep talking until
I'm
he
here,
gets-
man.
kicks me out of here. Oh, nice of you to show up, Spencer.
I'm always
Glad you could make it back. Glad you could make time for us.
Hey, listen, I was on 2 calls at the same time just now. I was listening to you guys, and I was talking to Mitch about SPAC Attack, all right?
Oh, man.
I'm in a fast market over here. But I appreciate you guys walking through insider trades. It's definitely one of the more fascinating aspects and also misleading by name, right? Because you hear insider trades and you think, what? But it's no, not those kind of insider trades. The legal kind.
Not the illegal kind, right?
Not the illegal kind, the legal kind of insider trades. So anyway, as we say, or as I said last week and saying every time here, to learn more about Benzinga Pro, you can email that email on your screen, vipaccounts@benzinga.com. That email goes to both of you, right?
Yep.
Yes.
Among many other people, but you're in there. Okay. vipaccounts@benzinga.com to learn more. Ryan Fluna is at Ryan Fluna. Jonathan Mallard is at BC Mallard.
Actually, our Fluna.
Oh, God, I screwed that up.
It's okay, Spence. I love you anyway.
Oh, Jesus. Let me fix it. Arthur Lynn. Oh, now I got the bracket in there. What am I doing?
It's a Monday. Come on.
God. All right. Thanks a lot, guys.
All right. Take care. We'll see you.
Let's get that graphic out there. Jesus. What are you doing, Spencer? All right. Time for a news desk update. Every day I bring on a different member of the Benzinga Pro news desk and just talk about news, right? That's what we do here. We talk about news. Today I'm joined by Steve Krause. I don't know what his official title is. He's just called himself a news. Steve, what do you call yourself? Just a news desker or
Newsmaster General?
Newsmaster General.
Mm-hmm.
That's fair. That's fair.
Probably something like Benzinga Pro editor or Benzinga Pro reporter. BZ Pro editor / reporter.
I like Newsmaster General.
Thank you, Newsmaster General. Got it.
Forward. All right, Steve. It is a Monday, which we're playing catch up for all the news that went down over the weekend.
Yeah.
Fill us in here. What's on your radar this morning so far?
Well, the two biggest things over the weekend, for me at least, were first CCIV had their that Bloomberg rumor that we could finally get Lucid Motors merger announcement. So yeah, what's it out there? Oh, it's $59.50 right now. Yeah. So that was obviously over the weekend. And then are you excited for CCIV? I know this is like one of the hottest stocks out there.
I was actually I was in front of my computer yesterday, and I just happened to have had a Benzinga Pro up on the screen when we posted the headline in there. And I'm not gonna lie to you, so the headline got posted when at 5 o'clock or something. Let me see.
Let's see. Yeah.
Yeah. So at 6:30, well, I didn't see the headline until 6:30, but it was an hour later. I'm not gonna lie to you. I went into Webull and I tried to buy CCNG, but they're like, you can't buy. You can only buy at 4 a.m. or late. And I was like,
sure, yeah,
crap. So I couldn't.
You couldn't grab some. You think it's gonna pop even higher? I mean, well, clearly it did. Look at that.
Right at 4 a.m. though, but I wasn't in at 4 a.m.
You didn't get it, yeah.
So,
well, yeah.
What was me on that one? But
we were there. We were on it.
Right. Yeah. I don't understand this story. I never have. Chris Kachi has got a better feeling for SPACs, but I don't quite know why CCIV gets the premium that it does. But
I think I saw the stat somewhere today that if it IPOs at the price that it's at now, or around $60, that it'll be at a $90 billion valuation, which is more than Volkswagen, which made 9 million cars last year, and Lucid Motors made 0.
Jeez.
So, just one of those things to look out for. So that was one big item over the weekend. The other one, obviously, is Boeing. No. Boeing had, and actually Boeing had, I think I'm counting 3 plane failures over the weekend. There was obviously the very dramatic video one over Japan. There was one flying into New York, and then I actually see a third one. I believe we have a headline on that.
Well, there was the one in Colorado. That's the one.
The Colorado. Well, no, there was a third one. The New York Post. I published a headline at 9:29. NYC bound plane's engine caught fire, shed debris on same day as United 328. That's from the New York Post. So it's the same type of type of news event.
So what's interesting is if and here's that intraday chart of Boeing. You see it open lower.
Yep, look at that.
Sort of come back though, and Raytheon, which is the parent company of the company that made the engine from the flight and the United flight. Same thing, right? RTX and pull the chart.
Yep, open lower and looks like it's trending back. It's not positive yet, but look, Boeing's up 1% on a series of bad headlines. Looks like that 737 Max comeback is just too strong to pull it back.
Yeah, poor Boeing.
I know. I do feel bad. That this all kind of happened. You couldn't have planned it worse for Boeing, Yeah. And then, this morning we have crypto kind of going a little crazy in the pre-market. I don't know if you've been watching the Bitcoin futures this morning.
I have been. I've been watching them, since I got in this morning. I was watching them last night. I was like, damn, $58,000.
I know. $58,000. I know. And then we hit 48,000 this morning.
Wow.
And then now we're back at 53,000. So yeah, it's just like a big V shape. So not necessarily the reason for that, but we heard some comments from Treasury Secretary Janet Yellen on cryptocurrency, on how Bitcoin is not necessarily secure, yada yada. Just some general, not necessarily negative, but just a bit more bearish Bitcoin comments from Yellen. Not that the Treasury Secretary generally moves Bitcoin in this fashion, but
right.
Looks like we rebounded back, well above that.
Yeah, Bitcoin is. I feel like you can't look. Like I own a little bit of Bitcoin. I own like a little bit of Bitcoin. I feel like I can't even look at it. You shouldn't. If you own Bitcoin, just don't freaking look at it. Right? That's how I feel.
Just hodl, right? Just hodl.
Just hold on. Yeah,
I hodl and close your eyes.
Wait, yeah. I thought for the longest time, I thought hodl was a joke on the fact that they couldn't type hold.
It is,
but apparently it also stands for hold on for dear life.
Yeah, no. So
it's both.
It's both. It started in an early Bitcoin forum where someone misspelled the word hold, and it became a meme. Yeah,
that's what I was assumed.
Yeah. And then of course it just became like an acronym.
Yeah.
They turned into something else.
Sure.
So let's see here. What else? Oh yeah. So we have some. We got our biggest earnings week of the earnings season.
What?
I know. Yeah, it feels like
no, it's not.
Yes, it is.
Wait, you mean in terms of quantity?
Yeah, by a lot. Yeah.
For real?
Absolutely. Yeah, go into we had a chart.
All right, yeah, here, I'll pull it up here so y'all can see. Let me
look at this.
Here, I'll bring it up on the screen so y'all can see what I'm seeing. All right. Let's do this. Can you all see that? No, you can't. Let's share my screen, and let's do that. All right, y'all see that? This is from our news desk, right?
This is from Totan. Yeah,
right. Who's on our news desk?
Yep. So here we go. Look at this. We got 150 tomorrow. We got 230 tomorrow on Wednesday. Look at Thursday. We got like 300.
Jesus. There's 300 and what is that?
350? Yeah, something like 330, 350 on Thursday. I know. Yeah, this is the week we've been waiting for. It's been kind of light. I mean, not necessarily light, but we haven't had the 300, 400 earnings days that we're used to. So, it's just been in a very extended, long earnings season. From what I understand, the following week we got about an average of like 30 a day. Don't quote me on that.
Who are the 4 companies reporting Friday afternoon?
That's a good question. So right now I'm seeing that the S&P 500 futures are testing the 38.75 level right now. So we're just we're testing that intraday, that consolidation level for the last hour-ish. We had a big drop off right around 10:15 into that level, and then we just broke below it. So now S&P, we're sliding now. 38.73 now in the S&P 500 futures.
Still not at the low of the day low. So,
no, not an intraday low yet. Just seeing a little bit of a downward trend here.
Interesting. So we're seeing overall market weakness, but pockets of strength, right? I mean the
energy is up today.
The reopening trade. I mean, look at the airlines. It's not just Boeing, right?
Yeah, that's true. So UAL. Yep.
I mean,
Delta.
You could say, was that like Deutsche Bank upgrade, or you could just say, hey, it's all just reopening. Hey, how's RCL? They had earnings this morning. Yeah, them too. Whoa.
Well, we also have. I mean, if you look at oil, crude's up 3% right now. It's at $61 a barrel. Energy. The sector as a whole is rallying. I think it's up around 4%. For the sector right now. So it could be a combination of reopening plus Texas, unfreezing and coming back online. Maybe the energy sector is happy that Texas is shaking that off sooner rather than later.
Well, that'd be bearish for oil because it would mean
that's very true. But
back online.
Maybe they were expecting some sort of longer term damage though to infrastructure, and that maybe it's coming back a little bit. I'm not sure. You're right though. You're right. That does not explain crude rallying here.
I mean, the airlines, the cruise lines, with CCL is up 10% today.
Well, actually, so that kind of leads me directly into the last thing I wanted to talk about, which is some big earnings coming up this week.
Yeah.
And lo and behold, we got so let's see. Today we've got Palo Alto Networks, Royal Caribbean's tonight.
Oh, they're already out. They were this morning.
Oh, they were this morning. Okay. Sorry. Dish is tonight.
Don't care about
no. But we also got Marathon.
Which was already out. Yeah. Oil. Who cares about oil?
Oh, who cares? Yeah. Right. Tomorrow, look, we got Square, Home Depot, Intuit. We got Jazz Pharmaceuticals after that big acquisition.
Square's down. Growth tech is all down here.
Mm-hmm.
Intuit, didn't Kathy Wood buy Intuit on Friday? She did.
Well, let's search in the news feed. We got that. We got those headlines.
She did. If memory serves. Let's see.
Here.
I'll let you do it and then tell me.
All right. So
too lazy to do it. Here, fine, I'll do it.
So she's got let's see, purchases.
And there it is, Intuit right there. First one.
Yeah. Yep. Intuit, 34,500 shares in Intuit. She bought more Tesla, of course.
Yeah, she always buys Tesla. She's always trimming and adding and trimming and adding.
She's adding Nintendo. Interesting.
She's been buying Nintendo.
Has she? Okay.
Yeah.
I haven't been following the
How's GameStop doing today? See,
GameStop saw some volume on the open. It's up 4%, but it's down to the $42 level right now, 42.5. It opened up around 46. Obviously,
Wow. So if GameStop's up, that means AMC should be up too, right?
It's up 1.2. It's at 576 right now. It's but again, saw some upwards volume as the market opened, hit a high at 625, and it's been selling off since then.
We've got some rotation, ladies and gentlemen. We got some rotation.
Yep, perhaps into Bitcoin.
Well, I was going to say the reopening trade.
That's true. Well, so wouldn't you consider AMC a reopening trade, though?
Yeah, I know, but you would. But AMC and GameStop are their own animals right now. Right?
Very true. They're a little bit separate from fundamentals. That is very true.
You kind of have to there are some stocks that are in that group. You kind of have to take them by themselves, like Tesla too. Tesla kind of does its own thing. It doesn't really trade with the rest of tech all the time. It's not like Apple, like the FANG stocks are like super correlated. If one of them is up, they're usually all be up. But Tesla is like its own beast.
True.
AMC and GameStop are reopening plays in theory, but are also kind of their own beasts.
Yep. Tesla's down 5% today, by the way.
Okay. So what's the Nasdaq down? The Qs are down 2%. So Tesla's been weak. And that's why Kathy Wood's buying. She likes buying on the dip, I think.
That's true. Well, what's her price target? Like 10,000?
It's always changing. I don't know.
Yeah.
Financials as well. Good call, Mark. Financials. Okay, interesting. Financials are up 0.5%. So, wow. So you're just going to be watching this rotation throughout the day, right? Right, Steve? Just kind of keeping an eye on.
I'm definitely keeping an eye on airlines and reopening for the day. Some energy and obviously Bitcoin.
Steve Krause is the news master general at Benzinga Pro. He's also like the chief gamer at Benzinga and like the chief meme officer, I think. I
would love to have. Don't think I hold that title, but I love it bestowed upon me.
You're pretty fluent in the world of memes. I feel like.
I guess my Slack profile picture is Bernie in the chair. So
there we go. All right, Steve Krause. Thanks a lot, man.
Bye, everyone. Good luck trading.
It is 11 a.m. You know what that means, guys? That means we gotta go to SPAC Attack. SPAC Attack. Right now. Mitch, you ready? What up?
You out there. Let's get it started. The SPAC Attack is back, guys. And I know that everyone's going to be a little upset, but my brains of the show isn't here. It looks like you got Spencer and I today. So
down vote. Chris is not here. Down vote. Boo.
Where's the likes, guys? Hey, we'll do our best. I can tell you right now, Chris doesn't miss many days, but so if you guys want to give him some love, definitely shoot out to him on Twitter. Let him know that we miss you, Chris, and we want you back, man. We want you back on the SPAC Attack.
Yeah, Chris has taken a day off in like forever. So
hey, definitely, he deserves it.
We like it, but also we don't like it. So come back, Chris.
Hey, exactly, because at the end of the day, we're missing on the information, and my man is the brains to this show. So since we don't have the brains, we're gonna do our best to go ahead and fill in here. So we'll do our best. I'm going to start with the headlines and stuff and reading through here, guys. As you guys know, probably we didn't write these headlines. Chris helped us out, guys. So they'll be informative. So definitely smash the like button. Let's get into this. Hey, and what can we do? We're going to do our best. And I'll tell you one thing. I might even buy some SPACs today. So
you need to make up for Chris's absence by buying a SPAC live on the show.
Hey,
I feel like I
got a couple on my radar. So okay. I got some money in the account and ready to go shopping. So let's take us back to the headlines. Okay. All right, guys. So first, I'm going to talk about Sports Radar. I'm just going to let you guys know we might not be so good with the banners today because usually I help out Chris with them in the background and we got them ready. But I'll do my best to kind of fill in here. So Sports Radar rumor right now is reportedly in talks to go public via SPAC. You know, Sports Radar's valuation is grazing past $10 billion now. And this is important because there was a point last year where their kind of evaluation was closer towards a $5 billion, not a $10 billion. And so they're reportedly negotiating with SPACs and looking for somewhere between 10 to 12 billion. One of the big things here that Sportico reported was that Sports Radar would probably need a SPAC that had at least 750 million in the capital from its IPO to be able to craft a deal of that valuation. So some of the ones that I'm going to be taking a look at to see what happens with Sports Radar. I got SEAH on radar, guys, and also RBAC. ARBAC. So we'll see where this one comes. Another one that's mentioned, ACIC, which is Sports Venture Acquisition. But the biggest thing that I noted was that quote of 750 million kind of needed to get that evaluation. We'll see if they can get that kind of deal done today. Another one mentioned.
Wait, hold on. A couple things. Sports Venture is AKIC, not ACIC. Just to correct you on that.
AKIC. Thank you.
Also,
Saving my brain.
Yeah, Sports Radar is at its core really like in a way it's a gaming play, right? It's a sports betting play because you think about who their clients are. It's all betting apps, casinos. They provide the data. Think of it like news, right? It's like market news. It's like market news, but for the sports betting market, right?
What they're doing the best at right now, Spencer, is, and I noticed this, is that they came out with a product that can tell you if there's kind of being rigging of games and betting. And so this is going to be big for, like, let's say, not so much maybe even in the United States, but maybe even outside of the United States for countries that are getting into sports betting. They want to make sure that their games are not rigged.
Right.
And so that's a good thing behind Sports Radar there. Let's get into the next one. So Louis Vuitton owner, LVMH, and French billionaire Bernard Arnault has launched a blank check firm that aims to raise 250 million, guys. So that's not the biggest SPAC. Not the biggest in words for, like, let's say some big SPACs that are close to $1 billion or 750 million, like we were just talking. But it's interesting. They're going to be targeting consumer technology sectors across Asia. So definitely take a look at this one. I'll see what happens with this one. This is brand new, so we'll see. Of course, guys, I know that there's some lucid dreamers out there. So if you like CCIV, definitely smash the like button below. It's nearing completion of the deal, according to Bloomberg, that would be valued at $15 billion and could be announced as early as Tuesday. I know that a lot of people have this one on their radars, so I think even Spencer has heard about this one on pre-market prep. So we'll see what happens.
I have. It's hard not to have heard about this one.
Yeah, definitely, without a doubt.
All right, we had a lot of headlines here, guys. Like I said, just now with Steve Krause, it's Monday. We're catching up on headlines from over the weekend. I want to hit on GHVI, Gore's Holding, the fifth SPAC from Gore's Holding is up. What is it up now today, Mitch? I'm almost losing track. It's actually down today. Excuse me, but it was up 22% on Friday. You're probably wondering why. CNBC. It's that simple. Josh Brown mentioned on halftime report that he bought GHVI, called it a play on virtualization. So let's bring up the chart here. Mitch, you want to bring up the chart so we can see? So I mean, these things are super volatile. You can see it's down today, but that big move on Friday, you can see like a midday spike in GHVI, right? You don't often see midday moves like that. That midday spike, that was Josh Brown saying he bought the stock. Sometimes it really is that simple.
Yeah, sometimes it's really that simple.
Yep. All right. Forest Road acquisition. We've discussed this one. FRX. This one also a big mover on Friday, up 15% and kept going after hours. I was wondering. I asked our Newsdesk, "Hey, why is it up this morning?" And they were like, "Just continuation." I mean, this thing got mentioned several times on CNBC on Friday. This is the SPAC with the former Disney executives behind it. Shaquille O'Neal is behind this one, and it just hasn't stopped.
I think another thing that helped it there was the announcement of the next one, 2.0 coming. So Shaq announcing that next SPAC kind of pushed this one a little bit forward, as they already have kind of announced who they're going after. And so people are thinking like, hey, the next one up. And definitely this was one that Chris mentioned months before it came out, guys. So definitely smash that like button. We try to get you these early so that you can get into these near that $10 pricing, and we'll continue moving on here.
Speaking of early, Michael Dell, you know him from Dell Computers, he's filed a $500 million SPAC. The ticker is going to be MSDA. God, everyone's got a SPAC. I feel like we need a SPAC, and I'm not even joking because Michael Dell, of course, founder of Dell Computer, has taken Dell public and private and public and private. Is now getting into the SPAC market. So I don't have any insight as far as what he could potentially buy. But Michael Dell, you would assume technology, you would assume computing, somewhere in that realm. EXPI. That is one that we've also discussed on this show. An article from the Chicago Tribune, I believe last week or over the weekend, said that an air taxi service from Blade could be launching in Chicago by the summer. It would go between downtown Chicago and O'Hare Airport. I wouldn't be the first one on that sign up list, but maybe we'll sign Mitch up as a joke and see what happens. But interesting from EXPI. And then GRAMF, Cannabis SPAC. I saw Jay-Z on CNBC this morning talking about it. Jay-Z is super active in cannabis. He's got his own company that was actually part of a SPAC that traded on OTC markets, and then it was bought by a SPAC. GRAMF is that ticker. And I don't know if y'all were watching CNBC this morning. He was on with a wild hairdo, and Jay-Z is just part of this company, right? There are other brands. It's called the parent company, I believe, right? And Jay-Z's company is one of the brands in this conglomerate. But they're going after California. They're going after minority-owned businesses. And so Jay-Z was on CNBC talking up his SPAC, GRAMF, this morning. Okay, what else can I get to here as far as headlines? Oh, yeah. This was interesting. I saw this as far as Penn National Gaming. Penn National, they had a couple headlines this morning. One of them was they entered into a partnership with Rush Street Interactive. It gives them access to the Ohio, Maryland, and Missouri markets. And they also had a press release this morning, Penn did, highlighting a deal where they get access to New York through a partnership with Rivers Casino. So Penn National making moves this morning. Penn, of course, the one of the best of breeds as far as SPACs or former SPACs go. So.
I mean, if you take a look at the charts, I mean, they're definitely leading the sports betting scene. I mean, you
their ads. Really say, Mitch, you wouldn't know this because you're not in Michigan, but their ads are everywhere, on my Twitter, on my Reddit, on the billboards on the sign on the highway. I can't escape them. Seriously.
No, definitely. I'm going to take a look at these, especially when you start seeing combinations with the best of breeds. That just goes and helps the smaller one get some revenue, get some kind of data also. And I'm sure they're going to go ahead and kind of share some of the strategies that they're going after. And this will help Penn and help Rush. So I'm definitely excited about this partnership. And as we keep seeing more and more access to different kind of revenues, and whether that be Ohio, Maryland, or Missouri, you're going to start seeing these keep getting that run. So RSI is one that I'll definitely be looking for to kind of bottom out here. And also GNOG is in kind of that same sector. I know that a lot of people have been paying attention towards these charts. RSI, I'm looking for more of an 18 look, and then GNOG is looking more like a 16. But both of these kind of looking interesting as they're bottoming out. All right, let's get into kind of some of the deals for the day. So we have about 5 deals on the day. First one up is TDAC. So it enters a definitive agreement with the lottery.com. This one's an interesting one. I mean, the deal is kind of an interesting one, as gaming has been kind of moving. But as we can see on the day, it didn't really kind of break out there. It kind of just turned around there from that 16 price point. And we'll take a look to see if this one continues. But definitely kind of a turnaround story there. And sometimes when the day that you announce the deal is very important. We were talking about this on pre-market prep, but let's continue moving on to the next one. So NSTB is one that's going to be merging with Apex Clearing. So this is very interesting, as Apex Clearing has been in talks in the news because of the whole kind of Robinhood thing. But hey, this could be also a good opportunity. I was actually looking at it today. I have an order out there at 1050. I don't think I've gotten filled, of course, today, but I'm looking to maybe try to grab this one on this pullback, just because I feel like it's a little bit of an overreaction because of the Robinhood thing. But if we take a look here, the projection revenues, right? So 2021 projected revenues of 290 million and revenues of 23% there. And then projected revenues in 22 go up to 346 million and then 19% there. But the interesting one here is a 450 million pipe here. And I think in the long run, if you get this one on a cheap, it could be a potential to see it back up there to 1160s. I'll see if I get a chance to get in this one today. And we'll see a little bit later if it kind of dips down and it gives me an opportunity. It's right by that 1080. I'm looking for it to cut down closer towards 1060s. And then maybe I'll just jump in this one today and you guys will see me grab it. Let's go to the next one here. What do you think about this one, Spencer, before we kind of move on?
Yeah, this one is super interesting. I've interviewed the CEO of Apex Clearing before. His name is Bill Capuzzi. This is like the plumbing, right, of the markets, right? This firm provides clearing on. I'm sure we all know about clearing now after the GameStop fiasco, but this firm provides clearing for a lot of retail brokers. Not all of them. I don't know exactly who uses Apex and who doesn't. We know Robinhood does not, right? They do their own clearing. But clearing is going to be, in the conversation, which is something weird to say because it's like the plumbing of Wall Street. And this kind of stuff never gets talked about, but it will be talked about now in light of what happened with GameStop and in light of this SPAC deal. This is a very, very large deal. I'm interested. I don't own NSTB, but I'm actually interested in potentially like a longer term buy and hold here. Just because Apex Clearing is, you're essentially what you're getting is the plumbing of the markets, right? And so you're basically making a play on retail order flow, and I like that. So I'm interested here.
Yeah, long term. Also, it has the crypto clearing, and I think
true.
that's going to be a big factor in this one. Long term, definitely. I mean, if it's going to do clearing for crypto, I think the revenues will be there. So let's keep moving on here. NGAC. So moving with Exos Trucks. And a commercial electric vehicle. So another electric vehicle play for us here, and that's NGAC.
Can I show you their site? I want to show you their site here.
Yeah, go for it.
Look at that. Okay, so
it looks like a workhorse competition.
That looks like a UPS truck. Okay, so they're just providing. Let's see here. Let me just keep scrolling. Yeah, this is a workhorse competitor.
Oh,
what happened with workhorse, Mitch? Did you ever hear about that?
Oh well, I mean they're still waiting on the the contract, right?
Okay, so you know what it looks like? It looks like it's similar to Hyliion in that they allow trucks that can be converted. I think they can retrofit. Yeah, I think that's what this is. Maybe it looks like it. They have a UPS truck on the site, so it looks like they can retrofit.
Well, I'll tell you what looks interesting here. So the revenues estimated in 2020 was 3 million. 21 projected a 14 million revenue. And you ready for this one?
Mm-hmm.
This is the big jump. In 2022, they're projecting 271 million. So look at that jump from 2021 to 2022. I mean, that's a big jump. So definitely, hey, I'd be definitely looking at this one maybe as a long term, just because of those projected revenues. I mean, if they had those projected revenues, they had to have gotten the numbers from somewhere. And we'll take a look as this one keeps going. But if you look at the chart, it's kind of interesting. It washed out completely at the morning, and right at 9:15 it spiked right back up. It's kind of interesting. It's almost already back up there towards that 1440 where it made the open essentially here 1420s, and it drove up to 1440 and quickly turned around at 7:45 in the morning here. It's already back up. So interesting chart there with that washout and then in the kind of cover there. I'll take a look at this one as we continue going, but definitely you can see the interest in there as the recovery came and the volume came through.
again, the big thing with these companies is how firm are their orders, right? Do they have committed orders, signed orders, or do they have soft orders? That's always the question.
All right, so the next one, a big one, actually taking a hit here. So FAII and getting into ATI Physical Therapy, an outpatient physical therapy company. And so one thing I'd say about this is that
not sexy, Mitch. Not sexy.
Not sexy. That's what happened here. I mean, I don't think it's kind of necessarily a failing business here, but what ends up happening is just not the name that was expected. And when it's not the name that was expected, this is what can happen. And I don't want to be the bearer of bad news, but this is the same thing that could happen on CCIV. So definitely be careful out there, guys. You got to know what your risk is. And look how this one turned around. People were thinking this was going to be a higher hype name, and this one turned around from 1260s all the way down towards 1040s today. So definitely you don't want to get caught in some of those moves. And the best way to do that is diversify in SPACs, guys. It's not about putting all your money into one play, because when you do that, this could happen. And so definitely risk adverse is kind of the way that I like to stay. And you got to respect that. 900
therapy clinics in 25 states is what ATI has, which, okay. I just, I can't see myself wanting to invest in physical therapy locations. Maybe I'm wrong. It just, you know what I mean? It's not as sexy as EVs. It doesn't jump off the page, right? It doesn't jump off the screen. So.
Yeah. So one thing we always try to do is stay with the social trends, right? And that's just not a part of them right now.
Yeah.
All right, guys. So the next
one more deal.
Up,
yeah.
SVAC.
Finally.
So this one's an interesting one. And correct me if I'm wrong here, Spencer. So it's Sexterra or CXterra?
Sixterra, I think. Sixterra.
Yeah, you already know. Yeah. So the biggest thing here, guys, and we have some information by Chris, so this is going to help us out here. So he wrote an article just on this morning. So one of the things that he's stating here is that investors will have another option for the data center provider, with the third largest company in the sector hitting the public market via SPAC. And so they're going to be via SPAC versus via the starboard value. So you're looking at SVAC. Yeah. Let's go ahead and put up the chart here, so I'm not looking at the wrong chart here. And so the interesting one on this one was this kind of linear upward move really gave you that sense that this company was expected to do a big buy and maybe a trending buy here. So one of the things is this deal values the company at $3.4 billion, which will give Sexterra $654 million in gross proceeds. The shares will trade as CYXT on the Nasdaq. So if you could put that on as a banner there for them, Spencer, CYXT on the Nasdaq, and this deal is expected to close in mid-2021. Current starboard valuation on the acquisition, shareholders will own 11% of the new company. I think this is very important, as people are not paying attention to this part, the whole part of how much value they're really getting into that next company. And I think this was what mentioned over the weekend by Chris and CCIV. And pay attention to that, guys. I think it definitely does make an impact in the long term. Okay, so this company was formed in 2017 by the carve-out a data center business from Lumen Technology, and that's LUMN. And so it's a pure play on data storage industry. And so there's a lot of data centers they have. They have 61 data centers in 29 markets around the world. They serve 2,300 enterprises and service providers and government customers. Customers include Cloudflare, Fujitsu. How's that said again? Fujitsu, Hewlett Packard, NVIDIA.
I have no idea how to wait. I don't have no idea how to say that.
That's I've heard of that company before, but definitely a hard one there. But they operate in North America, Europe, and Asia. I think this is important because they have that international exposure. So that definitely does help. So Lumen's an investor in the company and has the largest customer making of up to 13% of the company's revenue. The top 10 customers represent 21% of the revenue. So definitely showing that those top customers are going to be very important in this company. The company's top 20 customers make up 42% of the company's revenue in the last fiscal year. So definitely paying attention to those. The the goal of the yield for the growth is looking like 20% for 3 to 5 year contracts with customers. So we got to definitely see how kind of the secular tailwinds in this sector affect this company. One of the things that is stated here is that they had revenues of 690 million and adjusted EBITDA of 213 million in the fiscal 2020. And they're guiding in for fiscal 2022 revenue to hit 719 million. So revenue is expected to grow around 7% annually from fiscal 2021 to fiscal 2025. And so we'll definitely see this company. Competitors that you could state would be Equinox and Digital Realty. So EQX and DLR. So we could pull up those charts and see how those kind of compare here. Let's take a look here. See what we find here. So that's EQX. EQX is actually downtrending a little bit here, but it's made a move from about $4 in June all the way up to 13. So that's an interesting chart there. And then DLR, you can see it's been kind of sideways trending upwards. Not the highest linear kind of move, but definitely you're seeing that move still continue on up there. Had a high of 165. We're down towards this 130. Got a couple bottoms. We'll see if this one comes right back up. I think you got to keep your eyes on most of these to see when you're going to start seeing this move. But definitely take a look at this industry and do a little bit more deep in research in this company. I don't know too much about this sector, so I'm not going to make too many comments on if I look at this company bullish or bearish, but definitely interesting. All right, let's get to the calendar because we're taking forever, Spencer.
Oh, man, so many headlines.
I don't know how Chris does it.
Do we have a calendar video or no?
No, we don't have the video
Yeah,
right
we
now,
do.
But
don't we? No?
No. That one's an older one.
That's older? I shouldn't play it? You're saying
Nah,
play it?
no.
Okay, calendar. That's enough of headlines for one day. February 25th, 3 days from now, is the second vote for the SBE ChargePoint merger. Get your stuff together, guys. So Switchback Energy ChargePoint scheduled to vote later this week. That's kind of the only vote on our radar for this week. There are a few, about 4 or 5 votes scheduled for March. We, of course, have CFII is voting on its merger with View Inc. So that's scheduled for March 5th. IPV scheduled for its vote with Ava on the 11th. ROCH scheduled to vote on their merger with Pure Cycle on March 16th. And then NBAC scheduled to vote on their merger on the 17th. And that's pretty much all the SPAC merger votes on our radar for the next 3 or 4 weeks or so. That being said, we are coming into the back half of the earnings season, and this portion of the earnings season has a lot of SPACs or former SPACs reporting. So that gets us excited, right? Who's reporting? Tomorrow, Hyliion. We like that. HYLN. Okay. Thursday, Velodyne, VLDR. Also on Thursday, Fisker, FSR. Friday, DraftKings. And then next, Monday? Yeah, next Monday is Clover Health. So we got a big week of SPAC earnings, ladies and gentlemen. We got 5 major SPAC or former SPACs reporting earnings in the next week. I'm hyped. I'm super hyped. Again, because at some point, the fundamentals are going to have to match up with how these things trade. They all got massive run-ups into the merger. Some of them sold off hard afterwards. We don't really have any frame of reference, right, for how these things trade in relation to their fundamentals because they're so new. And we don't have, unlike the IPO process where you have book runners matching up, working it out amongst themselves what the stock should trade at after an IPO. We didn't get that with these SPACs. There's really no frame of reference. So you want to see some fundamentals. You want to get some history out there to see, okay, how are these things going to react to real fundamental news and trade after those earnings come out and trade at a premium or trade at a discount. We don't really know. I mean, DraftKings has some history. We have some idea there, but like Clover Health is so new. Fisker is so new. So this is a big week, right? At some point, fundamentals do matter. It's not just about the pre-deal run-up or the post-deal sell-off. It's about earnings. That's why we own stocks, right? To get a piece of future earnings, in theory, at least. What do I know?
Yeah, one of the things that I'd say about earnings and with SPACs is that goes into the evaluation phase, and that's important, guys, because at that point you can actually start looking at evaluations and seeing if they make sense. Because beforehand, I mean, you don't really know. Before you get the actual definitive agreement and the merger, you just don't know the evaluation, and so it's a strict guess at that point. And so once you get towards these earnings, that's when you can actually start looking at it and being like, okay, so this is how much earnings per share they're making. This is how much the SPAC actually owns of that company. And then the fundamentals actually start coming into play. It doesn't mean that it's going to drive or control the stock, but definitely it gives you an ability to at least start evaluation.
Yeah. And, all right. And you want to see, is earnings growing? Is it not growing? How does the stock react? Does it sell off in light of a good report? Does it go up in light of a bad report? We don't know these things yet. So super critical time for these companies. These first few earnings reports are going to be very interesting. And that's why, the SPAC stuff isn't going away, right? Because even if something happens and there was like no SPACs announced from tomorrow onward, we still have like 8 months of like hundreds of SPACs that have already been announced that are then going to go through their mergers and they're going to start putting earnings. And we have this whole lag period, right, where these companies become more mature in the public markets. And so even just forgetting the SPACs that have yet to be announced for a moment here, the SPACs that we've already got are still going to be in the news and still going to be on our radar. So we have a lot to pay attention to for indefinitely, really, because we need to follow these SPACs post-merger into earnings and see how they actually end up growing or not as publicly traded companies. So,
all right, so let's go ahead and let's get into our watch list time here, guys. We got a couple stocks moving, so definitely want to get in towards it and also talk about some that I'm watching and guys and some that are trending. Got some money in the account, so might take some trades. So let's get into the watch list. All right, guys, so here we go, pulling up the watch list here. Going to go ahead and take a look at some of the best movers of the day, and then also maybe something we have some opportunity in to maybe get some trades in. So let's go ahead and take a look. First one up first, we were talking about it, the Shaq SPAC up there almost to $17 now, up about 20% on the day. This was one that I'm still kicking myself. On day one, on the 11th of January here, well, hold on. Let me get into the daily so I got the right day. So on the 15th of January, Chris was mentioning to me, yo, Mitch, you getting into FRX? And I was like, man, but it opened up at 11. I don't feel too good about that. So, you know me, guys. I was looking for the 10s and under 1050 and definitely should have taken an attempt near this 1050, 1020 area. And I would be waking up today, boom, up about 60-70% and feeling good. And that's, I think, this is definitely the best way to approach these SPACs. It's not necessarily buying up today and then trying to get that 20% mover, because the risk becomes the move down. And I don't like to give myself too much risk in SPACs, especially because they're lower volume traded. And so because of that lower volume, you can get volatility in the price, and prices can move significantly in between the spread. And so that's something to keep in mind when you're trading these versus as kind of swing trading or investing into these. Of course, I want to mention QS, as we've seen that reversal, and it really does look good on the chart here. You're seeing that bottoming action near the 60s. It looked like it reversed there right on the candle that we talked about, guys. We talked about this candle right here on the 1st of February, that it was an inverse hammer and looking like it wanted to reverse trend. as it was a third bottom touch there. And what ended up happening is the earnings and the release of the battery news really swung it back, gave it the catalyst, put it back the story hot. And I think you might see this kind of gap clearage between 70 and 85 get done this week. So keep your eyes and radars on that QS. All right, I'm going to keep moving on here, try to touch a couple more. I know Helion has those earnings, so this is going to be really interesting, guys. Earnings 2 days from now. If you have Benzinga Pro, you'd be able to know immediately. But let's see if it can get back above that high. You know, we had a high here of 22.25. I'm thinking with good earnings, you probably get up near that level. With bad earnings, right back down here to 16, 15s. So it's definitely going to be interesting as this one gets into earnings 2 days from now. This is an interesting one. I mentioned the Spencer here is SREX. If you like some space, I know you hold UFO, right?
I am long a very small piece of UFO.
Hey, there you go. Hey, not too bad. Not something I would definitely ignore. I mean, you've seen the space stocks. It's definitely interesting here. And one thing I'd mention about SRAC and NPA is that you're going to get that Cathy Wood ETF soon. So these could be potential drivers to drive these companies and really get these moving. So I'll take a look at to see if any of these kind of get that drive. All right, so one that I'm thinking about, guys, and it's actually on my radar of my watch list here, is FCAC here. That's Falcon Capital, guys. So I'm taking a look at this one. It's hanging around 12 right now. I kind of wanted to get it into the 1150s. I'll show you why based on kind of the kind of, let's get into a 2-hour chart here. So you guys can see there's multiple kind of this bottoming action right here. Let me get a horizontal line here. So somewhere near this kind of 1150s, I was seeing kind of every time it pulled back, it sprang out from kind of that level when it clears that level. And so that's kind of the level where I'm trying to get into. Today, you know, we got down towards a level of kind of like this 1180s, but it's interesting to me because of the volume that's in this stock and the way that it keeps reacting up here. It had to move up towards 1380s and also move towards 1350s. And so I'm thinking if I can measure my risk correctly, somewhere near this 1180 to 1150s, I'll be looking good in this stock. Of course, it's a little bit too high for me right now at 12s. As you guys know, I'm more of a $10, $11 buyer, so I'll stay out of this one right now, but it is getting interesting to me. All right, let's go ahead and take a look at the chat. I want to catch up, see if there's anybody talking about anything.
Yeah, a bunch of tickers being thrown around in there. Let me scroll back to the top, and because there was a bunch of tickers that were being asked about. Actually, before we do that, can I just have you looked at any of the SPAC ETFs lately? Because I do own the SPCX.
No, man. I'm more of a single stock kind of swing kind of guy, but let us know what's going on with them.
Yeah, so the SPCX, so there's now 3, right? At least to my knowledge, there's 3 SPAC ETFs, right? There's SPCX, there's SPAK, and there's SPXZ. Let me pull up my chart here. So this is all 3 of them. It's very hard to see. But the red line on my chart is SPAK. The blue line is SPCX, the one that I own. And then the candles is SPXE. That's the newest one. This is the Morgan Creek SPAC ETF that just made its debut like 2 weeks ago. So it's much newer. If we were to get rid of that, get rid of SPXE because there's really very little price history there, we can actually zoom out on the other 2 and see here. Let's just compare SPCX and SPAK because those have a little bit more price history than the Morgan Creek one does right now, SPXZ. So let me just get this up here actually. Compare SPXZ. Make sure yeah, okay.
My question is, when the leverage one come out?
I don't know, man. I don't know, man. So, okay. So, as you can see here, we got a bit more price history on these two ETFs. SPCX has been the winner. This is, of course, an actively managed ETF. I haven't done too much research on the other two, SPAK or SPXZ, but SPCX, which is the one from Tuttle Asset Management, was the first SPAC ETF. And he's actively managing, right? He's buying and selling. He's not rules based. He's not tracking an index, and so he's buying and selling pre and post merger SPACs. Has outperformed the SPAK ETF for the moment. That doesn't mean it'll always be that way. It probably won't. But I'm keeping an eye on these. I do own a couple of SPACs, right? I individual SPACs, but I'm much more interested in the performance of these, because I will very likely end up selling the two SPACs that I own. I own the Starboard one that we just discussed, the SVAC, and I own PSTH, which is from Bill Ackman. I will sell those eventually, right? Those are more for swing trades. I'm playing the run up into the deal or whatever. I'm much more likely to hold this SPCX ETF. So I'm watching this closely. I check it probably at least once a day just to see what it's doing. But I will have more information on the other two SPAC ETFs on my ETF show Fridays at 2:30. And Brandy's saying I had them reversed. I apologize, Brandy. But yeah, so I'm watching the SPAC ETFs. Just know that.
That's something that honestly I'm pretty sure most people that are investing in SPACs aren't even taking a look. But hey, it could be a good way of also diversifying your SPAC portfolio, including these in there, so that
actually
maybe on certain dip days.
Brandy is. I'm sorry to interrupt. Brandy is right. SPAC was the SPAK was the first ETF. I apologize with that, but SPCX was the actively managed one, which is the one that I own. I apologize. All these letters, man, it's confusing.
It ain't easy. It ain't easy. It's like a brand new asset class.
It ain't easy.
Essentially, I mean, you're going to get so many volumes. And then the thing is, these change names. At least when they change names, it's even harder to kind of stay with them. All right, so I'm going to go ahead and pull up the watch list here. So one of the things that I wanted to do is kind of go over certain ones that are trending and certain ones that I'm thinking about getting into. So I mentioned one of them. Another one that I'm getting into, and you guys in the chat can let me know how you guys feel about this one. This is CRHC. That's Cone Robbins. It's kind of interesting, just because I've been seeing the kind of the spikes and this kind of linear move, right? And so this is what we kind of saw, the same kind of look in kind of that starboard was look how you could kind of just see it just keeps trending on upwards, and this is what's getting me a little bit excited. The biggest thing that I would like to see is for it to dip down below 11. So right now we're near this kind of 11.16. If I could get into maybe 1090s, 1080s, that would really excite me. And I could see this one maybe potentially getting that definitive agreement coming up soon. One that I'm thinking about getting into, adding, is my SPNV, guys. We'll see if we get an announcement this week. It's looking interesting. This chart is up there by 1198. I'm looking to see if it can really spike up there and kind of hold this 1190s. I'm in near kind of this 1130 area, so that's what seems interesting to me on this one. I'm trying to add somewhere near like 1180s, 1150s. I'll let you know if I get an ad, guys, before this one kind of rips off. But it is an interesting chart for me. If you draw a trend line, you'd get it to go right underneath this kind of 1150s. So definitely that's kind of the line in the sand right now, 1150 on that one. All right, let's catch up with the chat here. Seeing a lot of people mention Ajax. Seeing a couple other ones mentioned. RMO. Yeah, it's on my target, Chilled Monkey, for sure. I like the name too, Chilled Monkey there, mentioning RMO, getting down there towards that 1443 now. I'm looking for 14, and I would really start kind of loading in there. We're seeing this pullback towards today. It's at 1440s today. Let's take a look at the intraday, see if it's gone down towards that level. Looks like it's made a low today of 1437. So gonna watch this one, see if it kind of clears down towards 1425, and then that possibly could be my first entry, and then kind of dollar average in this one. I think I like this story long term in RMO. Also, XL will be looking for a cheap discounted price on this one. Another one that's been taking a really hard dip lately. Let's see if it gets down towards this 16 or 14 area before we get excited on XL. All right, so let's go ahead and let's get into kind of the time where we can go over everybody's stocks, some ticker time. Go ahead and put it up there, guys. If you guys want one of these stickers mentioned, let's go ahead and let's get into them.
Hey, Hey, as people are dropping tickers, can I just pull up a cool chart that I saw on Twitter
Let's
this morning?
do it.
Okay, so drop your tickers in. We'll discuss them. But as y'all are doing that, I want to bring up this very cool chart. This is from Deal Logic is the source of this information here. All right, you all see my screen here. This is the amount of capital raised via SPACs right now. Mm-hmm. So there has been 144 SPACs announced this year that has raised $44 billion. We're basically more than halfway through 2020's record total, and it's midway through February.
Where'd you get this? I think this is actually incorrect. I think we already passed 2020.
Oh, really?
That's what Bloomberg.
Really?
That's what Bloomberg has told me.
Is my chart out of date?
It could be. It possibly could. You know, one thing I was seeing Bloomberg actually talk about this specific thing that in kind of 2 months we've kind of matched the 2020 capitalization that was raised and money that was raised. So we'll
okay. Then what about this one then? This is also from Deal Logic. So pricing is as of last week there, and you can look at the number of hedge fund owners of each of these SPACs, right?
This one I like. I like this chart.
Yeah.
Here.
So where's the quote unquote smart money, right? Mm-hmm. Well, no surprise, a lot of them are buying Bill Ackman, right? They believe in Bill Ackman, PSTH. That's his. That's the largest SPAC in the market, and that's his. A lot of hedge funds in CCIV, very interesting. Very interesting. A lot of hedge funds in WPF, CRHC, AACQ. So again, I saw this on Twitter this morning. The source here is Deal Logic. That's why Twitter is the best, and I just wanted to bring that up there for you all to see.
Yeah, I think this is an interesting one. There is that eMerge Technology one. This is actually down towards 1050 right now.
Interesting.
So you never know. I might just grab it right now. Hold on a second.
Hold on a second. Oh my God. All right. After that, we're doing ticker time. I swear I got us sidetracked, but
yeah, this one looks interesting to me. Let's take some shares. Why not?
Right now?
Yeah. Why not?
All right. Let me call my broker.
ETAC. Here you go.
Let me call.
Let's take a look here.
I'm gonna call my broker. I'm gonna ask him to route an order. No, I'm not. I don't have a broker. Why would I do that? Mitch, what platform do you use?
Well, I use a couple. I'm not gonna lie. I don't stick to one, because if you stick to one, sometimes you're gonna run into some problems with one, and then you're looking at yourself like, what do I do now?
Yes. Okay, wait, real fast. Which ticker are you looking at?
So right now I'm looking at, this is eMerge. This is ETAC. So that's what I'm looking at right now.
On you.
I can see it. They're trying to beat me to it. I'm trying to get in here. Well, let's see if I can get in here. I put an order out at 10:55. I'll let you guys know if I get filled here. Let's start going through some tickers in the watch list here, or well, from the chat here, and then we can check on to see if I grabbed it or not.
Okay.
All right. So orders out there. We'll see if we get filled. Let's go ahead and go to the comments here. What are we seeing here? What do you see a lot of?
Let's see. I'm seeing IPOF.
Yes. You know what the funny part is? That's exactly the one I was going to grab. So good job, Spencer. Let's go take a look at this one. I know that Chris mentioned to me, and I'll give the full disclosure. I think Chris added on this position today, and man, he knows how to sometimes add. I'll tell you that right now. I'm a person that know my technicals, and I can look at things, but man, sometimes he does get some great ads here. He looks like he got an ad there today, and it's already up there to 1560s. What I think Chris is looking at is that he's expecting a deal being done pretty soon. Either it's IPOF, or I also heard him mention IPOD. And so both of them are kind of trending upwards today, up about 5%. And you know, there's definitely some bottoming on this chart, so at least he has some support to go off of. And this is IPOD's chart, not IPOF, but definitely both of these are in play. Most people think that they could possibly get a rumor to come out this week, so that's kind of what you're seeing there. HOL, I'll just mention Siggy. That's kind of like that same play in SRAC. I think in the long run, you might see some people jump into that one because of the Cathie Woods Space ETF supposedly coming out. We'll see what gets added towards that, but definitely that's one that could be added towards it.
What about THBR? This one is Indie Semiconductor. That's the company that they're merging with. There is, of course, a massive global shortage of semiconductors right now. Supplies are constrained. Demand is through the roof. How's THBR doing?
Yes, so this chart looks interesting to me because what I'll do is I'll draw a horizontal line from a prior resistance, right? And so you see these wicks up here. This is from the 6th of January and also the 11th of January. They're up there towards about 1087. And then you got another one, 1090s. So that's kind of the interesting look here. If you zoom in on this 25th of January, it actually came right towards that level, 1087. So this is why important to know your resistance and support, because that could have been an opportunity to get in right there. And so I'm going to start looking to see if we can measure into this one closer towards 1150s and 11. And then you could risk down towards that level, or maybe even towards this level, which is at 1055. Give yourself a probability of it coming back towards 15. That's looking interesting. I think, you know, this is not a bad one in kind of the industry that it's in. Story-wise, it could get hot, but it definitely needs some catalysts here. It's been downtrending for what? 1, 2, 3, 4... I mean, it went sideways a little bit here, but like 4 weeks, a month, and then like a month of sideways action. So definitely you need something to get it going there.
What about SFTW here? This is Black Sky is the name of the company that is merging with Osprey Technology Acquisition Corp, SFTW. This is one of those like satellite data intelligence, GPS, CIA type plays.
Yeah, so with this one, you got to just look out for some pullbacks. I think you're a little bit late to the boat if you're trying to get in now. But this is why you got to get in near those 10s and 11s, guys. You could have been in this one, sitting in this one near 1050s, 1080s, and it popped up the first day to 14, second day to 15. Now we're up there. It had a high on that first day, yes, on Friday towards 1750. Looks like you're not really breaking out through the 1650s. That would kind of concern me because it had such strong momentum on the second day of the kind of announcement, and then it kind of just turned away. So you could be seeing a pullback in this stock. I would wait to see some pullback action, because if you look at the 15-minute, you kind of got this 1 up, 2 up, 3 up. It needs to pull back, could pull back closer towards this 1450 to regain some volume. And you're just not seeing that volume pile in anymore. On Friday, the first kind of 15-minute candle, you got 3.2 million. And then if you look back, you'll see like kind of 2.2 million shares. But just today, in this first 15 minutes, we only got less than 1 million shares traded. That shows you something, guys. That shows you that the bulls aren't just taking this one off. It's definitely playing some evaluation between that 14 and 1650 area.
Print in chat mentioned VC. I'm glad you did, Print. This is the SPAC with merging with Re Automotive. Programming note, CEO of Re is joining us this week, Wednesday, 11 a.m. Eastern Time. SPAC Attack. Mark your calendars. VC.
Yeah, this is one that I'll definitely be taking a look at, and we'll see how it really does move there, because at the end of the day, we're interested, but this one has pulled back massively. So definitely take a look at the chart. Maybe you get in the discounted price, but there was a lot of volume that gapped up from this kind of 1330 area. So, look at me looking at the wrong one here. Got you. 10x. So we're getting this bottoming action towards 12. Let's see if it gaps down towards this 11, because we had a super gap up. And when I have those super gap ups, I look to see if the gap fills. And this happens often. I don't know if you kind of agree with that, Spencer, but those gap fills, they're important to watch.
Yeah, there's no rule out there saying a stock always has to fill a gap, but gaps exist. And the reason, it's almost like it's like a cliche, but the cliche exists for a reason, right? Mm-hmm. Stocks tend to fill gaps, not always, but they tend to fill gaps.
Yep, or even kind of test it. If you had that big gap,
definitely great point.
You'll test that area, that kind of, because there's no price discovery there. And I think that's the biggest important part there is the price discovery when it tests it.
Okay, BTAQ Naveen, I see you.
Mm-hmm.
Burgundy Technology, this one is run by the former CEO of Hewlett Packard. They're looking at some sort of enterprise technology play.
Yeah, so the rumor to this one, and it's been talked about. You know it, Spencer. eToro has been talked about this one. We'll see what happens. I like this one near the support, near this kind of 1080 look. If you can get it underneath 11, I think this one's interesting to add to the portfolio. One of the things that I'd mention is you see this daily average kind of this volume, right? So there's like 3 million shares traded. Then there was up to 4 million shares traded. Now we're pulling back towards kind of underneath 1 million shares traded. But on Friday, we got 2 million shares traded. So to me, this is starting to get that volume back, and we got to watch to see if it's going to really get some strength here at 11, reject breaking 11, and really start pushing towards those 1140s, 1150s. Interesting one, and could make an announcement. So definitely one to maybe have in the portfolio. I'm starting to get a little bit more excited about having these closer towards 11 than 10. And so the risk becomes $1 essentially, but it's not the worst risk if you can see a potential maybe 50% or 80% on the agreement.
Did we hit on Romeo Power yet? RML? I don't remember.
Yeah. That was the one that I'm looking at it. I'm looking at it, guys. It's bottoming out. We like the story, right. Chris and I, but Chris, I know, took a position near the 14s. I'm trying to get in actually nearest 14, so I'll take a look. But really, right now we're kind of pulled back. One that I like that I'm in is Bullhorn. Bullhorn, I actually got in this one, guys, at 10.06. It's literally my best entry for a SPAC, because really, I mean, you look at this one, and I got it back here in January 27th on this pullback, the big pullback day, and now we're up there towards that 1030s, and essentially, I only have like the lowest this stock has gone is 980s, so I'm looking at like a 20-cent risk right now for a potential for it to just keep going. If I could add more shares down there towards that 1005, 1006, maybe even 1010, I'd add. But I haven't gotten that opportunity, so I'm just going to keep watching this one. And if it goes, and I'll let it run.
What about PDAC? It's either Peridot or Peridot. I'm not sure. They're merging with Lee Cycle, which is according to them at least, North America's largest lithium-ion battery resource recycling company. I guess that's where they got the Lee Cycle name. I don't know if they have a vote scheduled.
Let me take a look here.
I don't know if I see that vote scheduled yet.
Let's take a look here. So I'm going to go based off of the chart here for you guys, and then you guys can, while Spencer looks up that information there for us. There you go. I got you. All right. So one of the things that I'm seeing this one is that it did kind of this drive up, pull back, drive up. So see if we can come closer towards this $12 area in 1150. But man, massive amount of volume. They got stuck up there near that 1550. It could have been people taking profits, but 17 million shares were traded above. And so you do have some kind of higher volume up here and some selling pressure up there at that 14. It really rejected 14 hard. So I think you got to be careful with that level when you get back up there.
Yeah, they just said in the release second quarter. So sometime in Q2. We don't know when. We're obviously a ways off.
That's how SPACs go. You know, I wish they gave us the exact dates beforehand, but that's just the way it goes.
I mean,
so you want to stick with
usually,
the news.
That's usually how deals go, right? They say, "Oh, the deal will close like sometime in Q2, sometime in Q3." We don't really know when. So that's not unique to SPACs. That's an M&A thing. All right, 11:58, Mitch. We've got 2 minutes left. Should we do a couple more?
Yeah, we can do a couple more, and I have been trying to get into that ETAC.
Yeah,
but
how we doing there?
They boosted it, man. They boosted it to 10:59. I'll just hang out and wait, guys.
Don't be like Dennis. If you want to get in, get in. Okay, don't put in your limit orders and you complain. I missed it. Listen, Mitch. I would have bought ARK, like ARKW. I would have bought that like 3 months earlier if I hadn't been a little baby about my price. I had to get my price.
Hey. Well, you got to determine what's the risk, right? I mean, that's really what it's all about. It depends also on the share size, right? Because if you're getting 1,000 shares, it's completely different than getting 100 shares at that price.
Of course.
And so that's what you need to figure out. One thing that I try to do, Spencer, and I don't know if you've been trying to do this, but with a free commission environment, one of the best things you can do is kind of size into your position versus putting in your whole order in one position. And so, like, I'll put in levels. And how do I determine my levels? I'll give you guys a little secret tip. I literally look at the market depth and I look where the big orders are.
Level 2.
So, yep, the level 2. So I'll take a look at it and see, like, hey, there's a 1,000. Well, it's 1,000, but it's 100,000 shares at this certain level, and I'll put my order right above their level so that if the bid comes down towards their level, I'm getting filled probably on the ass side, but at least I'm ready to get in near that level, and I look for these big boys and I try to attack the big boys' orders. I'm trying to get a better pricing than them, and then let kind of the momentum of the daily chart show me where it's heading. A lot of these bigger traders hang out there on the bids, and so when you get those retracements, it could just bounce off their bid.
Especially if you're trading intraday, it's all bots. They're all going to be hanging out. They're all going to be jumping you in the queue, right? That's what HFTs do all day. You're trading against computers. Look, there's no right way. Mitch does what works for him. I do what works for me. You do what works for you. There's no right way to do this. It's just good to know what works for other people. Like I would, if I'm very convicted, I'm just going to say, screw it, market order, get me in. Mitch is much more concerned about price, and that's what works for him, and that's great. That's great.
Yeah. To me, it's always about where the big boys are.
Yeah.
Because to me, retail traders don't really move this market, but the institutionals with the big orders do. And so I really, really try to separate my time in sales. Just to give you guys a tip, I separate it to 1,000 shares. So anything under 1,000 shares, it's like maybe like 100 shares traded, 200 shares traded. I don't even pay attention to that on a time in sales because I'm only looking for the big fish. And once the big fish get in, that at least gives me a mentality that, hey, there's momentum behind the move. Yeah. It's not just my volume, my 100 shares that's making this pop back up. It was probably that 100,000 shares that was bought up at 11, and now it's back up there towards 11.25. Now giving me a little bit risk assessment to go ahead and follow versus just the chart.
This is a good point from Mark. I think he's summarizing our point. It's either you're accumulating or you're just highly convicted and you're going in. I think that's a good summary.
That's the SPAC world. I mean, at the end of the day.
Yeah, so it's 12:02. Luke Jacoby is late. No real surprise there for the Zinger Nation.
Spencer, I'm waiting for you.
He was not in. He was not in the studio. I just want everyone to know that. He was not in the studio 5 seconds ago. I just want you all to know. All right.
I've been here, Spencer.
Hey, Luke. Luke, I got a question for you. You still holding UWCM? You still holding United Mortgage?
He left.
I don't think he wants to answer that question.
He left. All right, it's 12:03 now. Mitch, let's get off here. Let's let Luke do his thing. Zinger Nation Power Hour coming up now. I'm playing your intro video, Luke. You ready?
Before you leave, please, guys, give Chris a shout out. We need the brains back. Let him know. Come back to the SPAC Attack, please.
All right, here we go.
Let's get ready to rumble!
Zinger Nation jam-packed show today. Peloton up 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today.
Interesting, different, unique, innovative companies.
Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna.
The best trade idea resource out there.
All right, Lucas doesn't have sound. Luke, what's your problem? You don't have sound?
I think he's noticed that he still has WMC.
Today, okay?
He can't hear. Okay, he can talk, but he can't hear what we're saying. So, Luke, he can't get the thing in his ear.
All right, there. We're going on the other ear today, okay?
We're going to have to get either some here or something like that. Logitech. What's up with the headsets? Let's see those stocks. What's up with that? Hot stock Luke, take over. Let's see what you got for us today.
All right, guys. We have, as always, a jam-packed day today. I'm going to start today off the way that I start every single day, which is reminding you guys of the point of the show. The reason why we're spending this time together, these 60, 90, 120 minutes, is because we want this to be the best trade idea resource out there. That's what we're going for. If we're not bringing the ideas, guys, call us out in the chat. Let us know, because we want to be delivering for you. And of course, ideas will not just come from myself, come from Jason, but come out of Zinger Nation. That's all of you out there in the chat, in the community, hanging out with us every single day. And I'm going to ask you guys, share this stream, like this stream. We want to get the viewer counts up. We want to make Zinger Nation bigger. The more people we have in here, the more ideas that we have going. So that's the deal there, guys. For today, I've got a ton of stocks to talk about up front. So we'll be doing that. We will, of course, be doing a chat challenge. So that's where Zinger Nation is going head to head and trying to figure out who in the chat should be listening to, who can bring the ideas. The question of the week this week, so start thinking about it early. The question of the week this week is going to be, what is the best performing stock of the week going to be? It's been a while since we said open floor. We're just picking the best stock. So we will be doing that. The winner is going to get whatever they want out of swag.benzinga.com. So that's the deal there. And then we have 3 guests joining us today. So at 12:30, we're going to have Nick from Bull Market Finder. At 1 o'clock, we're going to be bringing Meet Kevin on. Huge YouTube channel. So Meet Kevin is going to be coming on. And then at 1:30, a favorite of the chat, one of our deep value investors, Tom Nash, is going to be joining us up at 1:30, guys. So that is the deal there. Shout out to everybody hanging out with us here on Zinger Nation. I do like warming up and getting us going with a couple of the user calls. Is that something that we're ready to do, Producer Rohan? Not yet. All right. I got a not yet on the calls from Zinger Nation, but hey, we'll take some calls in as well. But all right, guys, drop me any stocks that we should be looking at today too. Put them in the chat there. I've got a laundry list, so I'm hoping that we'll have time to get through them. But there are some good ones. So let's see. FRX, FSR, EBIX. See, somebody's talking about Planet Fitness. I closed that one. I'm out. We bailed on it on Friday, as discussed. But all right, let's just start ripping it. I'm going to share my screen. I'm going to put Benzinga Pro up here. I'm going to give you guys some updates on the live portfolio. Again, the live portfolio, it's my real interactive brokers account that we look at every single day. We're not just talking about these stocks. We're actually buying them, trading them live on the show. You're not going to get that from anywhere else. So I've got updates on a handful of stocks that we track, we own, we talk about on this show. Opco Health, that's an interesting one. And then I actually have a new trade for you guys too. I'm going to be, but before we bring our guest on, I'm going to be hitting a new trade. Luke's been keeping the Monster Energy drink stock alive. Yes, that is absolutely true. But all right, let's start off with, let's do Torch as the first one. TRCH. I'm going to put it up on the chart here. If you guys are in Torch, then you know that the thing is ripping today. Here's a 1-year chart. Let's go back. Here's a 5-day chart. Stock's still down off of the highs. We got a really nice run today on Torch TRCH after Hugh, who pitched us the stock on the show originally, gave an update on his podcast, Pennies Going in Raw. Basically, there was a negative article that came out of Seeking Alpha. He went on, he refuted that article. Said why, and that's driving some energy into the stock. If any of you guys are in Torch, make sure you subscribe to their podcast. Again, it's called Pennies Going in Raw. Producer AB will drop that in the chat for you guys so you have the link. But he's consistently been giving updates on the stock in that podcast, and it's become a catalyst where we see today he gave an update on the stock. He did some more diligence, shared some of his thoughts with that negative report that came out of it. And now you've got the stock popping 17% right here. So there's the Torch update. That's one that we own. Another one that HIMS, HIMS. I listened to an interview with the CEO that came out yesterday. Also out of the podcast. A couple of interesting things that I want to point out on HIMS. This is a stock that we're in from maybe 23, 24, somewhere in there. So we are down a decent bit on it. I did trim all SPAC positions and post-SPAC positions because we've been getting hammered on some of the ones that we're in, but we still do own a chunk of the stock. A couple of interesting things from the HIMS CEO that might make waves later this week. Is he jumped on the anti-Robinhood bandwagon. Bandwagon did suspend trading in HIMS for a little bit. He jumped on there, so that might get a little bit of play. The other point that he made is that the business could flip profitable at any moment here, but they've got 11 different categories of products. Again, this is our telemedicine stock, but they've got 11 different categories of products that they could be getting into. And so he made a really compelling point as to, hey, we've been growing revenue 100% a year. We grew at 70% last year. That revenue growth is going to keep up. So reading between the lines a little bit, he was very bullish on it. Does Kathy Wood still own HIMS? I believe so. If somebody in Zinger Nation can confirm that, I believe Kathy Wood still does have that HIMS position on there. So there's our update there. Let's see. Let's just keep running down the list of ideas. Voyager Digital. Let's do that one. VYGVF. So check this out. I'm going to point out Riot Blockchain down 9% now. Mara, another crypto stock, down 9%. SOS, another hot crypto stock, down 8%. If we look at our Voyager Digital VYGVF, I don't have a chart to pull up, unfortunately, actually up 4% today. It's the only crypto stock that I'm aware of that's up 4%. I did a deep dive on this stock over the weekend. And basically, I want to walk you guys through it. It's a stock that we've talked about for a while, and you guys can see my average price here. You can see where the stock is trading at now. So, I mean, it's been a huge winner on it. But let's go through the let's basically go through the case that I made. I basically made a long case for this stock. So if you're not familiar with Voyager Digital, basically what they are is they're a crypto brokerage. They're distinctly different from an exchange in that they're a brokerage which connects their users to 12 different exchanges. So it's for individual investors like you and I who want to buy, sell, trade crypto. They connect us to 12 different exchanges, and their trading is commission free. The way that Voyager makes money is when they can fill a trade for a better price than what they quoted you. So the example that I had here, this didn't really age well. Bitcoin was 57,000 at the time on Saturday night. But basically, if let me go back. But basically, if they quote you a price for Bitcoin at 57,000, they fill it at 56,997, right? So that's they filled the trade $3 better than what they had quoted you. They take part in some profit sharing there. So that's the way that the stock makes money is, they try to fill you at a better price than what they offer. and they take a percentage of that cost savings. With that, they offer 55 different digital assets. It's more than Coinbase, more than Kraken, more than Gemini, more than pretty much all the exchanges out there. So it's interesting. But let's dig into the numbers because here's what I think is interesting with this thing, and I'll have the text up on the screen, but I'll walk through it in a little bit more of a straightforward way. But basically the company announced, they've been giving us a nice trickle of information. The company announced in January that they did $8.5 million of revenue. Then in the first 4 days of February, they did $2.5 million of revenue. Okay, for the entirety of Q4, they did something like, I don't know, what was it? I've got the number in here. Something like 300,000 or something along those lines. So okay, no, they did $3.5 million in Q4. They did 300,000 for the same quarter last year. So we know that they did at least $8.5 million of revenue in January, $2.5 million in the first 4 days of February. And check this out that I spotted on their investor presentation. They've processed 1 million trades through February 15th. So we know that they made $2.5 million in those first 4 days of February. And we know that their average trades per day increased from 60,000 to 69,000 from the period of February 1st through 4th and then 5th through 15th. All right, so that's all bullish for the stock. And so if we take a fairly conservative look at revenue, right, I've got the math that I did up here on the screen, but if we take a fairly conservative look at their revenue and try to project it out through the end of the quarter, it puts us at 34 million. I expect that their revenue will be higher because I'm taking 66% of what they did in those first 4 days of February. And we know that their average trades per day increase. The more trading volume, the better that they can get those fills, the better the price of the stock should be. Right. So even if we take that super conservative approach and forecast their revenue for the quarter to come out to 34 million, that's still 50% higher than the analyst estimate on the stock. Right. If you back that out to a full year, right? So if they have no revenue growth, and again, keep in mind, revenue's exploded from 3.5 million to 35 million from Q4 to Q1, right? Then they're only trading at a 15 EV to sales ratio. Yes, 15 is high, but again, that builds in that essentially builds in no growth, and it assumes that revenue is going to be lower than I think that it's actually going to be for the quarter. So I think that this story is getting out there. Again, the company's done a terrific job of getting information into all of our hands. I'm still in the stock. I've been in the stock since 52 cents. Right, you can see it's at 15.5 right now. So it's been a couple of years that I've had this one, but I wanted to do a deep dive after the run up in this thing because the explosion in price has been crazy, and I think that the numbers still support a long case. So I'm not touching a single share. The company reports earnings on March 1st. So we will get data there. Again, they have been consistently providing us information as you know, time goes on. It seems like every week they're giving us an update on trade activity, on volume, on assets under management, that sort of thing. And so for that reason, I think that we will get news before that March 1st earnings date. If not, then it's just until next week. Let's see, what day of the week is that? Tuesday. So that's Monday of next week at the latest is when we'll get news. So I really like this stock into earnings. It's the biggest individual stock position that I have. Granted, it is OTC. It is thin. There's a lot of risk in it. I'm not saying to follow me into this thing, but that's my bull case for Voyager. And I want to throw this one out to Zinger Nation and out to you guys. Let's make this the first question of the day that we're going to ask. If you guys like this stock, you like the bull case that I'm presenting there, I put it on my Twitter. Producer AB can drop a link to it in the chat. But if you guys like the bull case on the stock, throw me the 1 in the chat. If you don't, you think it's too run up, Bitcoin has too much downside, that'll hit the thing, then throw me the 2. But again, I wanted to do some quick analysis into the earnings report that we have coming out next week. And I still like it based off the numbers I'm seeing. Again, I think that they'll report at least 50% higher than that analyst forecast. And the revenue growth that they're putting up quarter over quarter, again, let's say it's 3.5 million to 40 million or 45 million, is insane. That's going to catch eyeballs. It's now a $2 billion stock. It's a size where it may be able to uplist, right? So it might start trading on the Nasdaq or something along those lines. We don't know that. It's all speculation. But again, I think that there's a lot of good things going on for this company. And you guys seem pretty mixed on this one. It seems like we've got just about an even split of ones and twos there. All right, I like it. And producer Rohan, you're throwing me a hand signal. Are we ready for some calls? We are ready. All right. I just rambled for a long time. I've got 2 more stocks to give updates on, and then I've got a new stock to pitch. I'm going to make the case for a new ticker I'll be adding to the portfolio live on the show. But before we get to that, let's take some calls from Zinger Nation. Can you put the phone number up on the screen, please? I guess while he puts that up, while he gets that number there, we get the calls coming in. Again, Zinger Nation, dial in. Talk about anything you want. Talk about a stock you like. Talk about Spencer Israel. Make a joke. You know, it helps me get the blood flowing. But I want to talk about Apex for a second while we wait for that to come in. So Apex Clearing, really interesting SPAC deal that happened today. So Apex Clearing is merging with SPAC, ticker NSTB. That's November Sandy Tango Bravo. I'll put it in there. It's going to be a $4.7 billion deal that's happening. Basically, if you guys aren't familiar with Apex and you're in the market, you should know what this company does. Apex is the backbone to basically all these new online commission-free brokerages that we have, right? So if you're looking at Robinhood does their own now, but Robinhood a couple of years ago, you're looking at Public, you're looking at Doe, you're looking at maybe even Webull, I'm not sure. But for pretty much all of these commission-free online brokerages, Apex is the backbone that clears the trades and executes the orders, right? The work of the brokerage is not actually clearing these trades for their customers. It's making a badass trading experience. That's how they differentiate, is they want to create that best front-end experience. And so Apex is the backbone that clears all those trades. So here's basically the bull and the bear case for it. If you guys think that online, you know, like these new retail brokerages are going to be the future of trading, and there's going to be more market participants and more trading activity, then you should be long Apex, because that's good for Apex's stock. If you think that we're in a little bit of a bubble, they're choosing to IPO now because, you know, we've had that surge in trading already, etc. Then that's a reason not to use Apex. So I think that this thing looks pretty dang cheap. I mean, we saw the stock here. Let me make this chart bigger for you guys. Here's a 2-day chart of the SPAC that's going to be merging with Apex. We saw the stock spike up to $12.50. Now it's trading right around that $11 range. I for $11, I sort of think this one is a steal. I haven't dug into the numbers yet. Again, we just got the deal early this morning, so I'll put that on the homework list. I will come back to you guys tomorrow with an opinion on NSTB. That's the SPAC that's buying Apex Clearing. There we go. All right, and we might be adding this one into the live portfolio. I see somebody throwing Tiger in there. I do own Tiger. I also own Charles Schwab, Interactive Brokers. Basically, the thesis for all these online brokerage stocks that I own is that I think they're all going to announce a record quarter, like some crazy breakout numbers. The amount of volume and activity that we've seen on Benzinga.com, which is now up to 15 million visitors a month, has been insane. The number of people we've seen going from Benzinga to go open brokerage accounts has been 4 times higher than when COVID hit, right? I really like to talk about the COVID surge in traders. When GameStop happened, at 4x the COVID numbers. And so that's my case for owning all these online brokerage stocks. That's why I like them. Apex plays into that. I do want to check out the numbers on this Apex deal, but that might be one that we're adding into the portfolio. But all right, producer Rohan, what's the deal?
The deal is I can't. I don't know, the app is like not taking calls or something. I put it up, but I'm not getting any incoming calls, and now it's frozen. So.
All right, we're not taking calls. All right, that means that I am going to keep rolling. Let's just hammer through some of these tickers in the chat that I wrote down. I'll start with EBIX. Somebody dropped that one in there. Holy crap. Okay. That's a bad day. So EBIX, this is down 40% right here. Trading lower after the company reported its independent accounting firm, RSM. Oh, shit. Their accounting firm resigned. RSM attributed its resignation to being unable to obtain sufficient appropriate audit evidence that would allow it to evaluate significant unusual transactions that occurred in Q4 2020. That's not good. That's clearly not good. So let's summarize the news here in EBIX. Stock's down 40% because it's accounting firm, right? That's the one that signs off on its financials and says, hey, it's something that you need in order to be a publicly traded company. The accounting firm that signs off on those financials bailed on the company, basically saying there's some weird shit that happened in Q4. I don't know. We haven't gotten evidence to support this, to make this weird shit not weird, to make it normal. And so we are bailing on the company. And that's not like a decision that the accounting firm would take lightly, right? It's not one where they just be like, we want to drop him as a client. We're just going to drop him as a client. I mean, this is a decision that probably went to the CEO or to the executive management of this accounting firm. And the fact that was their decision to drop a client, it suspects that there was something pretty unusual that happened. Let's look at this company. I don't know what it does. All right. So majority of its revenue is US based. A lot of the times when we see this, it's non-US companies that have this happen, but it looks like it's majority of its revenue is EPS based or is US based. Does have a presence in other regions. I'm not going to lie. I would imagine that it's some of that non-US revenue that may have that weird transactions. The company will come out if they haven't already. Let's just do a quick check and see if the company's issued a press release yet about this. Yeah, they did. Okay, so let's look at this together. So the company came out. It reaffirmed guidance. Let me make this bigger for you guys. Alrighty. So how is their financial health? Financial health is in better shape than ever. Generate strong cash flows. So are they going to address it head on? Any fraud or wrongdoing? Not aware of any wrongdoing. They're not really addressing it head on. Here, maybe they are. All right. We don't have time to read this whole thing right now. It is a really positive sign that the company was able to come out with a press release and defend themselves already. So if you want a silver lining, that's it. I guess take some time, dig into it. If you're thinking about buying the dip, you should read that press release and make sure you feel comfortable that there's not going to be any sort of investigation, that the CEO wasn't stealing money. They weren't pumping up fake financials. A lot of times when we've seen this happen in the past, it's something like the company is pumping up their financials in an inappropriate way. And we'll look at Enron, right? If we look at the Enron story, they were basically recording revenue that's not legitimate revenue. And that's what we've seen for a lot of these fraudy type cases. So if you are going to buy the dip on this one, I saw some calls in the chat to buy the dip. But you better make sure you understand it. I'm curious. I'm going to throw this one out to Zinger Nation. All right. You guys cannot abstain. You got to either flip this long or flip this short, one way or another. If you would buy this at the current price, $30.31, throw the 1 in the chat. If you would sell it at the current price, $30.31, throw the 2 in the chat. I'm a 2 in there right now. Ask Kevin about it later. Yeah, again, guys, if you're just joining now, a couple things that we have coming up. We've got Nick is going to be joining us shortly to talk about some swing trades. We're going to have Meet Kevin on at 1 o'clock. Tom Nash coming on at 1:30. And I've got a new stock pick that I'll be pitching you guys. And before let's do the chat challenge. All right, we've got some 2s in there. We've got some 1s in there. It surprises me a little bit. It's definitely a majority 2s, which again, that's where I'm at. I wouldn't be hitting this thing on the long side, but we do have some 1s. All right. So the Red 1010, he says he likes being in the minority on this one. And I'm going to ask you this, Red, follow up, drop us in the chat to tell us why you like this one. On the flip side there, we've got another comment that says it begets more. Okay, no, he clarified. Not long. He likes it short. Okay, we all like it short. All right. So there's the deal there, guys. Let's take one more out of the chat and let's get to our chat challenge in a second here. Opco Health, they had news this morning, ticker OPK. Basically, the news out of Opco Health is that they're going to be participating in the New York rapid testing program. Basically, they've got 8 labs that are going to be providing rapid tests in New York. Stock initially popped on it. Do I think that's overwhelmingly positive? Not really, right? You're talking about a company that has a market cap of nearly $4 billion. They're going to have 8 centers to provide rapid COVID tests. How much money are they going to make off of that? I mean, some, right? Greater than zero. But is it going to be material on a $4 billion company with 8 sites? I would imagine not. So all right. Those are 2 out of the chat. If we didn't get to yours yet, we'll try to get to it today. But let's do our chat challenge, guys. I'm opening up the file. I'm going to drop it in the chat here. I'll make a first entry. There we go. Dropping this in the chat. All right, so the chat challenge, Zinger Nation is going head to head to head to head to head.
Perfect.
All right, there it is. We have a new video for the chat challenge, guys. Link is in the chat. Can you edit this document? Somebody type something. There we go. All right, if you do not know what the chat challenge is, it means you have not been with us for long. This is a contest that we run every single week. Like the video said, Zinger Nation is going head to head to head to head to head to figure out who is the best stock picker in the chat. 2 weeks ago, we asked everybody to guess the price of GameStop, with the winner getting a share of GameStop. Last week, we asked who's going to guess the price of Bitcoin closest, with the winner getting a snippet of a Bitcoin, not a full Bitcoin. This week, the question is, what is the best performing stock of the week going to be? That's what we're asking you guys. Put your answer in the sheet. Do not write over other people. Be courteous. Don't put curse words in the spreadsheet. We do this on the trust system. Scroll down, right? Don't be writing overlapping over everybody else. Scroll down. Put your entry down here. And drop in your answer. The winner this week, swag.benzinga.com, swag.benzinga.com. That is our merch store where we have all of our beautiful Benzinga wares, all of our Power Hour wares, all of our Joel Conan t-shirts. Yes, you can get a t-shirt with a picture of Joel's face on it. And we are going to be doing an update on this thing every single day. So if you're not subscribed and you're guessing, hit that subscribe button. Like the stream today. Share the stream today, guys. We want to get more people on this. When Kevin comes on, we want to make sure we've got a big crowd for him. I mean, he's got like 15,000 live people at any given time when he's doing his videos. But drop in your guesses, guys. Yes, Red is saying EBIX is going to be his best performing stock of the week. Let's go. I love it. Put your answers in there. Again, look at that. Nobody's even doing inappropriate stuff. That's good. Normally we get some curse words in here or some, phallic symbols. But it's somebody's asking a clarifying question. Is it percentage change from Monday to close on Friday? No, it's going to go from right now. It's going to go the price from right now ish, right? Maybe 5 minutes from now when we close the voting through this time on Friday, guys. So you got to Tuesday to Wednesday to Thursday to Friday. And more important than the free merch that you're going to get from swag.benzinga.com, you are going to get bragging rights. Everybody in the chat that we hang out with every single day here in Zinger Nation. I'm spamming the link in there a few more times. But everybody that we hang in here from Zinger Nation will know you are the master stock picker. I'll get my guess in there. I haven't fully decided what it's going to be yet. Yeah, it is. I know what mine's going to be. I'm not going to type it yet because this is the stock that I'm going to be pitching later today before I hop off. But all right, drop it in. You've got like another 30 seconds to put it in. Okay. And then we're running out of time. We've got a good number of guessers this week, guys. Da 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 da. Can you use a crypto? Yes, you can put in a crypto if you want to put in a crypto. Da 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 da. No, soundboard is not on, Spencer. Oh, it's on. All right, hold on. I do have a sound for this. Nope, it's not on. All right, that's all right. We tried. Da, 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 da. All right, guys. Oh, there it is. All right, check this out. I've got the Who Wants to Be a Millionaire theme. Classic Show of the Thousand. All right, I'm calling it. If you don't have it in, I'm sorry. It's too late. We're turning it off. There's the chat challenge, guys. Again, we will be checking in on this every single day. The winner gets whatever they want from swag.benzinga.com. Plus, more importantly, they get the bragging rights. Anybody who's on this can view it. We'll get the prices in there. Boom. There it is. Chat challenge closed. All right. And without further ado, guys, I want to bring our first guest of the day on the stream with us. Favorite of the chat. Joins us every single week. Nice little drum roll for him. Nick, what's up, man? You are here live with us. You are on mute, so if you're going to try to talk, we're not going to hear you right away. You're working on it, okay.
Yeah, there we go.
There we go. All right, man, what's up? What's up?
Nothing much. How about you guys?
Doing well. You know, let's see. Let me check the live portfolio again. Let's see. So we're down $500 today. Obviously not good. Would rather be green. But if we compare that to SPY, and SPY is down 0.5%, so we're still outperforming SPY. If you look at the triple Qs, what's that down? 2%. Oh my God. If you look at the small caps are up a little bit, so that's probably what's saving our portfolio. We own a decent number of small cap stocks. But I don't know. Down $500. Not ideal. Would rather be up $500. Would rather be up $5,000. But any day that we're outperforming the market is an okay day for me. That's how I think about it.
That is very true. That is very true.
All right, guys. And if you guys don't know Nick, you haven't tuned into previous episodes, he's here from Bull Trade Finder. He is a swing trader. He loves to pull up charts. He loves to give us new tickers we haven't thought about. A lot of these stocks are smaller stocks. They're lower float stocks. I know a lot of you guys are always asking for some of these small, low float stocks, and today's probably a good day with small caps leading the market. But Nick, what's on the radar today?
I'll share the screen right now. Give me one moment. It's gonna be you can see the screen, correct?
Yep.
Okay, perfect. So it's going to be the same as usual. I'm always going to come back to FLNT. Gave this to everyone at around 450. Explained why. Fundamentally, it's a very.
I'm gonna make your screen even bigger. Hold on. Okay. All right. Wait, can you zoom in on this? It's still sort of small. I don't know if it's possible for you to zoom. Make it bigger. I did not notice any change.
Let's see. Better?
Yeah, that's better. Wait, what happened with IPOF? Something happened right now. It looks like. If anybody knows what happened to IPOF right now, drop it in the chat. The stock, it's a SPAC. It just went from 1550 to 1750. It's one that I own. Do you know news on it? I don't see any news right now. I got warrants. Let's go. Let's run up the cash register on that one. If anybody follows along the live portfolio, they've got warrants on that thing too. Let's go IPOF. But all right, Nick, sorry. I cut you off. No. You're just about to give us Fluent. What's up with that one?
Same as usual, just giving it out, continued growth quarter over quarter and year over year for the earnings. And, the chart is starting to really break out here.
All right, so you have a lot of lines on this chart.
Yes.
And again, guys, the ticker is FLNT. That's Foxtrot, Lima, November, Tango. So which lines should we be looking at here? And what time horizon is this chart?
Yeah, this is a daily chart. I just added, a couple of these lines the other day, especially this one. And this one bases off I'm going to zoom it out just for a second here, off top wicks going even farther back, as you can see this one, and now this one. And you could see we're kind of currently for the day closing under that if the market would close right now. So you can see this is a resistance, trend line above here. So an area you want to see break out for a positive move to 9 to 10 would be this 840 to 850 range. And this one I put down here as support. And the reason why is I think it was the same thing. Bottom wick, just a different way of seeing it. As you can see, it kind of resisted and closed under it here, resisted here, and obviously supported on these two other than the wicks. So, it's just another way of seeing it there. And the rest of the lines have been here since, a few months ago. You want to see a breakout of 850 here. I told everyone about the stock at around $4.50 to $5, and I'm still going to continue to hold until we see that 15 to 20 that I've been saying for the past couple of weeks and months.
Okay. And so let's talk about this one. So I'm not in this stock now. If I were, I guess, given somebody in my position who's not currently in it, would you say, okay, go ahead, take a position in this one? Would you wait for a pullback? What are we looking at?
So what you want to look for here is a pullback to the $7.80 to $8 range. Now, if it goes the other way and if it continues up, you want to start a position on the 850 break. Just a small position. So if it does indeed dip down under that, you could add more, but that would just be the breakout entry, and the support entry is that 780 to 8.
Okay.
And I believe Jason has this one. I believe he joined me and Ripster around the 6s range.
Ripster gave us some good stocks on fire. Did you watch that one?
Yes.
I want to get into one of those. MREO. I didn't get in it yet. Maybe we'll talk about
I'm a big fan of Ripster. He's a good guy.
All right, let's look at that chart. MREO. That's one of the ones that FarmDCA on Twitter and Ripster gave us last week. The stock moved as they were pitching it. So they called it right on. But you give me your technical analysis of this one. Because again, I'm more fundamental. I like to use technicals to help my entries and exits.
I think this is pretty good here. Let me just change this up a second.
All right.
For a dip buy, I would look for this 420 to 425 range. So basically, 15 cents from where we are currently at the 437. And I'm going off the top wick here and the bottom wick of this one and the closing wick of this one. I mean, the closing candle of this one. And you can see, there's been past resistance in that area, which is now acting as support. So that's why I'm saying that number. If it goes lower, I don't know where you'd want to really stop it on this one. I mean, that's the only area I'd see is a good starter. I would probably stop it at 4 if it breaks under truly, because the next area is around that 375 to 380 range.
All right, so that's interesting. All right, so again, let me recap. Would you be, if I need to build a position because I'm not in the thing yet, would you say now is an opportune time to start building that position?
Yes, you could. Try to see if it gets to that 425 again. But yes, if you really wanted to build a position, you could definitely start one at this 437 area.
437. Okay. All right. I like it.
Mm-hmm.
All right. So there's the one on. So we just talked about 2 stocks that we've already talked about on this show. So we talked about MREO. We just talked about FLNT as well. That's one that you pitched us last week. But the point of the show is trade ideas. That's what I promise people. I say if there's one thing you're going to get out of this show, it's going to be sound effects on my soundboard. And 2, it's going to be new trade ideas. That's what we're trying to deliver every day. So do you have a new stock for us?
Yeah, I got 2. Everyone knows these stocks. These are some bigger market cap stocks here. And we're going to go with Fubo, Fubo.
Okay.
And the reason
Fubo.
why
Shout out Fubo. I'm not in that one yet.
The reason why I like this one is obviously they're growing. They're definitely growing. They're acquiring gambling companies and stuff like that. So it's interesting that they're getting into that field. So it's a streaming / gambling, I guess you could say stock. And reason I like it here is you could kind of see this, pretty crazy rounded bottom here, and then possibly a handle or at least just a mini channel setting up here. And I'm buying around this 40 to 42 entry. And I'll even, keep buying if it drops down to 35. And I want to build a long-term position here. So I've started buying shares for the long term, looking for possibly, at least an all-time high break of around 62 by the end of the year, as well as possibly even going to 100.
So what on this chart is giving you the bullish indication? Because again, I'm not a professional at technicals. right? But I see that downward channel, and that doesn't seem great to me.
Correct. Now, like I said, what I really like about it is that it kind of has this rounded, bottom, and it could be forming basically a cup and handle, this being the handle part. And, we're right near some major supports as well as the bottom of the channel. So that's why I'm only starting a position here. And I'm looking longer term for January 2023 calls. So basically 2 years out. And January.
Wow, so you're way out on this one.
Yeah.
Okay.
Yeah, I'm willing to hold this for a long time. I think this could be a big play, just like Roku was with the streaming and everything.
Yeah, that was such a hot one. Roku was counted out as dead for so long, and it's I mean, it's an amazing story, right? They got integrated into all those TVs. It comes built into everything, and that just got the stock running.
Yeah, true. I mean, there's a lot of things going on with the streaming, and especially with the gambling. It's very interesting that they're doing that as it's becoming legal in all these states. So that's another big reason why I think this is going to be a great play for the long term. And, even just that, their subscribers, their revenue, their earnings, they're really growing here if you look at their past quarters. So it's definitely something to look into.
All right. And let me just throw an update for the chat really quick, guys. If anybody's in Ford with me, again, Ford, that was my 2021 stock of the year that I pitched back in December. Still own it, still own calls, still own shares. $12 here. Why don't you pull up the Ford chart for us? Give us a reading on that one. It seems like $12 has sort of been where the stock's been having a tough time. It got close to it. It was creeping up there. It just looks like it got rejected off that price. But I'm curious from your technical perspective, what you think about Ford.
You could have possibly an ascending triangle here, which is a bullish setup. And, that's what I could see possibly forming right here. And you would obviously want to see the breakout of that 1215, 1220.
Yeah, I thought I was going to do it. It was making a run. It looks like it got tripped up a little bit. We'll see if it makes another run today.
Yeah, today it's been doing good, it seems. You're getting close to the end of that ascending triangle. So a move could be happening within the next week or so. So, just a break over that 1220 could definitely set you higher. And if I remember, I looked at this a while ago. Let's see.
Ford is showing its first sign of life since basically a decade.
Oh yeah,
I don't know how far back you can go on your charts, but if you can go back 15 years, it's showing a sign of life. And again, the thesis on Ford is that they've signaled to us that we already know that they're going to be making a big push for their EVs this year. They already told us that they've signaled at least that they're going to be spending a ton of marketing on promoting themselves as an EV company, and I want to get some of that EV energy into this stock. So that's what I'm looking for on Ford.
That could be really good. And if you can see this, I know it's a little far out here, but it on my terms at least of what I see, I believe this broke out of a basically 20-year downtrend.
Yeah, exactly. I said it's showing the first sign of life in a decade.
Yeah. I mean, it broke out of this, what it seems like to me. And you could definitely see some upside here getting into that $15, $18 range. Kind of reminds me of BlackBerry. I got this at around $6. Oh, hold on. Let me fix this.
Are you still in BlackBerry?
I am not, but I am looking for a possible entry. I think they're.
Yes, let's go.
Yeah. I think they're, the reason why I got in at around that 67 range was because their business and where they're going now. I didn't get in because of the pump from GameStop and all that stuff. I know that definitely, helped this chart, but I was in at around, I think this candle actually truly, somewhere around here in this 7 range. And I sold it around 15 and then 20. And I am looking to buy around the 9 to 10 range. So we are, basically there. I could possibly get an entry on that.
All right, start some accumulation.
Yeah, but what I wanted to show you is, basically the same thing. It broke out of a, basically yearly downtrend again. And, you saw where it went. Obviously, it got help, but, it definitely broke out.
Okay. All right. So BB, and then do you have another one for us? Do you have a swinger for us? A nice swing trade for us?
Okay, I have a swing trade, but I do have another long term here in Palantir, which is one everyone knows, especially
Shout
off
out
this major volume.
All right. Yeah. If you guys own Palantir, throw me the one in
Yeah.
the chat. That's a favorite of the chat. I'm not in that one right now. Actually, I am. You know what? Sort of synthetically. I've sold puts against Palantir.
Okay. That's good.
Let me see what I don't even remember what strikes. All right, you talk about the stock. I'll figure out what strikes I sold puts against that one for.
So it hit this major support from months ago. Basically, it's a big range here. I have the green rectangle here showing the support, the demand zone at around 25, 24. And that's, a big area. And you can see we had a bullish abandoned baby setup right here. The red candle, the gap down, and then the green candle coming all the way back up. And a good buying area is around the 27.50 to 28 range, and even going into calls into 2023 and 2022. Again, just like Fubo, basically.
All right. In my trade on Palantir, so let's see. What are we doing on this trade? So, all right. So we've got an unrealized profit of 15%, which for an option trade is not much. But what we did is we sold, and what was the price on these? $225. So we sold the February 26th $29 strike puts for $2.25. So basically what happens when we do that is we get $225 credited to our account right away. So we sell the puts, we get that $225. And as long as the price of Palantir is above $29 by February 26th, we're fine. We keep the $225 per contract. We walk away. We throw the cash into something else. If the price of Palantir drops below that, right? Let's say it's trading at 20. I'm forced to buy the stock at $29. So that's the risk I'm taking on in order to get that cash. I only do this in stocks that I'm okay holding for the long term. Palantir is one of those names I'm okay holding on to for quite a while. So my break even on the trade is 26.75. So that's 29 minus 225. Anything above 26.75, I'm making money on with Palantir.
Yeah. And, this is a pretty good stock. They have a lot of government contracts. They have a lot of contracts in general. And as you've seen, I know Jason probably talked about it. Kathy has been loading a lot. She bought about 8 to 10 million shares over these two candles right here. The past
Drove
2
the
days.
price up. She flipped me from negative to positive on those puts. Let's go. Kathy Wood.
Yeah.
Move that stock.
Yeah, Kathy is, a monster in this industry right now.
Yes.
And she really loaded up here. I've never seen, a big share, a share increase from her like that. And she basically bought 8 to 10 million shares in a 2-day period. So that also gives some confidence to me in this trade as well.
Yep. And I asked the question to Zinger Nation. I said, drop in the chat a 1 if you're long Palantir. We got a lot of people long Palantir. Everybody likes this stock. It's and Palantir, actually, the other news on this one, and this is sort of news, sort of not news, but the other news on this one is that it replaced GameStop as the most mentioned stock on Wall Street Bets for the first time in like a month. It was GameStop every single day was the most mentioned stock for about a month or so. And then Palantir took that crown away, I believe, last Friday. Maybe it was Thursday. So there's the deal on Palantir.
Yeah. And if you want a small swing trade, I'm going to go back.
Yeah, give us the swinger.
Yeah, I'm going to go back to the one that I told you guys last week. ITP, so a little more risky.
Yeah. All right, let's see it. Producer Rohan was talking about, so he's like, I want some swingers this weekend, and so I didn't have any for him, so let's get it.
Yeah, so it's a little more risky. A good entry is actually around here. And a sell point, I believe I told you guys the sell point was around 110. I want to move that down to around like 107. And last time I was on, I told everyone, a good area to buy was around 120, 125. So we're basically, right at that area. Now you can get it a little cheaper. You could see it's holding this trend line that I drew this morning, actually. And we whipped under it. And the volume of selling has went down, on these 2 days. This day we had some buying pressure and we, increased the volume. And today it's basically, just sitting down there. And I think this one's going to move up, this week. I'm looking for a push over 140, 150. And people are.
Wait, Nick, you got to rewind.
So that's something.
Wait, Nick, you got to rewind
Okay,
like 30
what's up?
seconds. We lost you. You sounded like a robot,
Okay,
and now you're back. You said
Okay.
ITP. I'm bullish on the stock. I think you're about to give
Okay.
us a price target and then a stop.
Okay. 140 to 150 is the price target. And I've seen a lot of people talk about possible mask news that they've had, and they were supposed to send it out mid to late February. So, that's another reason why I'm in this, to see if that rumor is true. But the chart isn't really bad here, and the trend line is holding very well. So I'm going to keep that position until we break under around 107.
All right. So there it is. So 107 is where you would stop out. So if you
Right.
buy a position now, the stock price gets to 107. In Nick's opinion, that's when you get out of it. And what's the price you're looking for on the upside?
140 to 150.
Okay.
And the entry being, this 115 to 120 level.
All right. And let's talk about managing the trade a little bit. So let's say it gets up to that 140, 150 price that you're looking for. Then what do you do? And in my opinion, when I have a stock that's working with me, it's playing out. I let the momentum ride. I'll maybe take a little bit of cash off the table because you can't control it, after hours. If there's news that comes out, you get an offering, etc. But other than that, I just keep moving those stops up and let the trade ride. Because you don't know when that momentum is going to crack, and we are in such a momentum-driven market right now.
Yeah, no, I like that a lot. Here's what I would probably do is take off 25 to 50% at around that 140 area, and then move that 107 stop up to around 125. And then, if it falls down to 125, you still make profit on the remaining shares, or even move it to 130. So, the reason why I'm getting this 130 is the close of the open of this candle, the basically close of this candle and kind of the wick of this one, acts as possibly a resistance right now, but will act as a support later. And the 125 is, basically the same thing, this middle part right here, where there's openings, closings, and wicks. So, that's where I'm getting these numbers from. But yeah, I'd probably sell 25 to 50% at 140 to 150, and then stop it at 125, 130 for a profit if it, does go down to that level.
All right.
Mhm.
There it is. All right, Nick. I appreciate it. I appreciate all the ideas. Again, let's run through them. So we had ITP, PLTR, FUBO, and then what was the last one? Fluid, FLNT.
Yep.
There we go, guys. We promised the trade ideas. I always say at the top of every single show, if we're not delivering the trade ideas, call us out because we want to bring them. And I'm actually about to pitch a stock in just a second here, a new stock I'm adding to the portfolio today. So there's your ideas.
Yep.
Thanks, Nick, for coming and hanging out with us.
Yep. Thank you, Luke. Have a great day.
All righty. You too. So, all right, guys, but before I get to this new stock pick that I'm going to pitch in a second here, I'm going to give you a preview. Actually, I'm going to ask a question and then give a preview. The question is, we talked about IPOF. Let me pull this chart up real quick. IPOF, not that Tesla chart. That's ugly. IPOF, rip in. I've got warrants in this one. If it would be helpful to do a lesson in warrants, we did one maybe a month ago or so, but if it would be helpful to do a lesson in warrants, drop the 1 in the chat. If you don't need it, drop the 2. And if we get a lot of 1s, we'll do that one tomorrow. And then coming up today, 2 more guests on the Power Hour, baby. That's right. 2 more guests joining the Power Hour. We're going to have Meet Kevin is going to be joining us, then Tom Nash. So we are going to be flying. And then later today, stay tuned. We're going to be doing an options lesson here at 2 p.m. sharp. 2:30, we're going to be doing biotech. I believe that Vivi, our biotech queen, has a new stock for us. And holy crap, those are a lot of 1s for warrants. All right, guys. So tomorrow we're doing a warrant lesson. We're going to take 10, 15 minutes tomorrow. We're going to go over warrants, how they work, the mechanics of them, what exactly it is you're paying for. So if you're not subscribed, hit that subscribe button. We'll be talking warrants tomorrow. And Jason, I see that you've joined us here. What's up, man?
Yeah, and we have our guest here too, Luke. So we don't want to
yeah?
make him wait. We don't want to make him wait. He's the man of the honor, the man of the hour, man of the day, man of the
Well,
year.
you made Zinger Nation wait a whole hour for you, but okay, if the guest doesn't have to wait, that's fine.
Yeah, I gotta change my number so my wife can't find it as much. That's my new thing. So, all right, can we bring him on?
Yeah, let's bring him on. I'll let you two run with it.
I gotta do my graphic. I have this new graphic. I gotta do it. Special guest. All right. Where do I do? There it is. Hold on 1 second. Goodbye, Luke. Okay. Kevin, are you there? Can you hear me?
Hey, I can hear you. What's up? Thank you so much for having me on.
Oh no, you're the man. I mean, it's funny. I think the way that I originally maybe came across you is someone using your name to like build their YouTube SEO, like saying how Meet Kevin does his video. And then like, I guess you maybe teach that in your video course. Is that a thing?
Yeah. I mean, hey, it's amazing. I was even looking yesterday at this really cool computer building company, Artesian, over on Twitch, and they do these computer builds. And one of the things they're doing is, if you look at their portfolio and sort by the most popular videos, the most popular ones are where they're like, us building our computer for this creator live, and basically putting somebody else's name in the title. And those videos just go right to the top. They do so well. People are like, oh, I want to see that person's computer get built. It's so brilliant. But yeah, I mean, totally. As soon as people see a name they're familiar with, initially, people get defensive over the creators they like, oh, well, what's this person going to say about this person I watched? Like, what do they know that I don't know? And yeah, it's a really interesting Trojan horse, I call it.
Yeah, I hear you. Now, something I always wanted to ask you, behind you. So those are 4 monitors.
Yep.
And there's like a visual image of these whatever things you like.
They work. It's just, this is my iMac right here. And so I actually, I got like Photoshop right here, and I can put up like Weeble on the side if I wanted to. This is just my actual desktop and that. But yeah, they're just little screens here. So that way it cleans up the desktop, because nobody wants to show off their desktop.
I hear you. So it's like a screen that you just have on there with no sleep or whatever. Yeah, I think
exactly.
people
Sleeps off.
I think people want, and I recall you're in your garage, right?
And so I've got 2 sets. I've got one in the garage and then one in what used to be the dining room of this house, which is this right here. So this is inside.
Why'd you move into the dining room? Got cold or something, or are you just tired of the garage?
No, I started in this dining room because it had a spot where somebody could have put like what's that thing called where you put all your glassware or whatever, like a cupboard spot.
Yeah,
I turned that into a closet.
Okay.
And then we just closed off this room. And so it really works as almost like a downstairs bedroom in this house where the floor plan is. And then there's the formal living room on the opposite side. We don't use a formal dining room. So we turned this into another room in the house. And it's small. It's like 9 by 12 or something like that. But yeah, I mean, the whole set's in here and it's perfect. And then I put a couple massive doors on so I can't hear the kids screaming.
Oh, you did put a couple massive doors on. That's good. I have
1,000 pounds each.
Oh my God. I have kids too. When I'm at home, right now I'm in the office. My setup isn't good where I'm sitting, but I have 11, 9, and 4-year-old. And they don't seem to want to get quiet when you're broadcasting. You have 2 kids, I think?
Yeah, I have 2. I have 5 and 3, and I used to just have one of these doors. It's like this. It's like one of these big, thick doors, and like when you close it, you hear like the air vacuum. It's great. And I could still hear a little bit of like that shrill screaming when they scream. So I put a second door. So one opens in, one opens out. I don't hear anything anymore.
That is crazy. And then do they try to come in the room at all?
They can't open the door.
They can't open the door. Very, very smart. Very smart. Okay, enough on that. Now, I don't know if this is how you got your start. We're going to get to that in a second. But the one thing I'm sad by is we're based in Detroit, Michigan. And I watched you and Graham Stefan like a couple of years ago. You came here to look at houses. Before doing Benzinga, I used to buy houses in the city called Old Redford. It's like on the neighboring, it's Detroit, but it was like Old Redford. And I would buy, either flip or rent out a bunch of houses. and it was just the area. And I know you guys went on that tour. I was like, darn, I should have been one show. So how long ago was that, and what brought you to Detroit?
Yeah, that was, I think, the summer of 2019. And we went out to Detroit actually because Graham was doing it was one of the first confrontings that he did. He would always do these millennial money reaction videos. And then one of the people's like, hey, I'm in Detroit. Why don't you come out and confront me? And he's a hairdresser, has got a salon that he owns, and he's got fancy cars and stuff. So we went out and met him in person. And did a video there for Graham's channel. And then we thought, hey, while we're here, why don't we tour real estate? And so we hit up some agents, and they're like, hey, well, we have like $1 homes basically where you just pay the taxes on. We're like, oh wow, like, can you give us a tour? And so we kind of just documented what the tour was like with the different agents that we met. And yeah, I mean, it's some parts very sad, some parts you see a lot more promising. Like the downtown's gotten freaking awesome. So
It's crazy. One person just wrote, I have many thanks to Kevin. I have 5 properties and 3 times my stocks in the last 12 months. I'm so thankful. So he just wrote that in there. So now, how did you? Yeah, it's amazing. How did you get your start, Kevin? I mean, you probably don't love talking about yourself, but this is your time. We got here. How did you get your start?
Thank you for that. Yeah, I mean, it all really started with real estate. I give everything to real estate. A lot of people bag on real estate as, real estate appreciates slower or whatever. But the big move for me in real estate is the fact that, look, I was able to buy a place for 3.5% down with basically no money and no income, which is insane. I'm like, okay, Lauren, somehow, even if SHIT hits the fan, we have to figure out how to come up with $1,900 a month to be able to pay our mortgage. And then at least we'll get to move out of Lauren's parents, which was actually really exciting. We're like, yeah, we'll each work 2 jobs if we need to make this payment. But anyway, yeah, we while I was working at Red Robin, and Lauren was working at Red Robin as well, and she's getting started with property management. I just got my real estate license, hadn't closed the deal yet. I'm like, well, probably the best way to get started in real estate is buy what I'm trying to sell people. So I thought that was the best way to validate what I was doing, was just go through the process myself, and was able to find a fixer-upper.
Did you have money then?
Well, Lauren and I had about $8,000 to $9,000 each saved up, and that was all from minimum wage jobs from Red Robin, Jamba Juice, Hollister, or whatever. And we just.
How old were you?
I was 19 years old. Lauren was 20. I threw my savings into Apple stock. Lauren kept it in cash, and so I grew my money a little bit faster. Actually, a lot faster, because I probably only made $4,000 to the $9,000 she made, because she had worked a year and a half more than I had. She's a little bit older than I am, but I caught up to her with Apple stock.
Yep. Okay. And so that was, you were living at Lauren's parents' house at the time?
Yeah, I was living with Lauren's parents. I met her in Paris on a high school trip. And then we were long distance for a year, and I moved out to California. I went to high school out here, then got my real estate license while going to college out here. And that's how it all started. It was kind of crazy just how it all in this weird way aligned, but it kind of all fell together.
That's crazy. I mean, this is about you, but the thing that's similar to me in this sense, when I started Benzinga, I had a 3-month-old baby, and I had no money saved. I built the first site for $2,000 or $3,000, but I would wake up every night at 3 a.m. with the most anxiety you could ever imagine, my heart beating, whatever people with bad anxiety get, I was there. And my wife would say to me, Jason, stop worrying so much. If worse comes to worse, we'll just move in with her parents. Now, I was an undergrad graduate from the Michigan Business School. I had a job offer, a division of Goldman Sachs. I didn't take. I was doing this other startup back then. Yeah. After college, but now in 2009, when I started Benzinga in 2010, I was waking up at 3 a.m. with the craziest anxiety. And my wife just said, hey, if it doesn't work out, you move with the in-laws. And so at the time, that wouldn't be victory. And so that didn't really help me, but it did help a little bit. And then you did it. You were in with the in-laws before you bought your first property. So it didn't turn out so bad, I guess, right?
Yeah, and the thing then, too, was I moved to California when I was 17, so I didn't have a choice to be independent beforehand. I think if I were in your situation where I was already living alone, the thought of moving in with my in-laws would have been pour acid on me, So.
Yep.
I think that, but you know, that probably helped you, got you motivated, you know?
Yep. They want to know what did you do at Rob? Yeah, it did keep me motivated. Yeah, the anxiety, you know, that I got over. But what'd you do at Red Robin? They want to know.
Oh yeah, I went in. They promised that I would become a server. Within 30 days, they promised me I would be a server. That I was perfect to be one of their servers. Promised me a server job, but I needed to start as a host for 30 days. I'm like, okay, no problem. 3 months went by, and I'm like, what the HE double hockey sticks? I'm still a host. Like, what are you doing? And they're like, okay, well, we don't have room for servers right now. We don't have the hours. Here, we'll put you in the kitchen, and you can be an expediter. So I did that and bus tables. And then 3 more months of that. And I'm like, okay, like, yo, this is ridiculous. Like, I need to become a server now or else I'm leaving. By the way, I just got my real estate license and I'm leaving if you don't promote me to be a server. And the manager, never forget, Davis. Oh, Davis, man, if you're listening, I still love you. But that was I actually have to thank him for that. But yeah, he sat me down and said, hey, real estate man, look, you're not going to make it out there. You got it good here. You're on the schedule 4 times this week. You're going to make $900 this month. You're doing really well. Times are tough out there. You're not going to make it in real estate. Like, you got it good here. Sorry, we can't promote you. And I quit the next day.
We need to get Davis on, man. We need to talk to Davis, right?
Confronting my old boss. Oh,
yes.
Man, that'd be sick.
Yeah, I tried to do that. Kevin O'Leary, who ice cream manager, that made him lick or pick up gum on the floor with ice cream, you know, with a spoon or whatever.
Oh, I haven't heard that story.
Oh,
Oh
yeah,
my gosh.
he was working in the mall at some ice cream place, and the manager made him take a spoon to get gum off, and they tried to track her down for like a CNBC segment, but you know, but whatever. So yeah, that's like a sort of some. Have you talked to Davis since you become what you become, or no?
No, never. But that would be really interesting if CNBC tracked that person down. Yeah, picking the gum up off the floor. It kind of reminds me of Disney. That's like the only place I see where they walk around and pick up gum off the floor.
Yeah, or Benzinga will track down Davis. We got our guys. We'll go track him down.
Let's do it.
That's good. So your first real estate deal. So you got your real estate license. You and Lauren find a place, and you had a little bit saved up. So how much was the place? Like, what that deal look like? Because you didn't. Well, I guess you had some W-2 income, right? Because you were working at those places, so you were able to get.
Yeah, none of it qualified.
Oh, none of it qualified.
No.
Okay.
I had. Yeah, we were just too new, too young. We had good credit, but we couldn't qualify income-wise. So we did an FHA loan, and we're like, we really want to buy this house. This is such a good deal. How are we going to do it? How are we going to swing it? And we realized with an FHA loan at the house was listed for like $288,000, 2 cash offers on it. I'm like, I don't want to miss out on this. I'll just pay $305. And if somebody pays $1 more than me, fine, they can have it. But I'll pay $305. I want the deal. I got the deal. And the way we qualified is we used the Bank of America. It was a Bank of America foreclosure. So we used Bank of America as our lender, which was a disaster. But hey, they got it done eventually. But anyway, we did 3.5% down FHA, and we asked my father to co-sign. So he put no money up. We gave him 1% in the property for free. So I was 49%, he was 1%, and Lauren was 50%. And basically, you know, we found the deal. We had the money for the deal. We were making the payments on the deal. All we needed to do was basically trick the lender to let us into the house, which is totally legal. FHA allows you to do a non-occupant co-borrower, so it's not like we were breaking any rules. And we just took advantage of the rules that exist, which still exist today. And we're like, cool, we can use his income and his low debts to basically make us qualify with no income. And now all of a sudden, you know, we're in this property. Our credit score skyrockets, our wealth skyrockets. I mean, you know, we bought this $305,000 house in a $450,000 neighborhood. A year later, it was like a $550,000 house. Obviously, timing was great. We closed it in 2012, bottom of the market. Market shot up in 2013. So the timing worked out beautifully. But the big thing for us was we just need to get in. Like, we will do whatever we need to get into a deal, and we'll make it happen. We'll find whatever loophole it takes. And so that's what we did. And yeah, that really started us on not only now having excellent credit, but the experience to where we could go do our second and third deal. But it also helped me sell more real estate because I was able to show people who were trying to do the same thing how to do the same thing. So that really helped me also explode my income and then actually like grow into affording the house that we technically couldn't afford.
Right. I mean, and that's what's amazing compared to the stock market versus real estate. Your $10,000 or whatever you can leverage by getting 90% loan to value or what have you, and then go make. I mean, my first house, I had no money, and I got a loan where they give you back cash for home improvements, and I was like,
yes, that's what we had too.
Yeah, I made $40,000 on it, and then this was when it was quick in that old Redford area. But then later, when mortgage requirements changed, then I had a whatever. But the question, so you did this house, and then you did a lot more. Like, did you do multifamilies? Did you do mostly single families?
Almost exclusively single family. I mean, look, you could have bought anything 8 years ago and it'd double in value, but in a multifamily, interestingly, when you're looking at the market, it's very, very competitive. You're looking at maybe 4 units, 2 units, 3 units, 4 units. You're usually up against 50% investors, 50% home buyers. So you have more savvy competition. You don't get a good discount for old paint and carpet. You get a good discount if the rents are low, but it's harder to get a good deal on multifamily. You really have to be good at knowing the rents. If you could get something off market, great, do it. But with single family, like 90% of your competition is made up of clueless home buyers who are like, oh, that place stinks. I don't like that. And you could just go in and put new paint and carpet in, and all of a sudden you're buying the worst house on the street, putting $20,000, $30,000 into it, and all of a sudden you're par value with the other guys for $120,000 more in equity.
Got it. And the one thing about you, you're very open. You're open to probably to your wife's dismay with all the stuff you give and numbers and all that. Or people are like shocked you probably give all this stuff. They may think you're bragging, but I don't think you are. I think you're just trying to show people how you do your things. And we're going to talk about a couple of trades. We're going to actually talk about Tesla because I know we both like it, but I'm like hedging a little bit, and I think we should talk about that because I've owned Tesla since like as long as whatever. But in real estate wise, how many like houses do you end up buying, or approximately? Like, do you still own these houses? Is a lot of the management stuff? Or just like trying to get a day in the life of like what you've been up to. I know you're doing a lot more stock stuff now, but I'm just trying to figure out on the real estate side.
Ironically, the real estate is half the portfolio. It's less day-to-day entertaining because there's actually less to do in real estate once your properties are rented out. It's surprisingly simple. It still takes your brain power to pay attention to, obviously, your investments, but I've only ever sold one house, a flip that I did. I regret selling that house. I wish I kept it. I wish I never sold any real estate because the selling fees are ridiculous.
Wow.
But yeah, we own everything, and I see it as a good hedge to my stock portfolio. So if the stocks go down 30%, whatever, real estate's, hopefully still okay. And even if that goes down 50%, I don't care. I'm not forced to sell it.
So, and do you have like a management company that like deals with tenants and things? And
Flooring. My wife does that.
Are all the houses near you guys?
All within 30 minutes.
Got it. And you just kept them all like, and you weren't buying $40,000 houses. You're buying a little bit more expensive houses and then fixing them up.
$400,000 to $700,000. Yeah.
And you rent them out and you get long-term. That's great. That's great. And then that's something you have. And then eventually your mortgage gets paid down. It's nice cash flow.
Yeah. It's great. I mean, to me, I think it's shocking that you could put money into a property, basically lock in this 30-year interest rate. If inflation happens, you pay off your debt faster. Your debt is worth less. Over time, rents trend up. Even through market cycles, rents tend to trend up.
If inflation happens, you pay off your debt faster. What do you mean by that?
Yeah, so a little convoluted the way I said that. So basically, the more inflation happens, the less valuable my debt is. And the way you could pay it off faster is because you generally get paid more when inflation happens. Yep. So, but the debt doesn't go up. If interest rates go up, inflation goes up, the debt is still the same. So, you look at anybody who owns real estate from like 1990, and they still have their mortgage from 1990 or like 1980. Like maybe not 1980, those are paid off by now, but 1985 or whatever. Those are like the cheapest dollars ever. They say we've never paid off our World War II debt, but that even if we still have it, it's like 0.5% of our actual national debt right now because just old debt becomes less valuable over time. So, people get very caught up in, oh my gosh, but I looked at this statement and it says, this is how much interest I'm going to pay over the life of the loan. You can't think like that. Well, first of all, it's nominal what you're paying, 3-4%. And looking at in today's dollars, what the life of the loan's interest payments are going to be, is the total opposite of an understanding of the time value of money. It's a massive mistake. And a lot of people dissuade themselves from getting into real estate because they're fearful of paying a bank interest. Honestly, the bank doesn't even care about your interest. The bank is securitizing your loan, and some dude in Sweden is getting your interest anyway in the form of a mortgage-backed security. Bank doesn't care if you pay it off early.
No, you're right. And a lot. So are you still buying houses then?
Yeah. I just closed on a deal that I moved my dad into. Right before that, I closed on a deal I moved my mom into. Mom was in Park City. Dad was in Germany. So they're both within 4 minutes now, which is kind of cool. So the kids get to see both sets of grandparents now.
And are there multiple bidders when you're bidding, or is it like you just find it before it goes on market and you have realtors?
A little bit of both. It was the weirdest thing. The one my mom's in, I actually sent a text message to like 5 different agents. And I hadn't texted this one agent in over a year, but I just got this feeling like, oh, yeah, what about this person? I should send them a message. I texted her and I'm like, hey, by the way, do you have any properties that you want to sell? I'm looking to buy something pre-market, something I could fix up a little bit. And, maybe we can save some fees by not going on the market. And she literally texted me back in like 10 minutes. She's like, as a matter of fact, I do. Like 10 minutes later, I was over at the property, or it might have been like 2 hours later. But anyway, same day I was at the property and I'm like, yeah, let's do it. Here's my offer. And we had a deal.
And I take it, this is off topic, but you don't buy buildings, I take it, like office buildings or with restaurants.
No. Yeah.
There's
out of my wheelhouse, not trying to bag on it, but no, commercial. No, SBA loans. Wait, I did sell one more property, and that was a little commercial warehouse. I'm never going to buy commercial real estate again.
Yep. There's a decent office building that's not on the market that just like I got word on in Detroit that has 2 restaurants and like that's all built out that I could move Benzinga into. I don't know if I want the headache. I don't know if I want it. Like I'm going to go look at it, but you can have 2 restaurants. You can make back a good portion of your buying with the rent of the restaurants. Obviously Corona has to go away. But maybe it's a deal. That's all I was saying.
Maybe you get a Corona deal. I mean, now's the time to try to buy that stuff, right?
Yeah,
like if you're going to buy commercial.
Well, because we
now
rent.
seems like the time to do that.
Yeah, we rent right in downtown, right, like in the middle of downtown. So it's you probably So now we got to move. So you're doing the real estate, and then the Corona happens, and I feel like you got way more into stocks. I mean, you may have been into it for a while, but way more into the stock market. And some of the stocks that, you've talked about, I followed you in. I think one of them, what's one of the ones that you love? Switch or what is it? There's
like
one
CCIV or GHVI.
Nope. I know that.
EXPI.
No, there's another one. It's not SPE. There's another one that you like that I bought.
Salmon Property Group back in the day?
No, it's like it's a car one. It's a car related one.
Shift, SFT.
Yeah, SFT. So I own SFT, and we have this Benzinga Pro, and when I have it in my account, now I'm up 22% on it, and I was down like 8% on it. When you get them up 22%, and for so long, I had no idea why I owned SFT, and then I went to my Benzinga Pro account, went to my watch list, I bought it because of Meet Kevin, and I didn't remember that I bought it. So I own it. It's up 22%. You love SFT, right?
Yeah, I do. No, SFT is one of those where they've got a team of executives that do not know how to answer or project properly for Wall Street analysts. They're just such a young company, and it's unfortunate, but Wall Street just isn't giving them any love at all. But when you look at their valuations and their fundamentals, they're so cheap compared to like a Carvana. And even like a novice fundamental analyst can compare Shift to Carvana and go, oh damn. Yeah.
Yeah. No, one thing I didn't ask, you went from real estate to stocks. How did that happen? Because you weren't I don't know, were you always just
I've always been in stocks since I started with Apple when I was 18 years old. And it's just something that has always kind of been in the background more, retirement accounts or just as a sort of fund on the side, stock account on the side. It's never really been a high priority just because there were always so many real estate deals to buy. The pandemic, when it shifted things indoors and the stock market crashed, but the real estate market didn't, which I was covering once a week. We'd cover the real estate market in March and April. And I get all these hate comments like, Kevin, I know you're saying the market's not falling, but that's because you're a real estate agent. Of course the market's not falling in your world. And I'm like, okay, whatever. The data says the real estate market's not falling. videos are still there from back in March. And so I just kept buying real estate. I'm like, as soon as May rolled around, I told everyone in my real estate investor group, I'm like, hey, look, real estate, it's not falling. I'm going to go buy. And I bought like 8 properties after that moment there between May and August. And I'm really grateful I did, because the market just kept moving up and up and up. Recently, I've slowed a little bit because prices have moved up. But yeah,
you're moving fast, man. You move fast. I mean, that's your work ethic. Like that's a lot of like going to look at the properties, due diligence on them. 8 properties. I mean, that's not something to sneeze at, you know.
Yeah. Thank you for that.
Yeah. And I'm just saying, like, that's people buy 2 properties and you scaled it. So I do have a question. Your in-laws like shocked at you, by the way, and you and Lauren? Are they?
I don't know. They're pretty close to us, so they've kind of seen all the transition. I think they could just probably are just happy for any kind of success that we've managed to have. Obviously, always hoping for continued growth and more success. But yeah, I think it's kind of weird just thinking, like, when they first met me, I just didn't even have a job.
I know that's like, and like parents will say, oh, I want my daughter or my son to meet a doctor or meet a lawyer or meet this. You didn't have a job. Lauren met you for who you are. You didn't have the meet Kevin celebrity. So this is like, they met you in the real world. Now it's still the real world, but you get what I'm saying. Tesla. We'll move to Tesla for a second.
Let's do it.
So I know you've owned Tesla for a while. I own it because one of my friends got the first Tesla in Michigan, and he's the guy that just been talking about Tesla for years. Tesla is probably one of your bigger positions. Is that accurate?
The biggest. It's like 50% of the pie.
Are you doing anything to hedge it right now? If not, why not?
No, and I just don't like shorting. So if I've got longs, I don't short. No puts. Don't care. If it goes down, I'd rather have that liquidity that I would use hedging to buy the dip. And that's sort of my version of hedging is, hey, if it falls, I'll just take the extra cash I have and I'll buy it lower.
So you're not selling any shares right now or doing any of that? Like,
no,
you wouldn't
not
sell
Tesla, no.
Because like an $800 out of the money call that you could sell is $25 right now. For the end of it's a high premium. Like, you can take $2,500 if you sell one call, which is not worth it. Let's say you have 10,000 shares, you sell 10 calls, you can take $20,000. But if it hits $800 by March, then you're out the shares, but you don't want to sell any shares.
No, yeah, because not only am I gonna, sure, I'll have the 20 grand or whatever it is, but what's gonna happen? Okay, so then I end up selling 100 shares of Tesla, and okay, so 100 shares of Tesla that at say $800, that's $80,000. My gains on that are going to be at least 40 grand. So I'm going to be spending 20 grand on taxes. So I'm literally going to lose the premium I got by paying taxes on a stock that I really have no intention of selling. The taxes would just destroy any of the potential profit for me.
And then you could, and for me, for example, if I did that, then I would have less margin that I could borrow on. You know what I mean? Like, to your point, if you sold the stock, and I didn't really do margin before, but then I start like a lot, but then I started to, and the market goes up. Margin's your friend as the market goes up. Do you do margin ever?
Yeah, my goal is under 20%. Right now I'm probably about 25%. So I'm breaking my rule a little bit, but yeah, it's, margin it can be scary. Like in September, I think I was like 35% margin and the market was plummeting and I'm like, oh man, it's one of those things where you definitely want to be careful, because when the market's going down and you have margin outstanding, you almost like freeze up and you don't buy the dips because you're worried about a margin call. So it's bad.
So is one of your things is you buy when they're dips, or it's a feel? Like, when do you determine how you're going to buy?
Yeah, usually it'd be dip days. Like today, I mean, Enphase just keeps selling off, for example. I mean, Enphase right now is down 10.5% today. I mean, today's just a nasty, bloody sell-off of a day. I mean, Tesla, 740. I mean, we were jumping up and down. That Tesla was 785 last week. Like, oh my gosh, it's 785. We'll go buy the dip. And here it is at 740. And it's just like no sign of this self-stopping. I worry that this could be like the start of a potential correction in the market, because we're really on week 2 now of this bizarro land happening in the market. And who knows? Maybe it's just a return to normal. Maybe we are in bizarro land. But you've got recovery up a bit today, like the airlines and the cruise lines here. But almost any tech, cannabis, energy plays, all of them are down hard today, and it's unfortunate because it's painful. But hey, you know what? Buy opportunities.
No, I mean, Kevin, the truth is, every time that I've sold in these dips, it's been the wrong move. I mean, it's been the wrong move. You could have bought HubSpot or Twilio at like $100 in March. It's at 480. HubSpot, and I had Twilio since IPO. I sold some in March, and that's when I started getting back and trading and doing all these other, buying a lot of like the like the boating stuff, all the different, Prologis, whatever, PL, whatever, the jet ski manufacturer. I was like, because I was mad.
Oh, yeah, okay.
Yeah, and then the Yetis and stuff. That was when people are like staying home and they're not going on vacation, so you need to buy boating stuff. But I was mad that I sold the Twilio. So every time I've sold, it's been wrong. So you look at it as a buying opportunity. How do you determine if you're going to sell stock?
Yeah, I mean, so if things are really green, like 2 weeks ago, things were, it was like a week and a half ago, I think. A week and a half ago, things were pretty decently green in the market. And I was at about 26% margin. And I thought, okay, now's an okay time for me to maybe sell a little bit and just get my margin down. So I got it down to 20%. But then something else popped up. And of course, I spent that 6% again. So a little bit of a problem, but yeah, just keep buying stuff. But yeah, that's usually the only time I would sell something, is if I feel like I want to just protect myself a little bit more while things are green in the event that things start declining. That's the only reason. I will close out a position if I've just lost conviction in a stock. But yeah, usually my recommendation is don't sell, because we could be really good at getting buys, but really bad at timing exits. It's super, super common. And, everybody does it. Not something to feel bad about. It's something to just move on. But oftentimes what I found is when you've got that feeling like, oh my God, this stock is worthless. Like, oh, this sucks. This was the worst investment ever. That's usually that feeling that is actually telling you to buy, and it's so hard. But yeah, looking
Kevin,
back, it becomes very clear.
Kevin, I keep on my wallet or my phone, whatever, a screenshot. I sold Amazon shares. This was back 2001. There was a $2.10 commission with Prudential. I sold Amazon shares at $10 a share, like 400 shares,
man.
which I got, 4,000, which would be worth 3.1 million. And that was like, you're right on this stuff. The timing of these things, like I never sold Google, but I sold some of these other ones, which I never should have sold. That your point is, if you believe in the company, like I believed in Twilio, I should never have sold. But if you believe in the company, it's so hard to time sales. So hard, right?
Yeah, it's better to just wait for your next paycheck and then add. Actually, I'll tell you, one of the easiest ways to never get spooked into selling is when your favorite stock is plummeting, you buy a little bit. Even if you've got $1 million in a portfolio on a certain stock and you see it plummeting and it's like, oh my God, I'm losing so much money. Even if you just bought $500 of that stock, you mentally switch your brain into, damn, I got a good deal on those $500. You know what I'm saying?
Yeah.
Whereas, and it also like eradicates the feeling of wanting to sell.
That's good. What are are there a couple, like, I know we talked about the auto one, but are there a couple favorite stocks of yours right now?
Yeah, probably my top right now is I love the Lucid merger. That's a big one I've been writing. I think one that's still underappreciated and it's got room is GHVI. It's the Matterport SPAC. I think that's a $30 to $40 stock. So that's an interesting one today to me. Longs, I really like. My usual longs are things like Etsy, Enphase, the energy company.
What's a symbol?
EXPI.
What's a symbol for Enphase?
ENPH. It's down like 10% today, man. Today's a dip buy.
Well, maybe I should buy. So Enphase, you like ENPH?
Yeah.
169.66. This is like an Elon Musk type number.
There you go.
Okay. And you like this one because why?
Yeah, so Enphase has probably the highest margin in the energy business, and they supply microinverters for solar panels to a lot of private installers or smaller solar install companies. They also supply battery power walls, kind of like the Tesla Powerwall. So anybody who's not buying Tesla has a pretty good chance of ending up with an Enphase product. So to me, Enphase is a nice competitor to Tesla. So it doesn't surprise me that Enphase and Tesla kind of like trend up and down together. So it's not like you could use one to hedge the other. But I like Enphase. Big competitor. I want to be in the energy space, high margin, high quality, great products, and just very high conviction on the company. This stock could go down to 100, and I'd have the same opinion about it. Like, it doesn't matter.
Will you
I
buy
love it.
will you buy call options on this kind of stock?
Yeah, I have calls. I'm not buying calls anymore at this point. I'd like to keep my options at less than 10% of my portfolio. Right now, I would just buy the options. And that's mostly, I'm sorry, I would just buy the shares. And that's mostly because even if I bought it like a long call, at some point, I'm going to have to realize those gains. At some point, I'm going to have to sell that contract, take my profits, hopefully take profits, and buy the shares. And so I'd probably rather just buy the shares now and margin a little bit if I wanted to.
All right, so we got ENPH. You mentioned CCIV. What were the other two? You meant your two other ones you're saying.
GHVI is the Matterport SPAC, the 3D scanning SPAC. That's
you love that
favorite.
one. And I love how you go in such detail on these positions. It's like, before you'd have to read like an analyst report from Goldman Sachs, but like you can just read the Meet Kevin report. That's what we're gonna put, like the Meet Kevin report. No, but you do heavy due diligence. I mean, do you spend like 10 hours on each of these things, each of these stocks, or more than that?
Yeah,
I guess?
when I did a Square analysis back when I bought that one, it was probably 7 hours. I mean, the deep dives take a lot of time. Usually people give me ticker symbols. Like, I've got a list of tickers right here. I'll spend like 20 minutes of initial due diligence on a stock. And if I just don't jive with it, I just go on to the next one. And when I find something that I really like, then I go, 5, 6, 7, 8 hours into it. Yeah.
Got it. Do you ever just buy stocks because there's someone that you trust that, is behind it?
No, I mean, I'll take an idea, like, if somebody's like, oh, I really like this, I'll totally go check it out. Yeah.
Yeah. I never heard of like Big Commerce, I guess, BIGC. It has earnings tonight, and people are like telling me this is like the Shopify competitor for enterprise. So I bought a few shares because they're saying like, Nabisco, all these like enterprise companies have moved to it. It's a Shopify competitor for enterprise, BIGC. I didn't do heavy due diligence on it, but when I heard about it this weekend, I was out of town, and so I bought some stock in it, hoping the earnings will be strong today. Has this one ever come across your radar, BIGC?
No, never. It's a Japanese one or Chinese one?
I don't think so. Big Commerce is
Big Commerce. Okay, because if I type in Big C, I get the grocery and general merchandise retailer of Thailand.
So the symbol is Big C, and it's Big Commerce. It's in Austin, Texas. And I didn't do heavy due diligence on it at this point. It has earnings tonight, so I am buying it for a potential earnings pop, which I'm not advising anyone to do, but I'm just looking for the Shopify type competitor is one of those trades there. I like it. Then the same person gave me this other stock that I don't know if you ever look at that steaks, what's the one, STK. If you ever like STK Steakhouse, the symbol is not the symbol. The symbol is STKS. It's up 11% today. The same person gave me this stock and that other stock. STKS is the symbol. It's STK.
Oh, it's a recovery play. Yeah,
it's a recovery.
All the restaurants are killing it today, man. I'm just not in the recovery plays at all. But yeah, I mean, geez, $161 million market cap. I mean, that can move just from us talking about it. But yeah, the recovery plays. Man, I wish I had some today, because today that's the only thing that's green. Jeez, and it's so nice right now for recoveries.
And so one of the questions that they ask about you is like, how do you do your research? And I know you've said it. You go around the web, you go to their investor sites. Is there more stuff to add? I mean, a lot of the stuff you guys are asking in the chat, I could ask Kevin, like they asked, what's your real estate? Like on his YouTube channel, guys, there's so many great videos. You can sit there and literally just get headphones on and listen for the next 3 days. And seriously, you'll be smarter than if you went to. I went to the University of Michigan. You'll be smarter than if you went to the University of Michigan for 4 years. So some of these questions I'm not asking because he already has it on his site, and I only have limited time. Actually, we're already 7 minutes over. So that's you know. But Kevin, what I know, I just asked a question in there. I just asked, yeah, what are other ways you do your research?
Yeah, honestly, you guys pop up in the Bloomberg terminal all the time. Like you guys are just all over that. You got some kind of contract with them, and it's awesome because you see the alerts really fast.
Yeah,
but yeah, I mean everything.
Everything. That's what I figured. How long?
Yeah, like it could be Bloomberg, it could be you guys, it could be Wall Street Journal, it could be Barron's. You know, you got to be careful of like there are really sometimes you see these really like small websites that sound official, but then they have like, and I see this all the time, no contact information, no phone number, no mailing address, and they're putting out this like market information like they're a market news website. And it's like, oh man, those could be some really misleading articles. And I've seen some where I'm like, so you got to be careful with where you get your sources from. But yeah, usually you pay attention to the news and then you get inspiration, something that piques your interest, and then go do your deep dive.
Yeah, I mean, it gets worse. Some of those sites that you're talking about will also have names on the About Us because they need it for Google, and they'll be fake names. They'll be fake names.
Wow.
And some of those sites, they're created with a click of a button. I mean, I've had guys reach out to me to like take on and power the content on those sites, so they have normal news mixed in with their penny stock pumps, and that's what their game is. Some of these guys, I'm not saying all, I'm just saying some of these guys, or the other way is they want more content, they want more sites to build their email list, so then they send them the penny stock pump, and that's why I think why we wanted you on so bad, because you're not just giving stock market advice, you're giving life advice, and you're showing allocations, and it makes people identify with you. Yes, they would like to have your bank account, but it just shows how you're doing things, and you're never BSing, and you're always telling the truth, and that just makes life easier. So I mean, love to have you on again, or you had me on. And by the way, during the GameStop thing, I don't know how you do it, Kevin, but we were the guys that broke the thing with the Webull CEO, and somehow you found that. And I didn't see.
I think somebody sent it to me. So yeah.
Yeah, and that's amazing. It was the best. We are the ones who got it from Webull. Then the trade was allowed, and that day I didn't expect to be on and doing that. Our business, we license content to the brokerages. We're like the Associated Press of the stock market. So if you're using a brokerage, we're providing news. We have 1,200. We have a newsroom of 35 people, really doing news, and I can explain more later. But having guys like you on are awesome. And like I said, when you guys listen to a Meet Kevin research report on a stock, it's so incredibly detailed, and he goes into everything. The only thing that can screw you up, I'll tell you this. So this is the one that could screw you up. So sorry for talking too much at the end, but this is a compliment to you. I bought Upwork stock a while ago because they changed their pricing policy where people couldn't go off the network, and they made it much harder, because if you get caught going off the network from a vendor perspective, you would lose your contract with Upwork. You could lose your feedback and your rankings. And I'm like, no one is noticing this. And this happened 3 months ago. I use Upwork as a buyer. And so what I did was I went and got 3 analyst reports from Wall Street banks. I wanted to see if they mentioned this, because if they didn't mention it, then I know it wasn't accounted for in the stock price, or at least I thought so.
Right.
Now, where if I would watch you go really deep, you may account for that change, and then I'm like, oh, maybe I shouldn't buy it. Maybe that's already in the market. But the truth is, I got it. The walls. You know what I mean? They're not. They're not. A lot of them don't go as deep as you. And I bought that stock Upwork so big before earnings because no one was talking about this thing, and then they killed earnings, and then it went up 25% that day. I sold some, which I shouldn't have, and it went up another 100% over the next 3 weeks. And to your advice, I should not have sold any, but that's live and learn. But that's a compliment to you, because you go so deep, not just reading their numbers. You go deep as a user, and that's where your Etsy conviction. I wish we had talked more about that, but that's where it's so powerful. When you read an analyst report, they're not necessarily a user of the product, and when you're a user of the product, it changes everything.
You have to be. I mean, I get so many tickers of things that I just know nothing about and I don't use. And I'm like, I feel like I'm shooting blind because you could read the analyst reports, you could read the earnings report, but you don't know what you should even be looking for. Like when you use the product, you know what you should be looking for. It's a lot easier. So that's a great example.
Way back in 2000, I had online dating sites. And I made more money investing in the public stocks. There was a J-Date was public on a small OTC, but Yahoo had free personals, but then the quarter before they introduced $20 a month. And so I'm like, I looked at analyst reports, no one had that in there. Of course, they beat earnings by 60 million at the time. It was the personals. And like that's why honestly, when I asked you the question, do you ever buy stocks when you hear from someone that you think smart? I do, because when you said that one company that the auto one, I bought it and it was down 10% at first. I bought more shares. I go, Kevin did his due diligence. And so I just took you for it. You're not going to get, and I'm not, even if you got it wrong, like you spent the time, and I trust your brain more than I trust the average, more than I trust the average people on Wall Street. Oh God. Sorry.
Well, I appreciate.
Yeah, sorry. So thank you. Yeah, so that's why I did it. And so I appreciate you coming on. Thank you for staying so long with us. I know you're the busiest guy in the world, so we truly, truly appreciate it. You guys, if you don't follow Kevin, go to YouTube, meet Kevin. He's there everywhere, and he's just a good guy. And next time we're gonna get you just giving a lesson, and then you guys have these courses. Kevin has great courses, how to build a YouTube and all this stuff. Check it out in the store.
Oh, thank you so much. Thanks for having me.
Thanks for coming on and out of your day. We appreciate it. Hopefully you'll come on again and we'll get more of your knowledge and wisdom. Appreciate it, man.
Deal. Thanks. We'll see you.
Yep. Bye-bye. Okay. Now that was Kevin. Let's give Kevin some likes, subscribe, shares, what have you. Follow Kevin. Do whatever you got to do. Because next we have on, we're not stopping. We're just going. And the phone ringing was, damn Apple. I got to figure out how to work this Apple phone stuff. But next we have on my good friend, Tom Nash, but before he comes on, I got to do something real quick, and here we go. All right, Tom Nash, how are you today?
How can I get a bumper like that? That was professional. I got hype.
I can get you any bumper you want. I'll get you the bumper. You just keep giving me winning stocks, and then I'll get you any bumper you want. We got like a 15-person video team here, so whatever you want. I just have to answer some of my emails or Slacks to let them know, because that is my deficiency. If I can get someone else to go in my head and answer these Slacks or go back and forth, then that would be great. It's hard to find like a chief of staff or what have you, to do that. But yes. So how have you been, my man?
I'm good. I actually had Kevin on 2 days ago on my channel. We were doing a live stream together.
Oh, I should have said. I didn't know that.
No, but nobody knew it because the internet was so horrible that it essentially crashed multiple times, and we had to call it off.
Oh, it's so funny. Yeah, he is. They said I was fanboying over Kevin so hard. Whatever. I don't.
They said the same thing about me when I had him on it was kind of working on and off, but we had a really good conversation. People, for some reason, I mean, they don't enjoy. People have a hard time when people give other people compliments. I think, just in general.
Yep. I agree. And
they want blood.
they want blood, and people don't want to seek to understand either. They want to, like someone goes, I don't believe Kevin's story. They're like, this guy's like, I don't believe Kevin's story. Someone must have given him all this money. So, so yeah, that's it.
I mean, he's killing it. Look at his numbers. I mean, his YouTube is off the chart. I mean, nobody gave him anything.
Yeah, no one God, what are you gonna say?
He's putting out a lot of quality content, and he's killing it. I mean, you can't deny it. And haters be haters. I mean, nothing new. I got haters as well.
Yeah, you don't have any haters. No way.
No, I actually had two come out at the same time and post some nonsense about me, but both of them actually apologized and retracted.
They did? Why'd they retract? You reached out?
Yeah, I reached out and I had a conversation. I mean, usually once it kind of comes with the territory, right? Kevin is a big deal. Everybody knows he's a household name. So once you get big, everybody has an opinion,
Yep. And opinions are like assholes. Everyone has one.
Exactly. More than one.
Yeah. So you could say opinions are like eyes, but I just felt like saying the other
It's actually
thing
very
just
true.
now.
Yeah,
Yep.
yeah.
So what's new in your world? How did you sell any of the Bingo?
No,
Bingo.
I'm still in.
What's his name?
I'm still in, and I'm really appreciative of. People think I gave them the BCRX tip, but I actually put it in my post that it came from you and from the nice lady that was on the show.
Oh yeah.
And
So they're giving you a lot of credit for BCRX.
they give me credit for something that's not mine, and I said Jason Resnick with an A told me to buy that stock.
Yeah,
and, with an A. And I actually, well, the one thing I'll take credit for, when it was dipping hard, I doubled my position and I let them know, hey, I just doubled my position. And that's kind of where I take the credit. And now it's going back up. They have some good news. I don't know if you noticed. A new trial is coming out. A lot of interesting stuff going on with BCRX.
Got it. So you like it. You like it.
Yeah. I'm in for the long haul. Same with BNGO, not selling. And same with Palantir. Palantir was massive. And I don't know if you probably don't have time to watch all my videos. I mean, but of course,
I
of course you
them
do.
all.
Of course you watch them all.
watch. I've never missed a video of yours.
Twice every video just to make sure you got everything right.
Yeah. Yep. So what was you going to say? What were you going to say?
I made a video right before earnings and I said, hey, just to let you know, in 3 days, the lockup is going to expire because it's a direct listing. So you got a lot of people looking to sell because they were holding these non-liquid assets for 17 years. It's a lot of people that need cash, want to meet cash. It's okay. It's normal, even though they have different perspectives. Some of them are retiring, whatever. So there's going to be 80% of the stock getting unlocked 3 days after the earnings. So I said to everybody, this is going to be a buying opportunity. And it happened just as I said, and others as well. I'm not taking sole credit. But you know what shocked me? How fast that window closed as far as, it went down to about 25. And then within 24 hours, it started closing. And I thought it's going to take weeks. Just goes to show you how crazy this market right now is. It's insane.
Yeah. But then in a bull market that, market goes up, that happened. But like in the market past few days, we're seeing some sell-offs. So I have been trimming. I have been trimming for sure on some of my riskier positions. Are you not trimming at all then?
I don't have any per se risky positions. My portfolio is like it looks like the person who owns it eats dinner at 5 and plays bingo. There's nothing like BNGO is probably my most exciting stock there. It's very, very lame. It's just blue chip stocks. So there's no sense in trimming now. I mean,
you haven't sold any BNGO is what I think.
No, I'm not selling.
Yeah. Did you hear my trade that I put on today, which I don't have any color to it? But did you hear my trade or no?
No, tell me.
This guy who also gave me Office Depot that went up a bunch, and then he also gave me the one that is another one that's up. Wait, what's the one? Let me just look at my gains today because I can pull up my gains today. It is oh come on, where is it? Which guy? Hold on. How can I see forget the other one, but the one that I bought today has earnings tonight is BIGC. B is in boy, I is in igloo, G is in ghost, C is in Charlie. I don't know like it's gonna have strong earnings or not. This guy seems to think so, but he's not anyone that I would necessarily trust with a stock pick. The reason I bought it was like it's positioned itself as a Shopify competitor, more for the enterprises. And so there are the stock has risen and then dropped tremendously. They've gotten some definitely more contracts with enterprises to run their like e-commerce type stores. So I'm playing as a little bit of earnings play, but it's not one that I'm highly confident in. But I just thought it was interesting. The Shopify competitor that's sold off a lot. Maybe that's because of poor execution.
You know what I'm looking at right now, Jason? I'm looking at the short float.
30%.
Oh, it's very high.
Yeah, so that's what my friend who has it, he owns 500,000 of it. And the other stocks, the chat just reminded me of it. See, the chat's so good. Abe reminded me, STKS. This is STK Steakhouse. and it's up today because you know, the recovery stocks. But STKS is the other one that he gave me, and I bought it, and it's up since I bought it 30%. So STKS is another one that I bought. Not today, but I've been buying.
It had a major spike. I see it now.
Yeah. So
wow, 10% just in the last day.
Yep. Exactly. So that is
this one seems to be much more consensus than the previous one.
Yes. So this big BIGC, if it sells off today in earnings, I'll be out of it. Like, I'll just be done. This is just, you know, doing the earnings trade, and who knows? I don't know. So don't worry. Don't go chase that one. Any new stocks for you?
Well, I did want to talk to you. I got a few minutes before you have to kick me out. I did want to talk to you about, and I spoke about it with Aaron. I really want to make a bullish case for Palantir. Even at this price, even at $30, I see this as a $40 stock, and I'll tell you why. Again, this is just my opinion. This isn't investment advice. Chillax. This is just a dude with his own due diligence. So here's how I see Palantir. If you just run a DCF on Palantir based on their own guidance of profits for 2025, the company isn't worth nearly 40. It's probably less than half of $40 per share. However, here's where I kind of have a theory about it. And I'm not the only one. If you take a look at Kathy, she loaded up on a ton of Palantir.
I get it. You're on a first name basis now with Kathy. Very nice.
I just have a crush on her. Everybody knows that. So it's just, I'm a fanboy. But
are you gonna watch my interview with her on March?
Of course, I watch everything that Kathy does. Everybody knows that.
It would have been better if you said I watch everything. Of course, I watch everything that Jason does. That would have been better if you said.
That's a given. You asked about Kathy. That's an additional information. But I watch the pre-market show. Come on, I even watch the stuff you're not in.
Oh, okay.
The dude on the pre-market show has a Michigan shirt. I have to watch it.
Oh yeah, Joel. Yeah.
Tell him I said hi. Anyways, ARK Invest, their flagship, the innovation ETF, loaded up more than 5 million shares of Palantir during the last dip. It's now over 0.5% of the entire fund. It's a massive fund. That's the one where they have Tesla, Twilio, all the flagship stocks they have. So she loaded up on a bunch of it. She literally had 20,000 shares in October. So that's in 4 months. Here's what she loves it, and I love it. I'll tell you why. I think that even Palantir are being extremely conservative with their estimates as far as the next 4 years, because nobody really understands what is the total addressable market of this company. Because what is their market? Their market is predicting the future. You can't Google, well, predicting the future, total addressable market 2027. I mean, that isn't going to come up. I mean, this is a company that provides a software solution that is entirely industry agnostic. You can put it in the grocery store, in a mining company, in a taxi. I mean, you can pretty much work this product in any industry, in any level, and achieve improved efficiency, improved earnings, basically improved safety, not to mention the stuff they do with the government. So here's my theory about what I think Peter Thiel did here, which I think was genius. So I kind of see it. And again, I'm not saying that this is Tesla. I'm just saying it's a Tesla-like behavior. And I agree with that assessment. I think Kathy feels the same way as well. So Peter Thiel actually wrote it in his book. I'll send you the link. So in his book, he talks about the next big thing he's going to do. And he's talking about how to monopolize a brand new market that does not exist. How to create a brand new market and monopolize it. And if you think about Palantir, that's exactly that. It's a company that's pretty much monopolizing a market that has no competitors because nobody is in it yet. Maybe IBM in the future, but they're partners with Palantir anyways at this point. So, but even then, they're so far ahead of everybody, like Tesla. So it's going to be very hard to catch them. Now, here's what I think they did, which was genius. Because if you take a look at Palantir for the last 17 years, you would say this company makes no sense. I mean, they're losing money. They haven't had a profitable quarter in 17 years. They're losing a ton of money. They're only working with the government on defense products. And what is the purpose of this company? And now it's still in embryonic stages, but they're moving out of the government into the commercial sector. So what they did is they took 17 years of unlimited government resources to build IP, and now they get to use at least some sort of cores of that IP into the commercial market with a product that took 17 years to develop. How can you compete with that? And if you look at the numbers that they're showing as far as the stuff that they're doing with Airbus, the stuff that they're doing with the UK HMO, I forgot their name, the NHS, they work with mining companies, and their growth in the commercial sector, people are excited about, oh, they had a 40% growth or whatever. They're not even working. I think they're working with less than 5% of the major corporations in the world. They're strictly in the US, and they have a very limited amount of clients. But even in that limited clientele, they're serving 16 different industries. So they haven't even started working the commercial side. So here's the thing. If you believe that this is a Tesla-like development curve, then it's worth $40. And if you don't see the vision, then it's not. It's very simple. There's not going to be a DCF you can run right now based on past behavior that's going to give you $40 per share. You got to buy into the vision, so to speak, buy into the potential. Simple. I buy into it. I think ARK Invest does as well. And I definitely think it's going to hit $40. And even then, I'm probably not going to sell it.
Got it. Okay. No, that's Tom Nash on Palantir. I love it. I love the confidence, and I love how you do the DCF and discounted cash flow models.
This is actually one example where the DCF is not applicable. So here's a surprise for you.
Well,
I
you
mean,
still, yeah.
I ran it, by the way. I ran the DCF on this company. I'm not going to show it, but I got like $12 per stock.
Oh.
But that's just based on per share. Sorry, but that's just based on whether if you take a linear kind of growth from where
I get it. It's not based on what it can be, and like just like Benzinga, we're going to grow 100-fold this year, right?
Everybody knows that.
Yeah, exactly. Same kind of thing. I did buy another stock, BTN, by the way. B is in boy, T is in Tom, N is in Nancy. My friend who's very smart gave it to me. I don't understand it all, but he also gave me QRTEA, which is a QVC channel, and it's up 180% since he gave it to me. So BTN, I mean, I understand a bit, but on a valuation thing and the guy behind it, it's good leadership. Just put it on your watch list. Don't go buy it today, but just put B as in boy, T as in Tom, Nancy on your watch list, okay? So
by the way, for me, Jason, BTN means one thing.
I know.
It's the Big Ten Network.
I know. I knew
it doesn't mean anything else. However, just to let you know, this company literally has no short interest. Nobody's shorting this company. It has 0.1% short interest.
I know, but my guy Brian gave it to me, and so far he hasn't led me astray. Except Del Taco took 3 years to perform, but he also gave me TAST at 189. It's at 635. I mean, it gave me enough that So that's what I'm in. That's one of the ones.
But it's really flying under the radar, BTN.
I know. Let it fly under the radar. That's fine. That's just what happens. My money has to stay locked up.
It's an old company. It's an old company.
Yeah, they have, but they're doing some. I don't know how. What do you say? I mean, I can send you the whole financial model on it. I'll send you that. I have the financial model. I'll send it to you. I feel like we're just like talking and there's no one watching. It's really nice, even though there's like 2,000 people watching.
Well, that's usually what the conversation would be like, anyways. It's there's no. I mean. Yeah. I've seen you cry.
Yeah. you see me cry. And one thing before we end, I'm gonna have to send you a check or something. There may be someone, or maybe because when I was on your show and I talked about Benzinga and stuff, like there's maybe someone that we're hiring that like a few people reached out. Like, a lot of people reached out from the show. Other than the Brazilian people that wanted you to go help Brazil, I did get some people reaching out about wanting to join Benzinga, and so. You hire them, then I gotta send you like some thank you gifts, Well,
here's how you can repay me. You can come on again, and let's just have you on again.
Yeah, I would. Well, no, I can repay you I'll find other ways to repay. That's why I gave you some of those stock picks. So yeah, that's why I gave you some of those stock picks. I know we have a CEO of a exciting company coming on, Fire and Flower, Trevor Fencott, in a couple minutes. We have Javier interviewed him. It's one of our cannabis companies that we work with, and it's a sweet company. But I just thank you. This guy who reached out, he was a Benzinga Pro user for a year, and then he saw my interview, and he was like, and he's so far he seems good. Yeah. So
was it the guy who donated and then said I'll text you my CV? It's
I
probably
don't.
that guy.
It may have been. I don't remember. But yeah, if you're ever on your show and people are looking for jobs in the space, tell them to reach out to me. Like I like to hire people that are passionate and driven versus just people that want to do stuff. Because we're all going to get burnt out some days. So when you have other people that are passionate and driven, it makes your life a lot easier.
By the way, here's the thing. You are crazy. You put out your phone number, your personal phone number on my stream to thousands of people. I've never seen anybody do anything remotely close to as insane as you did.
Yeah. I just think people should be easier to connect with. And yeah, I know I did get some long messages, but guys, Tom Nash is the man. He's on YouTube. He's the man. And like I said, I think personalities can really shine through on YouTube and be your own broadcast network. We hope to do stuff with Tom Nash, but he's great. If you don't, I discovered him when he had like 12,000 or 13,000 followers when he was just really deep on a company. And I love fundamental people that go deep on companies. I love it. If you're a technical trader, I probably wouldn't have even stayed there for 2 more minutes, but because you went deep on companies, I loved it. And you put your opinion out there. It's like, so sweet.
And I'm a Benzinga Pro user right now. Aaron
you are?
He opened up a Benzinga Pro for me.
So email VIP accounts at benzinga.com and they'll give you a red carpet walkthrough of just a couple features that can be useful to you. I know it can be a little confusing first time using, and it'll get easier as we go, but email VIP accounts at benzinga.com, or I'll have them email you, but I want to make sure you get the red carpet service. It has a lot of stuff in there.
But it's really responsive. With everything that's going on, I expected it to be a little bit laggy, but it's completely responsive and it's super fast.
Trust me, a year ago it was laggy, but there's totally signals. There's everything in there. Insider, there's so much stuff in there. So all right, Tom, come on again. It should not be so long. And Siggy Me says he's been following you before you had 10,000 followers. Okay, you beat me. Fine, you beat me. All right.
My mom beat both of you. She was my second subscriber. She's probably watching this. She's watching everything I do. So hi, Mom.
Yeah. Well, Tom has Benzinga Pro, but no YouTube Premium. Yes, he has Premium YouTube.
No, I have Premium. I did after my last stream where I was showing a clip, and then we got a bunch of commercials. They said you're a cheap bastard. Get YouTube Premium, and then I did YouTube Premium the next day. So now
why'd you get YouTube Premium the next day? What'd you say?
Because I was showing clips on stream, and it was showing commercials, and people were like, "Dude, you can't afford YouTube Premium."
Oh, they're making fun of you. Okay, got it.
Yeah.
Got it. Okay,
I got it now. I got it.
All right, guys. Well, thank you, Tom. Thanks for coming on. I'm passing it off to So Tom, stay in touch, and you know where to find me. Okay. All right, love you. Thanks for the Palantir, so much, guys. Tom, talk about Palantir. It's one of the stocks. He also gave me BNGO. It's up a lot. And I'm over time. It's 2:05. Javier said hard stop. So Javier Hesse, managing director of cannabis here at Benzinga, has an exciting guest to bring on. But I'm going to transfer and bring Javier on now. Javier, are you there?
What's up?
Your audio works. That's a good start. What's up, man? What's up? How you doing?
I'm doing great. Excited about this show today. Actually enjoying your conversation with Tom a lot. And I also find it very interesting that you always share your phone publicly. I always go like, this guy is nuts.
I don't always share it. Okay. I didn't do it that time, but yeah, I hear you.
I can test, whenever we hire someone, you go like, just call me on the weekend. Like,
yeah,
do you really want like every
the weekends are nights. I hate doing interviews for jobs during the weekday. I hate it. Weekends or nights. All right. I'm gonna stop. We got a way better guest than me to talk. So do you know how to bring him on, Javier?
Yep.
All right. Go at it, baby.
Mitch.
All right. So one of the things is I'm going to be joining Javier. So we'll see you next time, Jason, on Zinger Nation. All right, guys. So hey, if you guys are excited, one thing, hey, I'll let you guys know. We work hard to bring you the executive interviews that get you guys the information that you guys need to be informed traders. So if you guys haven't seen, we do have a weekly show called Cannabis Hour. It's on Thursday, at 4 p.m. every single Thursday. So don't miss it, guys. There's executives every single time, and they go in depth in different topics in cannabis. So Javier, tell us a little bit about the cannabis conference also.
Man, I mean, let's get into the show first. You know, every Thursday, 4 p.m. Eastern, 1 p.m. Pacific. One of the best shows out there. Super entertaining. We have like high-level executives, women on every show. Elliot is always hosting, and then we switch it up. We have Tony, our editor, Patrick Lane. Super interesting. But nothing compared to the Cannabis Capital Conference we're having this Thursday and Friday, February 25 and 26. We have over 70 speakers, more than 7,000 confirmed attendees, you know, panels on the most interesting topics, all of the industry leaders, you know, of course, our regulars like Tim Seymour, he's always there, you know, just sharing and spicing up every conversation with his knowledge. And all of the major companies, you know, NASDAQ traded, New York Stock Exchange traded, TSX, CSE, the managers for many of these stock exchanges. So make sure to check it out, bzcannabis.com for more information. Again, bzcannabis.com.
All right. I think nothing better than let's just play a little bit about what Cannabis Hour is about.
Yeah, man. Bring up that commercial.
Welcome to the Benzinga Cannabis Hour.
There are more people who are in favor of legalization.
I saw the benefits of it for myself.
I just have to ask, was there pot pasta in the cannabis cookbook?
It was gorgeous. There was pot pasta.
We were talking about cannabis pasta.
That opened my eyes to the cannabis industry.
Is this new industry where now billions of dollars are being made.
We're here to bring cannabis into culture.
Sexy.
Hey, I don't know who worked on that one, but it definitely looked cool. I'm going to have to find out which one of our editors worked on that one. All right. So, hey, without further ado, Javier, how about we get into our interview? What I know everyone wants to hear about. It looks like we lost him for a second, so let's wait one more second. I think he's coming right back on. He was having some audio issues. So before we bring him on, I can pull up the stock here. Let's do that.
Yeah, man. So we are having Trevor Fencott. He is the CEO of Fire and Flower. They announced pretty interesting news today. We'll get into it in a little bit. For those interested, the TSX ticker is FAF, OTC ticker FFLWF. Once again, FFLWF. Damn those tough tickers. Well, so hard to remember, but I got it. I think
you got it. You got it. You got it. It looks like we got it back. So, hey. Let's go ahead and bring on Trevor. Go ahead and introduce him, Javier.
I mean, that's about it. I want him to tell his story because he's a super accomplished entrepreneur. He started 5 different companies. One of them, a very successful cannabis company that was acquired by Canopy Growth, New York Stock Exchange, CGC. In case you haven't heard of Canopy Growth, it's one of the largest cannabis companies in the world. So, you know, successful entrepreneur, successful exits, now running an extremely successful company that will be also part of the Cannabis Capital Conference roster this week. Trevor, welcome to the show.
Thank you so much. Thanks for having me.
How you doing?
How's the audio? I just want to make sure before we keep going. Trevor, can you hear us well now?
I can actually hear you just fine now. I was a little
perfect.
worried about the robot slave days before that.
Perfect timing.
All right. I'll let you get right into the questions, Javier. I'm gonna pull myself off, and I'll be back with some of the questions of my own.
Please be back, man. So, Trevor, how are you?
Good.
Fantastic. Great to hear. Tell us a little bit about, you know, Fire and Flower, for people who don't know what you do in Canada, and we'll get into the news afterwards.
Sure. Yeah. No. For us, so Fire and Flower is really a retail 2.0 company that's in cannabis, but it was designed to compete when things were really competitive as a next gen retailer first. Right. So you mentioned my background. I was one of the founders of Metrum Healthcore. We were acquired by Canopy, and I stayed inside the canopy for a while, but realized that channel conflict was going to be a problem, certainly in Canada, and mustered out and thought about retail as the next part of the value chain. And not being a retailer myself, having a technology background and obviously a cannabis background, It was important to look at retail landscape and realize there were a few companies that were really competing at the highest levels against the apex predators like Amazon and whatnot. So built the company under that kind of model. We said, look, what's the best of breed? Let's start from there. We're not pivoting from another sector. We're not pivoting from production into retail. And so Fire and Flower is a tech-enabled retailer. What we do is we use technology to kind of get a deep understanding of our customers. At the same time, then use that information to help our vendor partners, our product partners, make products that are more suitable for our customers and generate kind of loyalty in a twin sort of flywheel way.
That's fantastic. I know Mitch was very excited about the tech side of it, so I'll let him to ask those questions. But I do understand it's an important part of your business. It drove $1.5 million in revenue, like one of the components, right, on your last quarter. So how important is that, software factor for your entire business? What percentage of your business does it drive if you're in retail?
Yeah, so I mean that's the part that just spins out its own independent high growth, high margin revenue. That's with data platform partners, banks that use our tech, our analytics platform, and the producers that use it for product development and planning purposes. But what it really does is it allows us to get more value out of our customers. Our customers have a higher lifetime value. So for example, we know that with our Highflyer digital platform and our stores being tech forward, if we can get someone in our Spark Perks customer engagement program, so it's digital, they spend on average 45% more than a non-engaged customer. If we can keep them in that ecosystem for a little longer, in store to do things like deep digital clienteling, or outreach in the store, tech-enabled outreach in the store, that number goes up by 10, 20%. And if we can complete the transaction with delivery to your door, it of course goes up to upward of 80, 90% more value per customer. So and it's not new. We didn't invent this. We just took the best practices of, I'm going to call it traditional retail, which is obviously hyper competitive, and applied it to cannabis, because I think the business model was sort of, I'm going to open a cannabis store. People like cannabis. If I'm good, I'll open a couple, and then maybe I'll build a brand, and then peace, keep moving. So we said, let's.
I mean, it's not like it doesn't work. Of course, planning it out works better, and your stores seem to reflect that, right? So tell us a little bit about what went into some of those beautiful stores that you set up in Canada.
Yeah, so I mean, we really took a customer-focused design, because we weren't sort of starting with anything predetermined. So we looked at what retailers were really successful. I think people talk about the Apple Store model. I think they kind of got it wrong. Apple actually is taking from other retailers who know that bright, well-lit stores are important to people. Things have to be accessible. People need to feel comfortable in your store, and not like it's either out of their league in terms of use and experience with cannabis, or on the other side, sort of like maybe it looks a little dodgy. So we wanted to really hit the middle of the market and what we call mass premium. And I think we did a pretty good job with that.
Fantastic. So now,
all right, just want to jump in here, just really quick, Javier. I want to show off these stores, the ones that he's mentioning. So I got here the presentation here on February. As you guys can see here from the multi-banner retail experience, one of the things that I noticed that was really interesting, and I'll move a little down to explain a little bit better on that, was the approach that you guys have these different stores. And you have the everyday consumer store like Happy Days, and then you have your mass premium store like Fire and Fly Cannabis. So can you explain us how these brands are different and how this actually helps the company?
Yeah, I mean, our approach was we started with Fire and Flower as a brand, and again, being a tech forward or data driven retailer, we figured out, well, look, there's probably there's actually 50 different types of cannabis consumers, and probably 8 to 10 of them are the ones that I think everyone is going to be fighting over. They're really high value customers. And we realized, again, because we're data driven, that we're actually hitting 4, and I think we could grow into 5 under the Fire and Flower banner, but we were leaving a lot on the table. And I think that a single brand approach, even a very successful single brand approach in cannabis is probably not the right strategy in our view, because you think about cannabis, we have a saying in Canada that 25% of consumers or of everyone in Canada is consuming cannabis. This is on a government study, so people had to answer the phone and say, yes, I'm a cannabis user. So you can imagine, if you're answering that, it's probably a higher number, but it's not just 25% of one kind of person, right? that it's 25% of doctors, lawyers, police officers. It's a very democratic substance, which is why we like it. At the same time, then you have to have different brands that appeal to those different people. And that's what we do. Friendly Stranger appeals to a much more sophisticated, like cannabis connoisseur, maybe a little old school. Happy is very, very functional, no frills, and it delivers value. And then, of course, mass premium with Fire and Flower.
I do like the multifaceted approach, definitely.
Mm-hmm. And I think, this was part of a larger strategy, right? In the last 4 months, you announced quite a bit of news, right? An at-the-market offering, all these acquisitions, right? Like Friendly Stranger, Happy Days, Hotbox, Street Cannabis. You said you're going to uplist to the Nasdaq, and today you announced you're entering to the US. So, all this plays in. Why are you so M&A heavy? How does the M&A factor play into your overall strategy?
Well, I think you have to be open-minded. No one company is going to figure everything out. So we're always looking for companies that are doing something better than we're doing. And the reason we started with technology is because we could be best in the world at that. That was our background at Metro, and we built that company as a tech-forward cannabis LP. And so, with Fire and Flower, it was the same kind of thing. But we thought Friendly Stranger does a great job with accessories. They have a great customer base. Happy Days has a really strong following and has very good market penetration into smaller markets where they dominate. So we are always going to be looking for M&A where it makes strategic sense. It's not just about growing. And I think the other part of how we look at it is you have to scale quickly. Scale is absolutely determinative in retail generally, but in cannabis, I think it's also going to be a huge advantage. So we're currently the largest. We have, I believe, 77 stores in Canada. We're going to keep growing. And part of the U.S. story for us is we have to start growing in the U.S. through partnerships like American Acres. So we're always going to be M&A heavy, I think.
Oh, the old mute trick.
I am mute.
Oh, have you?
That's what we're here for today. So do tell us about today's deal, how you enter the U.S., and we'll take it from there because I have several follow-up questions. But American Acres.
Yeah, so for us, it's important to say that, look, we're a very compliant company. We're listed on the Toronto Stock Exchange Big Board. We want to go, we're in the process of our NASDAQ listing. So we always want to be compliant. So we figured out a structure where we could compliantly start to build our market presence in the US while at the same time working with our regulators. So that's kind of the first thing is they are separate entities. It's a partnership. But what we realized that we had done quite well is we canvassed the U.S. marketplace, and because it's been fragmented, in Canada we had the advantage of having it federally legal from sort of almost the get-go. So we were able to develop a lot of systems and tech and invest in it because we had this opportunity, in Canada. We can now take that into the U.S. states, particularly very competitive marketplaces like Colorado, like California. There's a lot of activity there, and we could partner with someone in the U.S. that's going to do these things. And, first store is going to be in Palm Springs, but we're hoping for more of these acquisitions where we can put our tech into those stores. They'll be Fire and Flower branded stores and help that American Acres actually compete very effectively in a fragmented mom and pop driven environment so that when we're ready to roll them into the mothership, so to speak, and hopefully the NASDAQ mothership, that they've been able to build a brand for us down there, and they've received value because with our high fire tech, that value they've received is actually being reflected in our discount to fair market value. So we're helping them become valuable, but we're also keeping the acquisition price reasonable and low because again, you've seen the multiples. U.S. MSOs trading at 3.5 times, 3.5 times 2022 revenue. I would love for that to be the case, even if it's in U.S. dollars. I still think that would be great.
Just for clarity, a lot of people watching this particular show are not necessarily frequent traders in the cannabis market. So, for some clarity, Fire and Flower can right now list on the NASDAQ because it operates in the federally legal market of Canada, right? If you were touching the plant, meaning actually selling, transporting cannabis in any way in the U.S., you would not be able to list on the NASDAQ, right? Is this the main reason why you choose to license the technology to American Acre versus acquire it and just retain the option of acquiring in the future should rules change, or what's the situation there?
Yeah, I mean, there are ways that you can access it. There's the Canadian stock, the CSE up here in Canada, which has broader rules. But we really want to keep high grading our corporate performance. So for us, the Toronto Stock Exchange big board was important. NASDAQ is obviously a premier exchange. And our goal is to be a global cannabis player. I mean, that's why we've got our strategic investment by Circle K. We're the owners of Circle K, Alimentation Couche-Tard. And they're in 25 countries around the world, 16,000 retail stores. So that's our kind of strategic partner. Our vision is the same. We have to go to the U.S. We have to go to every country where it's legal. So to do that, you got to keep high grading your investor performance as well. So I mean, that's the reason we can list on NASDAQ now, because as you say, we're not plant touching. We're completely compliant. And I think what you're going to see is once it becomes federally legal or the Banking Act is sorted out in the U.S., you're going to see a flurry of activity. And it's important for us to get out in front of that, so we're on the leading edge of the wave and we're not trailing the wave, because I think there's going to be a lot of blood and capital left on the floor as soon as it becomes federally legal in the U.S.
Yeah, totally. So one of the things people want to know is, what will the new ticker be when you start trading on the NASDAQ? Can you tell us? I mean, it was not revealed at all. Give us a scoop.
Well, I doubt it's going to be FAF, because that's a financial institution in the U.S.
First American, right? Yeah.
No, I don't know yet. Actually, we're still in the process of that. I think if we could have gone back in the time tunnel, FAF, maybe we shouldn't have chosen that, because again, it is very confusing with which is a financial institution in the U.S., which sometimes has some troubling news. So we're going to try to distance ourselves from that.
And it's a $6 billion company, so it's on the news often.
Yeah.
Often enough.
Yeah.
So, and why did you choose to uplist, right? And why now? I mean, of course, there's benefits to listing on the NASDAQ, but at the same time, there's benefits of, listing on the OTC. One of them would be, for instance, you being able to acquire American Acre right now, or another company in the States. Costs are lower. Some of the requirements are different. So why uplist to the NASDAQ, and why now?
Yeah, because I think the NASDAQ is the de facto, it's a great global platform. Right, I don't think we would do much beyond NASDAQ. NASDAQ's tier 1, and it allows us to really push our global footprint and global agenda. Like, we're going to be in every country where cannabis is legal as it becomes legal. Again, you just need to look at our partner, our strategic investor, Alimentation Couche-Tard. Again, 25 countries, 16,000 stores. You need a platform to do that, and we believe NASDAQ is the right platform. Got visibility. I've got a question here that says, why NYSE? Well, I mean, again, New York Stock Exchange is also a very, very good tier 1 exchange. I think NASDAQ for us, though, is an exchange that's also sort of tech driven, and we are a tech forward retailer. So I think if we were just cannabis, it might make sense. But if you look at how we're doing the things and the way we've constructed the company is a tech forward platform. And that's how we're entering the U.S. is using our tech, right? So I think it's a better NASDAQ story. NASDAQ investors will understand what we're doing a little bit better than perhaps just cannabis.
Yeah, love it. Mitch.
All right. So one thing that I want to get into and touch is definitely your products, your high fire products. So can you explain us how each one kind of works here? I have been interested there in the digital retail platform. I saw a little bit more about that one, and it's pretty interesting with the e-commerce and kind of the environment that we're in. So can you explain us how these three work?
Sure. Yeah. So Highfire IQ is essentially our data and analytics platform. So every touch point of the retail journey for us is something that we want to keep track of, so we can optimize the customer experience, and also so we can make sure that our stores are delivering for our customers. And we have two groups of customers. We have the retail customer that comes in the door. We also have our product customers who we work with to try to make sure we're meeting our customers' product needs. So, that's Highfire IQ. It's currently now outside the cannabis ecosystem, and it's used by financial institutions when they're doing their analysis of other companies in the cannabis value chain. So it's quite a useful analytics tool. And it provides us also the ability to run our stores more efficiently. So it's not just sort of sales data, it's everything from sort of like interactions in store, what kind of products are selling, but also looking forward and managing our vendor partners to make sure they're getting us product on time. Again, a lot of these pieces of technology exist in retail. They haven't been applied to a regulated industry like cannabis. So we're quite excited about Hifyre IQ. Again, having that ability to make data-driven decisions is extremely important, particularly as it becomes more competitive. So that's Hifyre IQ. Hifyre Reach is, again, this is really about, if you look at modern retailing, so not just I'm going to have a cannabis store, but the bleeding edge of modern retailing, they view the store as media. The store is itself a media channel, right? So we're getting away from like buy low, sell high, please come in my store. The store itself is a media experience, a media channel. So if you look at it that way, and these are the best of breed retailers out there. This is not, again, we're not inventing stuff, but we're implying it to cannabis. If you look at Kroger's, you look at, Target, you look at Walmart, all of them view stores as media, and allowing outside groups to access that their store as media is extremely important. So bringing people into the cannabis ecosystem, allowing our vendor partners to reach into our ecosystem, going out and finding age-gated environments where we can bring people into our Spark Perks customer engagement program. These are all sort of key. So again, nothing new here, but new for cannabis for sure, because if Kroger's is doing it, if Target's been doing it, and they all have, you'll see them. They're internal ad agencies that is media, stores media. And so we're doing the same thing there. That's Reach. And the third sort of part of it is our Spark Perks customer engagement program. Obviously very, very important as well, which is if you, actually Hifyre 1 you've got up there, actually that's probably the fourth pillar. Spark Perks is our customer engagement and loyalty program, which is important. But Hifyre 1, there is actually all of the advanced retail operations that you would need to really compete at the highest levels in retail. And it's not about cannabis, it's the highest levels of retail. So all in-store kiosking, menu boarding, deep dive on clienteling. So knowing what's in inventory at any given minute. We have an advantage here in Canada because the product SKUs are standardized. So we're able to do a really deep dive and say, well, hey, by the way, like recommendation engine. These are really, really important retail features that if we can apply them early and aggressively into cannabis, again, we were designed to compete with the apex predators. This is how you do it. Yeah. And this is what the U.S. Retailers are really, really happy about, is we can bring this down there, and I'd say it's a deep dive. So Hifyre 1 is interesting. Every e-commerce, delivery, all those modalities that in the pandemic are so important, we have, and it's very, very deep. You look at some of our tech competitors on that side, things like Leafly, things like Dutchie, great products, but they're designed to be thin and broad. They're everywhere, but if you're going to be everywhere, you have to be very thin. You can't know what is exactly going on in inventory in every store, in every state, in every market. It's just too much. So you have to be thin. Our strategy is go very deep. Go extremely deep into the store. So when we acquire a store, we can apply that deep dive into the store, drive up lifetime value of customers, make the store more profitable, and kind of rinse and repeat. So you can start to see why California was so important to us. Having a partner that's going to kind of almost be our roll-up engine ahead of legalization and rolling up these companies, getting a mom and pop, plugging in Hifyre, Fire and Flower branding it, increase revenue, profitability, and kind of rinse and repeat.
Love it. Let's bring up that chart. Can I? I think so. Can I show my screen? Yeah, I think I can. Yeah, first time I did it. Let's look at that chart. Can you see it? Mitch, can we see it?
Oh, wow, that looks like a technical chart.
That's awesome. So what's been going on? Almost an entire year on the up, So what has been driving this performance? People want to know.
Yeah, well, I mean, I think that the big misconception, certainly in Canada, and I understand why it happens, it's just unfortunate, is we had a lot of licensed producers out of the gate in Canada. They took a ton of capital, and then frankly, I don't think that they performed up to expectations. And we had sort of a huge, when you have a glut of capital and you're not performing, that's a recipe for investor dissatisfaction. So there's kind of a hangover in Canada. Like after legalization, there was this real moment of, okay, well, now what? What are you guys doing? Who's going to be profitable? When are you going to be profitable? So even though we are in retail, which is a totally different segment, I think we kind of got tarred with the same brush, and people just said, well, it's a cannabis thing, because again, in the US, an MSO is often vertically integrated. So you'd be producing cannabis and selling it at retail. So I think we kind of, we had a bit of a challenge of differentiating the story. And I think that the COVID hit, and people thought, well, what happens if you can't sell cannabis? Well, if you can't sell cannabis, obviously you're going to have a hard time running a business. So we really took it on the chin. But then again, our plan is the long plan. And people saw, oh, okay, well, you continue to show like quarter-over-quarter massive growth. You continue to show, like we reached positive operating EBITDA last quarter. Like we're doing all the things that the licensed producers who were funded in 2015 are still not doing. We're doing it, right? Our revenue growth is higher. And I don't just mean Fire and Flower. Even our competitors are showing the same growth. Retail is a very sustainable, very powerful part of the value chain. I think people are starting to recognize that. And as we started making announcements, as people, at least for our story, started to plug in the connection between Circle K, our strategic investor, and what we're doing, because to be frank, Alimentation Couche-Tard doesn't ring a bell in the U.S., nor should it. I mean, it's a tough. Circle K people know, but it's a $48 billion company that's our strategic investor, right?
Ridiculously big.
Yeah. And if you look at one of the slides in our deck, I had to kind of reformat it. I think that helped a lot, showing this increasing engagement by Circle K with us. So you can start to see, look, cannabis is not going to be about the prettiest store, or it's not going to be about Tiffany and Cartier at the end of the day. It's going to be a convenience-driven model. I don't mean it's sold in convenience stores necessarily. I do mean that people need to access it the way they want to. So we've experimented pretty clearly, running a pilot program where we have 2 Fire and Flower stores co-located with Circle K's. Now they're smaller footprints. These are 500 to 600 square foot stores. So our vision is, look, you have experienced stores like Friendly Stranger, Fire and Flower, come in, be educated. Like let's have a good, a retail experience, a tech forward experience. But let's also have spoke locations where you can, click and collect, or delivery nodes can be done through that. So and those are very capital efficient. Right, our retail partner in that point is monetizing their real estate investment. So we did that in Alberta. We did 2 stores, and it was so bizarre. It was crickets. We were thought this is going to be a great announcement, co-locating with Circle K, and I think there's just a lot of stuff going on. And then a couple of months ago, we announced, well, hey, now we're actually selling gift cards in 300 Circle K locations. Like we got 75 stores.
That's a cool gift. Honestly,
well, and you know what? It's the best. It's the best kind of gift, because when you're given something like that, it's a referral from a friend, right? So that's the highest loyalty factor you can get, is a trusted referral. So it's a guaranteed sale for us, but also it's that word of mouth. You're spreading the message about Fire and Flower, right?
Yeah.
So
unfortunately, we have to wrap, but congratulations on the recent performance. Congratulations on today's announcement. And a special little footnote before we finish. I noticed you have out of your management team, like senior management, 11 people, 4 are women. It sounds like it's, of course, not enough, but it's so much than most other companies out there.
Yes.
And it's a topic that I really care about. I look at it, every time I talk to a company. So, tip my hat, kudos on that. Thank you for joining, and we'll see you Thursday and Friday at the Benzinga Cannabis Capital Conference, bzcannabis.com for more information. Trevor.
Thank you so much for having me, guys.
Thank you. All right, guys, that was Fire and Flower Holding Corp.
That was fire,
had a strategic agreement today with Canadian private company operating as American Acres manager, including an agreement for the license here. So definitely check it out, guys. It's going to be moving towards the New York Stock Exchange. We couldn't get the ticker, unfortunately, Javier. I saw you try. I can't blame you for trying there. So I'm excited to continue on as we continue moving towards legalization in this industry, and we see kind of these low names start to move towards the market as we get that legalization. So it'll be interesting to watch these smaller name ones and see them move. And it was interesting to see some of the strategic approaches that company's taken. So thank you for the interview, Javier. It looks like we got the one and only, the biotech queen next, guys. I'm excited to bring her on. I've been keeping up with her myself. I need to get on some of this biotech game. I don't know if you guys know about that, but definitely need to step up my biotech game. So let's bring her on. First thing, I'm just going to play the intro to bring her on. I think there's no better way to introduce her than her own intro. So let's bring her on.
Wow,
What's up,
I feel so fancy with that intro.
I know. I'm sorry that we got off to a bit of a late start. Javier and Mitch went a little long there, but if we need be, we will go past 3 o'clock to get to all these questions. First off, how was your trip? Hope you enjoyed it.
It was awesome. Yeah, the snow was amazing. So it was, I mean, one of the kids, my friend's kid, broke her wrist in the first day. So that was a bummer.
Oh, man.
Yeah, snowboarding. So
do you board or you ski?
I snowboard.
Oh, okay.
Yeah, but
I'm skiing myself. Are you goofy or
I'm
no?
a goofy. I'm a goofy.
Me too. I'm goofy.
snowboarding.
I'm goofy. I took a lesson once and I was goofy.
Yeah, no, definitely. It's a lot of fun. Yeah, she broke her wrist, so my daughter no longer had her sidekick. So it's kind of a bummer.
Oh,
but,
no.
you know, it is what it is.
Bummer.
But the conditions were amazing.
Good. Glad to hear. That's all you can ask for.
Yes.
All right, let's talk stocks. I'm going to pull my charts here.
Yes.
Levy, walk us through what's going on your screens today.
The market is ugly today, huh? But I have a couple of my biotech stocks that are keeping me a little happier than usual comparing to the market. So did you check BCRX? We're doing really, really well on that one.
Yeah.
I hope that Jason's still holding.
I believe I don't know for sure, but I believe he is. I think he would have made a big deal if he
Yes.
if he had so.
So there's so many good, exciting news coming. We're still waiting for the Factor D pipeline data to come out.
Whoops.
And we're still waiting for the European approval. And some people are pointed out to me that the $15 calls are kind of a hot coming up, I think, for March. So I think people are expecting news and people are very bullish on BCRX. So when people, say, oh, can we change tickers? It's just because there's so much upside on this company still that I will continue to talk when I still see a room for growth. I won't stop talking until I exit the position. But this company here has a bright future. So I'm really, really excited. And that's why it's doing so well, because everyone is on anticipation of waiting for data and also for approval. And also we have earnings coming, which is coming up this week. So we're going to report the first sales numbers for their only oral medication for HAE. So that should be very exciting week for us.
All right. So BioCryst looking good, up 1%. And that up 1%, that means a lot more on the day the market's down, right? Because it's one thing if like your stock is up and the market's up. That doesn't say a lot. That doesn't say anything about your stock. But if your stock is up and the market's down, that says something.
Yes, definitely. So another one that I want to point out that I'm losing money right now, but I'm not really concerned. I feel like there is definitely some manipulation on that stock because we're waiting for FDA approval in 6 days. ATX. And sex is ATNX. Sex is that people are gonna completely. It's so funny. They're gonna chase once we get approval. But I'm very bullish on this company, not just short term but long term. They have this molecule Sequidar that has the ability to turn IV chemotherapy into oral pill. And we're waiting on the approval for breast cancer. And let me give you guys some little background why you guys see our data on metastatic breast cancer first. It's because it's kind of unethical to do a neoadjuvant. So meaning neoadjuvant is when you treat a breast cancer before surgery. And so they want to do metastatic because they wanted to do it as a third line, because it's unethical to put a patient as a first line on neoadjuvant on breast cancer. But think about it, all the neoadjuvant patients are all in their 30s. When we do seek data, seek studies on that, it's going to be huge because younger patients with breast cancer on their 30s, they're busy, they don't have time to go to the hospital. But in terms of a savings, I mean, this oral pill is going to save $1,000 per patient just per dose compared to the IV. So hospitals are going to save a lot of money because, or not hospital, I'm sorry, payers are going to save a lot of money because that's going to avoid patients from going into the hospital settings. So the pipeline is amazing. You know, as long as all the studies they have in the pipeline are from generic chemotherapy that are in intravenous, they're all going to become oral formulations. So I'm still very bullish, even though, you know, I'm a negative almost 2,000 here because one of my prices that I pay was 14, but it's just my long-term price for this, it's at least 20. Actually, my short-term price up approval is $20 a share. So I'm very, very bullish on this company.
All right, show me the money.
Yes.
Show me the money. That's right. All right.
And then we have our baby. You guys, did you get on that, Spencer, the KMPH?
No.
You didn't, huh?
I am surprisingly lazy.
Yeah.
when it comes to my portfolio,
So you don't want to have to watch anything. You just put everything tuck in.
I like to think about buying things, and then I think about it forever.
Yeah.
So, dude, don't follow me when it comes to that, because
So this company is interesting because they I never even told you guys the story about this company. They got delisted from NASDAQ, and that's why they lost out the institutional investors before they came with the phase 3 data. So they lost, they got delisted, and then we did a reverse split. And that's why the market cap is so tiny. But I'm really, really positive that we're getting approval March 2nd. Like, again, I don't advise anybody to hold through PDUFA. I usually don't do it. But when I have a conviction in certain companies, I do it because this is not one hit wonder. So if that dies, I will buy more and average down because they do have a lot of good stuff in the pipeline. And they also just have a patent to make molecules with less side effects, less insomnia and less loss of appetite. So they're going to be able to sell that patent to other companies so they can use when they're doing other drug discovery. So I'm very, very bullish here. I feel like we can get 15 before approval. And then sky's the limit over here. So I'm holding.
And again, just to repeat, the PDUFA date is when?
March 2nd.
March 2nd. Okay.
Yeah, so right around the corner. And then I added, there was a lot of people asking me about ITRM. So I added to my swing position. They do have 2 catalysts coming up. They have they're coming up with the antibiotic for urinary tract infection to compete with Cipro, because a lot of patients don't tolerate well Cipro. And they have 2 conferences where they're gonna be presenting. February 25th, they're gonna do an SVB Leerink Annual Global Healthcare Conference. So that's exactly in 3 days. And then we have the big biotech conference, which is HC Wainwright Global Life Science on March 9th. So I am holding this. My price target short term is 4. So I'm still holding. So that's one of my additions. I added at 210, 212. So I'm a little bit under the water here, but I'm not really concerned. And then I also added INFI. And I added right after the offer at 4, and now it's like at 376. They do have some data coming out, but their preliminary data with the Genentech, addition to Genentech drug, is very, very promising. And I was looking into the data for this company with a friend of mine that sells the company that has the drug that they were studying with. And she said that everything pans out the way it's panning out in phase 2. She said that there will be a huge addition to the breast cancer portfolio. So I'm holding, and I'll probably swing a little into the data release, and then leave some long term in my account for sure. Another one that I feel like this is a $10 stock is an SPR. So NSPR, I feel like they're holding the price down because there is a possible vote on the reverse split of a stock. And so a lot of people ask me, what is a reverse split? So it is a reverse split is a way of companies to do few things. They can either do one for to regain compliance with the Amex or Nasdaq, and they also do it to reduce the amount of shares that they have outstanding, to eventually, which is kind of a sucks, to eventually to add more shares to dilute, to raise more money. That's what happens when you don't have a company that has a product, but this one has. And then they also do it to increase the share price of the stock. So to increase the share price, to be able to be more attractive to institutional companies, because a lot of these institutional companies cannot or will not buy anything under 5. So that's one of the reasons. And the reason I'm still very bullish here is that I posted on Twitter is that not only they got clearance to start FDA trials for their amazing new stent, but also they are just had a China. China is a huge market. They just have distribution deals with China. They will report some earnings on their sales all over the world, and they just had a renowned cardiologist added to the team to start trials in the US. So in that case, they don't want to reach compliance on RS. They are trying to do this to acquire more investors. And I'm okay with that because they do have a really small float as is. So their float is only 30 million. So even if they do a 1.5 RS, the float is going to be tiny at 6 million. So at short term, you might see a little dip, but then it should rip right back up. That's exactly what happened to KMPH. I was negative at first, and then I am way positive. I'm 100% profit on KMPH, but they also went through a reverse split for that reason. So still very bullish here on this company. I feel like this company has a huge upside potential, and having Dr. Gary Rubin part of the company. That's another thing too. All these insiders added February 10th. They added way over 1 million shares among all 4 of them. So if they're not concerned with the RS, neither should I be. So I feel very confident this is a long-term hold for me, and I'm holding at least until 10 for sure. And what else do we have? And that's an SPR, HJLI. I am still holding that one long. I told you guys that the only company out there that has a solution for CVI, which affect millions and millions of the patients and is a very painful illness. The only remedy right now is bandage. So when you look at the trials that they've done, 100% improvement. These patients are actually going back to exercises. So if you guys go and Google CVI, is a very debilitating vein disease. So I am holding long. We should be receiving some news from our trials, some updates in our trials from the FDA as well. So definitely holding long this company. This company is going to be amazing. So tiny little market cap as well. So, but they also went through a reverse split, and I feel very, very confident with this company, and not a lot of people know about this company. So, and I guess I could go to questions and answers if you guys wanted to get there. Yeah.
Let's do it. We've got a few tickers, as always. People have their questions and they need their answers.
Yeah.
Here's a question. Someone's asking, is Jazz considered biotech? Yeah, Jazz is biotech. For
Yeah,
sure.
of course.
Yeah, Jazz is one of the larger players. Let's see. Jazz bought Kite, and then who they just buy? They just bought Gilead, right?
No,
not Gilead. Not Gilead.
Gilead bought Kite.
Gilead bought Kite, and they bought GW Pharma. That's what Jazz bought.
Yeah.
Jazz bought GW Pharma. Right.
Yeah.
Okay. Yeah. Okay. So let's see. Tickers. You know UBX? You don't need biotech?
No, I never heard of that one.
Okay.
Write it down.
Can you talk PAVM? PavMed? You know that one? PAVM?
No, I do not know that one.
What about MREO? Mirio.
Oh yeah, I like that company.
Why?
I like it a lot. They just have a good pipeline. I think there's a really good potential there. But like I said, I can't own them all. Like I can't have my portfolio being 40 biotech companies. I'm not a biotech hedge fund, but there's a lot of companies out there that I would have loved to own, but I just have to, to pick between, so, but I like that company. That company
when you say they have a good pipeline, what does that mean? They have a good pipeline? Why?
They just, the last time, now I have to go here and check, but I remember the last time I checked, I swing that stock before because it's a low flow, and I just saw that they looked really good and they had some data coming out, and they are going to be also featured at the Fireside Chat on the conference I told you guys February 25th. So just the data that they present, the last news that they had. So it, when I'm saying pipeline, there's potential, for sure. There's a potential here.
Okay. Going back down here. Any news on Sava? I didn't see any news on Sava.
There was some news on Sava, right? Oh, they're waiting for their phase 3 data.
Going to my Benzinga Pro, there is news.
They're waiting for phase 3 data.
They reported end of phase 2 results with the FDA for its Alzheimer's candidate. Man, maybe you can translate this for me here. I'll make it bigger. Maybe we can have Vivi translate this for the rest of us.
Let me see. Maybe I'll just go here. Let me see. Let me see here. I should have had my Benzinga Pro.
Okay. Deal reached to use ADSA COG as co-primary efficacy endpoint. Phase 3 program remains on track to begin in the second half of the year. All right. We got a timeline.
Yeah, we do. Oh, yeah. So Cava Science announced positive end of phase 2 meeting with the FDA and outlined. So, yeah. So they're just saying, hey, the phase 2 looks really good. Let's move on to phase 3.
There we go. We're getting there. We're getting there. That's what you want to see, right? Okay.
And it looks really, really good because it says here the potential Alzheimer's treatments open doors for lucrative licensing deals. So there's not a lot of really good Alzheimer medications out there. So that looks promising, this company, yeah.
Awesome. Okay, back to the chat. Let's go to The Nation is asking about DPW. That's not a biotech, is it?
That's not a biotech.
Right.
Doesn't that move with Bitcoin? I think that's this company moves together with Bitcoin.
That's a crypto play. What about
it's a crypto play. I've played that one before.
What about CLSN? I don't know this one. So
Halcyon. I played this company so many times. It's a cancer. I don't remember. They just, look at it today. I don't know if they had a news, but I've played this stock before. but I couldn't tell you why I play. Okay. So they receive FDA fast track designation for the Gen 1 advanced ovarian cancer. So that's why it rised today, that they had got fast tracked. So that means that, that's really good news when you get fast tracked, is because the FDA feels a need of accelerating the process. Like, let's stop with the BS of like a lot of paperwork. Longer, like when you fast tracked is like, okay, let's get this drug on the market. Let's start studies. So obviously they're seeing something here, that is promising. So yeah.
What about I gotta scroll up here. There's so many questions. We've talked about BNGO. I feel like
BNGO is an amazing company. I needed to add it on my long-term account. I really do. Yeah. BNGO, it's one of the companies I want to just leave it on my IRA. I feel like
wow,
it's an amazing company. Yes. So it's definitely a huge potential there.
We've talked about TRVN at length, ONTX.
They're asking.
We've mentioned that before, right?
Yes, we mentioned that before. I just got hammered at Twitter because I said a long term. I mean, they're still studying in mice, So I don't like to because of my previous experience with so many reverse splits throughout. A stock that you buy at 2, 5 years later, you would have to be at 50 to break even, and the stock is still at 5. I have several examples, but I think short term should be a good swing. The charts look good. But long term, I mean, I would have traded around my core if you really, I mean, it looks promising, but as in mice, I mean, if we could get every drug in mice to be promising in humans, oh my God, we would have like found the cure of cancer. There's so many drugs out there that you study in mice, and then when it gets to human trials, it doesn't even pan out. So it's not a company I would have hold. And I got burned. This company, I got burned. The CEO phase 3 announced 4 weeks earlier, and he kept saying that, we are in talks with the FDA for new drug authorization. We're gonna seek approval, and they released the data 4 weeks earlier, and it was totally a flop. I lost a lot of money, so yeah, I'm a little bitter on that company for sure. I don't even want to touch it because I feel CEOs completely deceived everyone. So I'm a little hurt with that company. So I would be a little biased to give my opinion on it. But if you want to swing it, I think it's a great choice. If you look at the technicals, but fundamentally, I feel like there's many years ahead to get there. Nine. Hey, swing. I mean, if you want to swing, that's great technically, but don't marry a stock that does not have a commercial product. That's all I'm saying. That's it.
What about Red Hill, RDHL, Red Hill Biopharma? You know that one?
Yeah, I heard that one. That one seems to be good. There's some really good potential. Don't ask me what was but I've seen it and it looks good. Yeah, I definitely approve that one.
Wayne, how do you subscribe to the Benzinga newsfeed? pro.benzinga.com. There should also be a link in the description of this video. But if there isn't, pro.benzinga.com. To answer your question, Wayne, we'll do a couple more. Let's do a couple more. Let's look at CRSP. We know that one. That's not necessarily.
Yeah, that's an amazing. It's amazing amazing company. Yeah, for sure. That CRISPR technology. I mean, no doubt, is amazing company.
TMDX Transmedics.
No, I have not heard of this one.
Chilled Monkey says portable transplant machines. Okay.
Wow.
Don't know anything about that.
Mm-mm.
Cool. All right, let's find one that Vivi knows before we wrap it up here. CTRX. That's right. Or CRTX, I think is what they meant. CRTX.
Yeah, I heard good things about this company too.
Okay. CBBT we've discussed.
Yeah, I'm still holding that one, guys. I mean,
Okay.
it sucks the recent move, but they are acquiring a company that has revenues already. So it's just for me, as I'm holding long, I feel like there's a lot of potential here.
Okay. Brian Penny's asking if CLGN any good. That
Never heard of that one. Oh my God, there's so many of them. Never heard of that one.
Rapid fire. HTBX, Heat Biologics.
Yeah, I used to play the COVID play. I bought it at 95 cents and I sold 80% at $4. And then I think if that's the price, I think maybe they went through a reverse split because it was a few months back. But I do not know the updates on their COVID. That was a COVID play for me a few months back.
Okay.
So I couldn't tell you if there's anything else on the pipeline. You know, at the beginning of a COVID, it was the race to get to it. You know, and then
I remember Lake. I remember Cytodin, CYDY. I remember APT.
I'm still holding Cytodin, CYDI, DY, not because of a COVID. Believe it or not, my friends at Genentech told me that, you know, the breast cancer initial dosing data was amazing, and it was at $3. They like buy it and hold in your IRA, and that's exactly what I did. You know, I didn't buy a lot of it, but I bought 2,000 shares and I left there, like long-term hold. But I guess they just unblinded the study. That's why people are a little nervous. They announced, of course, after a study's done, you unblind the study, because what happened is you do a double-blind study and you don't know who took the medication and who didn't. So now they're unblinding the study, but the fact that they announced that they're in talks with the FDA to review the results, that make people nervous. You know, so that's why the stock is reacting the way it's reacting, because people really don't know what's going to happen to, you know, once they read the trials for COVID.
Would SENS be considered biotech? SENS? Yeah, of course it would.
Yeah, I mean, the problem is biotech, guys, is more of when you have a biologic, like when you have more injections, when you have it's SENS is more like a diagnostic. It's not considered, but you know, it is on a I would say on a window of a pharma biotech. So they're all together. I'm holding calls, $3 calls here, because they are waiting for approval in the summer. But they are amazing because they have, you know, you put in little kids the blood sugar device for 180 days instead of your usual every month, every 3 months, I think. I don't have diabetes, but this one you just place and you can monitor your child's or adult blood sugar levels, but you don't have to keep replace them. It's for 180 days. So that it's a really good company. I'm really positive. Roche owns 11% of that company too.
Oh, good to know. Good to know.
Yeah. Yes.
All right, we went a little long, but we got a late start, so it's all good.
Yes.
Vivi at biotech_ST. Her Twitter handle is up on the screen there. Vivi, thanks a lot for hanging out with us. We'll talk to you again tomorrow.
Yes, I'll see you guys. Okay, bye-bye.
All right. We did not have options advantage today, so I wanted to bring on someone else to talk options, and not just options, but options as it relates to earnings, right? We got a really, really big week for earnings. Just to list a couple of the companies that are reporting: Home Depot is tomorrow, Square is tomorrow, Nvidia is Wednesday, Moderna is Thursday, Salesforce is Thursday, Domino's is Thursday, Beyond Meat's Thursday, DraftKings and Kronos are on Friday. So we got a massive earnings week, and that means the options market, people will be trading these things in the options market. I want to bring on our guest who can discuss this, Dimitri Pargamatic. He is the co-founder of Market Chameleon and options research platform. Dimitri, welcome. Thanks for coming on.
Hey, Spencer. How are you doing?
We are doing okay. We're doing okay. All right, I want to get a lot of questions about earnings, a lot of questions about options, because we know that options trades are usually volatility driven. Earnings drive volatility, which makes earnings reports a great time to trade, to put options trades on, if that's your thing. And so we got a big week. We got like, I don't know how many. I think it's like 800 earnings reports this week, something crazy like that. We got a lot. So let's jump right into this. We'll start macro and then we'll go into some individual names here.
Okay.
If you want to pull up your charts, if not, I can. But
sure,
walk us through sort of what you're seeing right now in the options market for SPY or whatever index you look at.
Sure. So just let me know if you see my screen.
I do. Can we zoom in a little bit? What are we looking at here?
Yeah. Well, let me just zoom in if you need.
Let's go that.
Is that better?
Yep, that should work.
Yeah. So when you called me up today, you said let's talk about earnings. So I just queued up the earnings calendar and just to start from there. But if you want to take a look at what's been going on in the S&P 500 in the earnings, we could start with that and then come back and take a look at some of the stocks with upcoming earnings. And we'll take a look at it from the perspective of how the options are lining up versus historical earnings moves and see if we can find some opportunities.
Yeah, maybe even before that, though, maybe can you explain what Market Chameleon does?
Sure. So Market Chameleon, what we do is we compile data on stocks, on options, on events. We put it all together, and besides getting the data in here, what we do is a little bit different than just looking at charts, but we focus on valuation models, theoretical values, statistical models, benchmarks, and that's because from our background, when we started out getting our training on the floor of the exchanges, those are the types of models that we used and we were trained to do. And these are things that we thought were kind of lacking out there. And that's when we started Market Chameleon.
Got it. And I got to say, if you are someone who trades earnings reports on the regular, there's some really good info on this platform for trading around earnings, and that's why I want to discuss that with Dimitri here. Can I just give you a stock and we can look at it?
Sure.
All right, let's start with Home Depot reports tomorrow morning. So
sure.
we're really up against the wire there on that. But let's start with HD.
All right. So before we get into the options, I just want to kind of really quickly get a frame of reference where Home Depot is and what it did last earnings, and then we're going to take a look at what people are expecting for the upcoming earnings. So I'm just going to take a look really quickly at what happened last earnings report. So we see here last time they reported November 17th. We see that Home Depot did beat the consensus estimates, the analysts, by 13 cents. They beat on the revenue side by 1.5 billion, but we do see that after the report, the stock was down 2.5%. And a lot of people don't realize this, but the stock's reaction, it's not necessarily to how the company always does relative to the estimates of the analysts. There are other reasons behind it. One is that this number doesn't reflect everything in a report, right? It's what the company might be guiding going forward, what they're saying is behind this number. And when you open up their report and start reading it and looking at management's discussion, that starts to really paint you the bigger picture. And it's important to see that. So, I'm not going to go into the press release to, read all what they said last time, but that's just important to know going forward as we start analyzing this a little bit further. The other thing is that the expectations in the stock, what's important to note is that it doesn't reflect what the analysts think. It reflects what the shareholders, the stakeholders think. It's the people who are buying and selling it. And we need to kind of gauge what we think the investors are pricing in. Okay. So not really what this estimate is. And we could see here that right now for the upcoming earnings, we see that the analysts' expectations are $2.61 on the earnings, 30.7 billion on the revenue, which we see if we compare that to the fourth quarter, it's higher than the last time it reported 228. It's expecting 261, which is good, right? There's growth, not as high as the last quarter. So we do see that the fourth quarter, just eyeballing it, seemed to be weaker than the previous quarters. Historically, the third quarter and second quarter. But I just wanted to kind of show you that, just to keep in mind, what we want to do is kind of gauge what the investors might be thinking heading into the earnings. So one thing we want to see is, well, where do we think the valuation is today versus historical? So I'm just going to take a look here and look at the fair value of Home Depot. And what I see is that if we use historical multiples, the implied value is $280.65. Right now it's $277.19. So it's really right there at the historical levels. And the way you do that is we take a look at the 3-year price to earnings ratio. So if we take Home Depot's market cap divided by its earnings, that's 22.8. So if we use that, that's the implied value. We could also take a look at Home Depot's market cap versus total revenue, just sales. And that's historically a 3-year average 2.2. If we use that as our benchmark, that's the implied value. The next step we want to do is kind of compare to the overall market, because the multiples in the market can be expanded and declined for different reasons, interest rates, expectations. So let's take a look at that really quickly. And we see that today's Home Depot PE 24.2, SPY, that's the benchmark we're using as the S&P 500. If we took those holdings, it's 35.3. So that's trading at a 32% discount to the overall market, Home Depot's PE. Historically traded at 20% discount. So if we use that as our benchmark, that's the implied value. And we'll do the same thing with price to sales. So price to sales right now, 2.4 in Home Depot, 2.8 in SPY. That's a 15% discount. Historically, on a three-year average, it's a 16% discount. If we use that as our benchmark, 273. So if we take the average of all these, we got 280.65. So we see we're in line, maybe a little bit of a discount, but there's not a lot of enthusiasm or pessimism right now being priced in versus that benchmark. So that's good, to know, because if we did have a lot of, air going one way or the other, we might have looked at it differently. And just really quickly, before I do that, I also just want to compare Home Depot versus SPY as far as like profitability and growth rate. So we see here, this is Home Depot's gross margins, and we see that 34% gross margins. That's pretty good compared to the rest of the S&P 500, 32%. Its net margins right in line with the SPY. Operating margins 14% versus SPY 13%, so a little bit above that. And when we look at operating margins, that's the margins that is being driven by their core business, right? So the company could have net earnings, but in those net earnings, they could have things like investments that they made, real estate that they sold. So this is just looking at earnings from their core business, which is basically selling the goods in their store. Let's take a look at the growth rates really quickly. We see that Home Depot last year in a coronavirus, their revenue grew by 13%, versus SPY as a total revenue declined by 1%. But even on a 3-year and 5-year average, it has been outperforming the overall market. Same thing with net income, same thing with operating income. So just really quickly, we wanted to paint a picture of ourselves from the valuation and fundamental perspectives. Make sense?
Okay. Yeah, that makes sense. That makes sense.
Okay.
Yep, keep going. Keep going, but I also want to give the chat a chance. If you have a ticker that you want to make sure to look at, drop it in the chat, and we'll go. But keep going on this for a second.
Yep. So the next thing, I also want to take a look at what are the expectations being built up between earnings. So we know that, as we saw, Home Depot reported earnings, they're down 2% because, the analysts, the traders, everybody got to see those numbers. They got to listen to the management. They inputted all that into their models, and that day the stock got repriced. Since then, there's about another 3 months between earnings that the stock will float or drift. And that drift is being built up by those expectations going forward, right, into the next earnings. So I just want to take a look really quickly and see, is there a lot of enthusiasm or pessimism being priced in? Because if there is, like I said, we might look at it completely different if there's too much enthusiasm in there or pessimism. So here, this is showing us that the drift since it last reported earnings was positive 2.3%. So that's what it gained, after repriced that first day. On average, if we looked at the last 12 historical drifts, it floats about positive 6% between earnings. So that's more muted than its average. And a one standard deviation move would be 5.6%, either up or down. So we see that's within its range. So overall, it looks to us not a lot of enthusiasm or pessimism, and the stock looks like it's pretty fairly valued relative to its historical multiples. So let's see what it tends to do going into earnings, after it reports earnings, coming out of earnings. So this is its historical behavior around earnings. Okay. So before earnings.
Yeah, this is my favorite thing, right? Because you could see, all right, forget if they beat or they miss. Forget that. What really matters is what does the stock do, right? And that's what you want to see. You assume, well, they beat, it goes up, they miss, it goes down. Not necessarily. Here we go. How has Home Depot behaved? How is it traded after or into and after an earnings report?
Exactly. And that's what we want to know, because what we really care about is what the stock price could do or potentially can do as investors. So before earnings, it looks to me that on average, it added, it increased in price. Looking at it for 2 week, 1 week, 3 days, 2 days, even 1 day. On average, a gain in price. But if we look at the number of occurrences of up moves versus down moves, slightly favorable towards the upside, not extremely. Some of them are close to 50-50, but on average, it has added to, there's slight run up into the earnings. Looks to me like after reporting earnings, it looks like 58% of the time, historically, it opened lower, 42% higher, for an average loss of negative 0.6%. If we take a look at, now remember we're talking about options, so we want to know the magnitude of the move, right? Because we're looking at volatility. When we're going to be looking at options, we're going to be looking at the potential volatility. So if we convert all these opening gaps to positive numbers, we want to see what is the magnitude of the move, up or down. So the average move, 1.9% up or down, high move, 3.4%, low 0.2%. So the high move happened to be to the downside, 3.4%. Okay, and if we wanted just to kind of see where has there been a bias more towards the upside or downside, we see the biggest positive move, 2.8%, biggest negative move, 3.4%. So historically, the bias was more towards the downside. The magnitude of the down moves, the high move was higher than the magnitude of the up move.
So someone just asked how this compares to Lowe's, which is interesting. So after you finish that, let's go to Lowe's real fast and just see how the two compare.
Sure. Okay. So here, really quickly, what did it do after reporting earnings? So wherever it opened after the opening, the average move from the open to the high of the day, we see it's 1.1%. From the open to the low of the day, negative 1.8%. From the open to the close of the day, the drift, whatever it did at the open, the drift, more often it was down than up. 58% of the time it closed lower, 42% of the time it closed higher, for an average loss of 0.4%. So here it looks like stronger going into earnings, weaker on earnings, and after earnings, it looks like, immediately after earnings, it tended to be weaker. Of course, we still need to see what they say, because what they say matters. This is everything else being equal. If they blow completely out of the water, then you got to put that into consideration. If it's kind of in line with what they say, then, that's when we're just trying to see what the potential moves are. But this is really quickly historical return distribution after reporting earnings in Home Depot. I'm going to show one more thing. We could take a look at a potential trade if you want to, or we could go straight to Lowe's. So
let's go to Lowe's real fast, because I want to give people more time we'll just do some tickers from the chat. Again, we're on with Dimitri Pargamanik. He is the co-founder of Market Chameleon. So just to see how all those Home Depot numbers, how does that compare to Lowe's? Let's just see real quick, and then we'll go to some stocks reporting earnings this week.
Okay, so over here we see Lowe's still also slight discount, 10%. You know, I'm not going to go through all the numbers that we just did, but that looks like slight discount, just kind of like Home Depot, maybe a little bit more versus historical multiples. Home Depot also about to report earnings. Let's take a look at what it did since it last reported earnings. So Lowe's here had increased by 18.3% since it last reported earnings. Actually, let me just see really quickly what it did the last earnings report. So here we see this is Lowe's. They missed by a penny. They beat on the earnings per share. They beat on the revenue. Stock was down 8.2%. That's what happened previously. So you could see here it closed $146.74 after reporting earnings, right? So day before 159.86, day after down 8%. Right now we're at 173. So obviously now we're building up, you know, expectations going into the next earnings. Okay. So how much of it? Let's just take, just so we could, you know, frame our mind around how much of a expectation. We see it's up 18.3%. That's this green bar here. On average, it moves 6.8%. So above that historical drift, one standard deviation move up or down 10.9%. So this is about a 1.7%, 1.7 standard deviation move. So here we're building up a bigger expectation that Lowe's will do well. Okay. So that's what's going on here. Does that make sense? Okay. So you could see here, you know, this is, and I'm just going to take a look really quickly what it tended to do after a big expectation. So we see here there's a drift, 35%. It reported earnings. It did beat. It was up 0.2%, but you could see that the move to the upside was kind of muted because it was already up 35% prior to that. Here's another one. It was up 22% prior to the Feb 27 earnings report. It looks like it did beat by a penny. Missed here. It was up 2.5% after reporting earnings. So that's really quickly just in Lowe's, giving a comparison. If you want, we could take a look at the options, or if you have other questions, no problem.
Well, let's just do a couple from the chat. I'd asked for tickers, and a couple were dropped in. Someone asked about Moderna. You know, these biotech and these healthcare names, earnings. I think earnings matter, but maybe they don't matter as much as trial and trial results. Nonetheless, Moderna does report earnings Thursday morning. Dimitri, I don't know if you want to look at that. mRNA.
Sure, no problem. What is the symbol on that?
mRNA. As in the DNA thing.
Okay, so I'll take a look. Let's just take a look at what it tended to do around earnings.
Yeah,
we'll just jump to that. So here we go. So prior to earnings, before earnings, looks to me like it's pretty. You know, it was kind of weak starting out. You know, 2 weeks ahead, 1 week ahead. It was pretty weak. Really the best day was like on average the day before, 63% of the time up, 38% lower. Day of earnings looks to me like half the time it got higher, half the time it got lower. Average gain was 4.4%. So the gaps to the upside far exceeded the gaps to the downside. So we could see that here, right? Look at these big gaps to the upside. The down moves have been muted so far. Not to say it can't happen, but that's how it's been behaving. So here you see to the upside, high move 22.4, to the downside, low move 3.5%, which is telling me if you're just playing it historically from just a volatility perspective, you know, the call would have been much better because buying the call and the put when it was going down didn't move, and it doesn't look to me like it moves enough. Okay. From the open to the high, after the opening, it looks like the average move was 5.9%. From the open to the low, average move was 5.6, down 5.1%. From the open to the close, looks like it drifted lower more often than higher. 63% of the time lower, 38% of the time higher. Average loss 0.7%.
All right, so more often than not, stock trades down after its report.
After the opening, not after the report necessarily, but after the opening, wherever it opens up, then it drifts lower.
So
you can see it open higher.
Morning. Okay.
Yeah, exactly. So that because that opening would be part of the move, right? But once it opens, what does it do afterwards? That's that drift.
All right, let's look at Beyond Meat. They are reporting when? Thursday after the close, which means we want to look how they trade the 1 day, 2 day, 3 days ahead of the report, and also Friday morning would be the day after.
Right. And this the Beyond Meat, of course, it doesn't look like they have a full 12 quarters yet history. So we have a small sample set to look at, but this is so far what it did. So it looks to me that there was historically 3 days before looked like a pretty good run up. It looks like maybe even 2 weeks before, but 57% of the time it was higher, 43% lower. Here, 3 days before, 86% higher. So maybe that's when investors who were bullish on that stock, tended to come in 3 days before. After reporting earnings, it looks like 71% of the time opened lower, 29% of the time open higher, average loss 6.2%. Average move at the open, up or down 17.8%. So very volatile. That's a lot of volatility at the opening price. High move to the upside 30.3%. High move to the downside 21.5%. So volatility both directions. After the opening, though, let's take a look. So you could see that more often than not, it did open lower. But what did it do after that opening price? So from the open to the high, average move up 10.8% versus from the open to the low, down 2.9%. So there, seemed like that's actually when the buyers started coming in after the opening. Reported earnings, wherever it opened, then the buyers came in. So you could see here from the open to the close, 86% of the time, it finished higher from the open for an average gain of 4.8%. So that's Beyond Meat really quickly. Price to return distribution after reporting earnings.
Yeah, no Google in the chat. That's what the right side of the chart is. It's the 1 day performance is on there, right? That was your question.
After coming out of earnings, you mean?
Yep. That's what he was asking. He or she.
Yeah, exactly. So this is coming out after earnings. So, you have the earnings, everybody gets a chance to reprice it, input their models, and then what happens the next day. So next day, it seems like, it does add to gain 71% of the time. It was higher for an average gain of 5%.
All right, we'll do one more. FIVN 59 reports today after the close. This is not one I'm super familiar with. Smaller company.
FIVN. So let me just take a look. I'm going to open up this informational. So software infrastructure, provider of contracts. I don't know this one. It sounded familiar, but that's the space it's in, software infrastructure. Let's take a look what this stock did historically. So it looks to me like 2 weeks prior to earnings, that was probably, or actually 1 week prior to earnings, started to have a run up. That's over here, 83% of the time. For that 1 week hold going into earnings, it was up for an average gain of 4%. After reporting earnings, looks like 75% of the time open higher, 25% of the time lower for an average gain of 6.2%. Average move up or down 8.3%. So there's a lot of volatility there at the opening. It looks like high move to the upside, 20.5%. The high move to the downside, minus 7.1%.
Okay.
This is what it tended to do after the opening. From open to high, average move 4.5%. From the open to low, 4.2%. And tended to drift lower more often than higher, 67% of the time lower, 33% higher.
See, Sebastian has the right idea. He doesn't even need the numbers. He just sees, more green than red. We're good. More green than red. We're good.
But you still want to take a look at, like I said, you want to go through there, take a look at their fundamentals, take a look at what's going on, in the stock. I mean, I think this is a relatively new stock. I don't know if it has.
No, it's not. It's not.
Oh yeah, you're right. No, it's not. Okay, surprised both of us didn't hear about it. But
Yeah.
you kind of want to go in there, take a look. Also, in between earnings, the stock can announce news, right, that will make it go up or down, and that will weigh in on the stock price. So here we could just take a look. I'm just going to scan really quickly to see some of the biggest moves it's had in the last 3 months. You know, a lot of them were to the upside, and I don't see any kind of like catalyst moves for either direction, but you still want to go do your due diligence and, like I said, go through the exercise of looking at everything.
Yeah. All right. We've been on with Dimitri Parganamic. As I mentioned, he's the co-founder of Market Chameleon. I said it at the top, guys, a ton of good information on this platform. If you are an options trader, I highly, highly recommend it. And even if you're not, even if you just trade earnings, cannot recommend the data enough. You just saw for yourself there, right? 20 half hour of numbers there. So Dimitri, thanks a lot. We'll have to get you back on because we're getting some great feedback from the chat. So we'll have to get you back on soon. Thanks a lot.
Thanks, Spencer. Thanks, everyone. Stay safe.
All right. It is 3:32 actually, which means we got to go to pre-market prep at the close. I'm going to play that little video, but unfortunately I have to dip. I have to go to a doctor's appointment. So I'm going to leave and let Joel and Mitch run things in my absence. Let's do this. All right. It is time for pre-market prep at the close.
Three consecutive highs, opened, matched yesterday's low, and then once it took out there, that's all the breakout momentum traders needed.
Hello, hey, how we doing? Welcome.
Hey,
right,
Mitch,
guys.
how you doing, man? That video, man, that gets me fired up. Did you do that?
Let's go. Hey, well, one thing I put the template, but our man Enver has been working hard on doing those really good intros. So.
Jeez, man, that guy. Who's that smart guy on there talking about the markets?
Hey, well, we know who the brains to the show is, right? Like I always like to say on SPAC Attack, we got some brains here. That's good. So, how did the overall market look today, Joel?
You know, I mean, it's higher than where we opened, so that's a good thing. Let's just break down things here. Pre-market low, never got there. That was 61.25. That was a good number. A little choppy off the open. Caught a bid, tried to get up to the close. You guys know I like closes. That close from yesterday was 39.03. Got turned back at 38.99 and now we got a little bit of a fade going on. So the Bulls made their run. They got turned back, and now we're drifting towards the low of the intraday session. So not a horrible day, not a great day, but the Bulls, we're kind of leaking into the close here. So we'll see what happens here over the next 21 minutes. Crude bust out up 224, 61.50, trading in the after hours. I believe the high of the move is 62 and change. So big move in crude today. Gold, they had me shaking at that bottom of the trading range here. I was thinking of like jumping ship, but held with my gold and my GDX. Silver, that's perking up. That's up over $28, 28.17.5. That's up 92 cents. That's a big move for silver. And Bitcoin, baby, if you want volatility, almost a $10,000 range. We did talk about the Musk tweets this morning about Bitcoin, but that broke down to 48,320, turned around, and now it's down only 1430. And Tesla's in trouble. Do we have any new Tesla news, or is that just filed through from this morning?
I don't see anything new here, but definitely we could take a look at his tweets and how that affected. I have him right here. I'll definitely pull him up here. And he really started it, on the 20th. He started with saying that if they pegged to $1 or something like that and heard a rumor, he even posted a video about cryptocurrency explained. I don't know if you guys have gotten a chance to watch this video, but definitely click on it if you get a chance. I'm not going to show it here, but it's really interesting how he has no fear. 23 hours ago, he put Dojo and for Dodge, so he's having no fear here. What do you think about that, Joel?
I don't know, man. I tell you, if I ever start tweeting like that, I want you to come over here, get on a plane, and kick me aside the head, man, because I don't know. I don't like messing with. I like to give informational tweets, but hey, you want to see the richest man in the world? He can do what the hell he wants, but not a good day for Tesla. I don't know. I'm gonna have to draw a new line in here because we had that trading range. We broke out of the bottom of that trading range, and when you have areas that you go up through quickly, chances are you're going to go down through them quickly. So, man, oh man, I don't know. I don't want to say 600. Someone mentioned that in the chat this morning. I'm going to have to come up with some new magic here. We got to get rid of these lines because they're no longer relevant. So let's get rid of those. And I think I know what I'm going to do. I talked about this morning. I didn't pull the trigger on it. But man, this was a stealth move for 400. You guys know I like my 50% retracements. This is simple math. Even I could do it in my head. And that's 700. Boy, oh boy, this thing has a date with 700. S&P's continuing the leak here, heading toward the lows of the intraday session. But it looks like Tesla has a date with at least, how low did we get today? 711.23. That takes out this low. Your next daily low is under that. 655. I'm sure Jeremy Newsom doesn't want to hear that. He wrote some puts. I tried to warn him. But what else would you like to cover, Mitch?
Yeah, well, just to bring it up here really quickly, I got the news on Tesla. So it looks like it's trading lower amid JD Power dependability survey. It looks like they rated the base level Model Y as one of the least dependable kind of brands. And man, they're hitting it hard on this. So hard reaction there. And we're getting down there to 717s now.
Yeah,
and,
wow.
And for a second there, it looked like Tesla was going to get through that 1,000 mark. But man, what a turnaround.
No, you talk about things too, and even with a really high price stock like this, half and whole numbers, right? Look at that all-time high in Tesla, 90040. 900. So if a lot of people are like, if Tesla gets to 900, I'm going to sell it. Those round, because you can come up with you can make up a number that you have a level at 900, but there you go. And now you're bearing down on 700. So not a good day here. I got a weekly up there. If I put it on a daily, it's probably going to be more pronounced. But and also, is it competition coming for Tesla? You talk about all the different, the U.S. automakers, and aren't there going to be more competition out there?
The real question I think here to ask is, from this turnaround, does it ever get back toward that 1,000 mark, Joel? You might have literally
ever.
You could just call out the competition right here, and we could have that turnaround. So I know the Tesla bulls will be hitting me up on Twitter, but hey, we'll see what happens here.
You know what, bitch, what am I going to say now when and if this thing has a turn? What am I going to tell you about going back up? Boy, what about all these people there you go, baby, overhead supply. So you know what? I said I was going to start putting dates on these things because you guys used to say, hey, he just put that in there. And, that's not as relevant on this chart, that 50%. That's more down at 650. So I'm going to have to do it on this chart here. I like it from the 400. That's because that 400 was a major low. But go ahead, get your next topic while I try and get these retracement lines on here.
All right, guys. So one thing I'll just mention some earnings that are going to come into the close here. One to mention, Transocean, RIG is going to be interesting, just because it's been kind of uptrending. But the question is, will this get it above that big resistance that it has at 4? That's what I'm seeing on RIG.
This thing has just been what do you think the all-time high is in this one, Mitch?
I honestly don't even know. I try to stay away from these, really, to tell you the truth. Joel, your chart will probably tell us why.
Look at this. I don't even think it was higher than that.
Wow.
Look at that. 160. And there's no stock splits in there, baby. So I mean, I don't know. I mean, oils for some reason they must be highly leveraged or something. Let's go to the daily though, and it had that spike over 4. I don't know if you get a pop on this. I don't know how good of a report it's going to have, but where'd you have a high? 419. If you're looking for a pop, if you're looking for a drop. Looks like you got a couple lows in the $3 area. So there's some, I don't know how many people are active in this in the after hours. I think if you're more of a rebate trader, if you're trading something like this, sitting on the bid and the offer.
Yeah, there's another one in here, Fang, Diamondback Energy, and these companies, are all looking at, the upside in oil prices right now, especially with what happened in Texas. So it'll be interesting what happens here with Fang. And also, I mean, you could look at Oxy for that matter. We'll take a look what happens with these.
Yeah, this one's on its way back. You're not back up to your February high. So that's interesting. You should go and look at February and see where some of your daily highs were. Next major resistance point is $80. I don't think we'll see that. What was... this is what I wanted to give people. I wanted to give the recent high of the move at 72.15. So that would be a pretty lofty target if you get a nice earnings report from Fang, Diamondback Energy.
All right. So the next up here, I have two that we could go to here. We could either talk about the ratings that were put on the airlines, or we could talk about how the cruises made a move. Also, Trivago, we're up 19% today. A bunch of these companies are up after, kind of the reopening plays are getting hot here.
You know what was a pretty good call, and I don't know if he played it at all, but Triple D was talking about buying the dip in Boeing. It's just like buy the dip. He just kind of felt like doing it. Let's see. Boeing did recover, but it's leaking back now. It did have a nice rally off the open, but can't hold. Wow. Got to 220, now reversing. So let's see. Yeah, the reopening trade. American Airlines. Oh, that's a nice move, getting back over 21. Heck of a 2-day move. Let's see if we can get back into the 21 handle. That big number for this is 21.77. And if I'm not mistaken, that June pop was in this area too, that crazy June 8th day. No, that was up at 22.80. So that's been the high for the rebound in AAL. All these airlines, Deutsche Bank really got these things moving to the upside. Let's take a look at JetBlue.
Yeah, that's the one I like, to tell you the truth, in this sector.
That's a nice move there. Yep,
this 21 price target on it.
This is getting back. This is well above its February high. So exhibiting really excellent relative strength here, up $1.13. Let's see how Delta's doing. Delta. Boy, that's moving in on 50. That's your next big level for Delta, 49.97. Was that your February high? No, that was your March high. So that was still up there. So keep an eye on that. Your March high, 49. I think that'll probably hit that in early March when we didn't know what the what the lockdowns and things were going to be. But nice looking chart for that. What other UAL? Man, what's the last time you've been on an airplane, Mitch?
Honestly, over a year. It's crazy to think that, but
I got Unilever. I'm like, wow, I was just going to go out and buy that.
I got a question now, Joel. Are you going to be like me and kind of interested on what plane I'm going to be flying on when I buy a ticket now? Is it a Boeing?
Yeah.
Is it an Airbus? Can I choose the Airbus above?
You're saying that tongue in cheek, but you know what? I mean, come on. All the problems that Boeing's had on. And I mean, I'm not really afraid of flying. I mean, who likes being suspended, 20,000 feet? I mean, you think about it in a car accident, right? Even if you roll over, I mean, you're still on the, someone can get to you. But I don't know. My girls, when I fly with my girls, they kind of freak me out, because they're a little bit, I don't know, for some reason, they're a little bit more afraid of flying. But I'll get back on there, and I don't care if it's a Boeing or a Airbus, right? I just, I'll be so happy to do it. I don't care when I'm flying. But UAL, that broke out. That actually broke out of a trading range on Friday. And was it Deutsche Bank that did those upgrades? They took a look at the chart and they said, man, let's goose this thing. And there it is. Not back up to the February high. That's funny. These things really have different chart patterns, but this has 80. It was over $60 in February.
Yeah,
so
that's the price target right there, $60.
Really nice, without even reading it. Okay.
Yeah,
what about
the interesting part there is the
sure.
a hold to a buy. So that's the interesting part there. So
all right, and then how'd RCL do? They lost $5. They should have lost $10. I mean, look at that. They're up 738. They lost $5. Look at that. New high over your February high. Did they say something like super extra positive or something on a call? Or wow, did give some good guidance? I think folks are just ready to get back. Wow,
that's what I think. One thing I mentioned that I noticed is that I saw all the cruise lines coming out with their commercials in the last week. And so I started really seeing these on the public kind of television, just advertisement coming now, and advertisement coming with discounts included, like let's say open bar or certain features to get you to leverage on up and buy up that cruise line. So I think this is the market looking forward out probably about 6 months from here. And the real question is are they in better environment now or in a worse environment? I think you got to ask yourself that question as an investor and see where it goes.
Do you like cruises?
I can tell you, I haven't taken a cruise in a while, but I used to really like them, especially 7 days where you feel like you really you get out away from society. I think those are the best. So we'll see.
And I probably heard me say this 100 times, but cruise to Alaska. If you're gonna do a cruise, man, go to Alaska. That is just gorgeous country, gorgeous state, the water, go up to the glaciers and stuff. So I would do that again, but there'll be no more those midnight buffets, right? People hurting up, and things are going to change along those lines.
Pizza though. Late night pizza.
They'll do so. Okay. All right. S&P's the battle for 3880 raging on here in the last 12 minutes of the session. Still above the open from this morning, well below that pre-market high, 39.1450.
All right. So one last one to mention that's interesting, and it's just to talk about kind of the whole industry, is Trivago. Trivago up about 18%. That's TRVG. I'm kind of interested also, and I could take a look at Expedia. We could look at Expedia or Booking with this one if we wanted to look at kind of a bigger one. That's BKNG. But it's interesting to see how these are really changing up now. I think the market's really starting to look past kind of where these travel companies have been kind of held down, and the question is, will they take a big lift? I know Booking, BKNG has a lot of rentals similar to Airbnb, and so that one's an interesting one because you guys have been seeing Airbnb just react very positively from that high premium IPO price, but still, it's going to be interesting to see these, Joel, in the next year.
Yeah, is this a new all-time high for Booking? Heck yeah, look at that. Nothing bad to say about it. That thing's just been like a laser since January. New all-time high in this kind of environment. I mean, you don't want to fight the trend. Yeah, this is a new all-time high by a wide margin. I do not use, my Lisa does when we do travel. She's the one that does all those things. So I'm not familiar with those platforms, but that's a good looking chart. In Expedia, I know that had a little turbulence last week, but this one, you don't like to see that kind of candle, folks. I know it made a new high for the move. Is that an all-time high? That can't be. Expedia making an all-time high right now? Man, if that's not reverse logic, it is. It's a new all-time for Expedia. Just don't like that candle. Get up over 166, and now you're bearing down on 160. See this low from yesterday? Ooh, two lows and a 157 handle. So that's good news. Be interesting to see if this thing takes out 157. Your next daily low is at 150. Spoos losing 38.80 here. That was a short-lived battle. We're back trying to hang in the upper 38.70 handle.
All right. So the kind of last question I have before we get to some tickers from the chat is, how are you feeling about this market environment, Joel? Do you feel like the rates are going to affect kind of the overall market, or do you feel that we'll get through that 4,000 mark?
No. I mean, I just go. I just would putting ourselves further and further away. I'll just go to the cash and the S&P. I mean, we're just distancing ourselves farther and farther from the all-time high that was made last Monday. And when I look at this chart here, and this is the cash, right? So it doesn't incorporate the futures. I mean, come on. I mean, look at this stealth move that we've had. We hit 39.50. Would it be, would it be out of the ordinary for the market to come down to 3,700, 3,750, have a little bit? It kind of feels like we've already had the reopening. It's like the market's gotten ahead of itself. Everyone's optimistic about the reopening and everything, and it's coming and it's going to be good, but it's kind of like almost feels like a sell the news kind of thing. But I don't like the steepness of that move. We're not even near the February low. We're not, or the low at the end of January. So just like Tesla, you have your moves up quickly up through areas, and then you just kind of hover. I think that's what the S&P's chart's looking like. So I'm not long term bearish. I just think we hit a temporary high.
All right, so I'll show you something that I had drawn out, and I'm kind of following it to see and wondering if it's going to break it on the downside this time. And so I was kind of drawing like a little channel.
Sure, channels are good. Let me
Since
see
like
it.
December 9th and December 10th here. And so we had a high that, we first, the 29th of January, I remember that Spencer and I were feeling a little bit bearish, but quickly we rebounded right off that kind of bottom of the trend line here, and then came quickly up to the top. And now I think we're just bouncing back, and the question I think really is the important price point for me on this chart now is going to be that 380. And when we pull back towards that area, are we going to get another bounce up through that 395 and 400 area? But it'll be
do you remember what was going on at that time when we hit that low and we hit the skids like that? Do you remember what was going on? What we were at the height of?
What were we at the height of?
GameStop.
The GameStop move and the kind of the rotationary from that boom.
Yep. And then because people were selling good stocks to buy bad stocks, I think you had perhaps some excessive speculation. And I don't know how many of you people listen to the morning show, but Dennis and I mean, we're big caps. We're investing in big caps. It's just been doing that for 100 years. But like when Apple, I mean, this is not a good looking chart. I mean, no matter how you look at it, they sold this thing off earnings. You can't tell me that this is a bullish chart in any way whatsoever. Now, Apple is coming into an interesting area here, and we've been talking about that. This is where it started its pre-earnings run. Where did we get to today in Apple? 125.60 is getting a little bit of bounce, but I'm going to go, if you want to keep an eye, oh boy, I lost my drawing thing here. Oh no, I'll have to get that back. Boom, right across here. You draw your trend line right across here, and man, that's some major support for Apple to hold. This is where the pre-earnings run started, came back. They sold earnings. They made the all-time high, I believe, on all-time closing high on this day. And then after earnings, it's been sell.
All right, so let's take a ticker from the chat here. Looking like a lot of people are talking about AMC today. I even saw, I think Jason has some AMC, so I'll have to talk to him about that one. I don't know how that one happened, but
everyone wants
to take a look here.
See, this is a stock that everyone's cheering for, right? Because everyone wants to get out. They want to go to the movies. They want to get things. So this is the height of the reopening trade. Was it worth 20 when it was over 20? No. Did it come back down? I mean, if you're looking to strike in this, then this is probably the area to strike in. Did it quite fill the gap? You needed to get to 515 to fill the gap. You always don't do that exactly. You got to 528. That's good enough for me. The only thing I will say is, what was the trend in AMC before the pandemic?
Going down, man.
Right. So the pandemic perhaps accelerated the decline, right? That was coming, that was inevitable anyways. So not for me, not for my long-term money. Like to go, I didn't even go to the movies that much anyways. Maybe go 2-3 times a year, but it should be fun to go and pay $9 for some popcorn. Actually, there's a theater by us that has really cushy chairs and it serves cocktails. So that's a good one to go to. But
don't worry,
it's getting
Joel.
off the mat. I wouldn't want to see it under $5.
I'll invite you to my house. I got cocktails and everything and comfy couches, so don't worry about that. You know it, man. That's the future. That's what I see, and that's why I think at the end of the day, another thing that factor that played in here was TVs getting cheaper, and so when TVs got cheaper, your home theater got better. So, all right, guys, let's go ahead and take a next one here. Looking like we get. Rocket, we'll leave that alone. That's not moving too much. I haven't even sell my position, but we'll continue kind of moving on that one. Let's see what else we got here in the chat being mentioned.
And if we stay on the movie theme,
we could check out CNK.
AMCX. Now that's a much better looking chart, right? I like that chart. I would have liked it more if I was looking at it at 45. Folks, these are the simple patterns. These are the kind of patterns that I like to look for. I mean, this is a sign of an institutional accumulation. They're not saying I'm going to pay 46. They're not going to say I'm going to pay 45.75. They say, you know what? Pick me up a zillion shares between 44 and 45. That's the way and they're just patient. And they wait and they wait. And it takes a while to build a position. And then boom. That is a nice move. That is such a better looking chart. They do more production, right? AMCX, right? Yeah. So, but that is a much, much better looking chart. And CNK, if you want to stay on the movie theme, they were in better shape before. That's a better looking chart than AMC.
Yeah, and we'll keep watching them as they keep cutting the cords and putting the movies straight to on demand. So that's really what's the view now. Will they take that off? If you see it taking off, I would keep an eye on AMC. If you keep seeing them come out, that could be what could be I think the end driver. All right, so one last more for NVIDIA. What is going on with NVIDIA? I'm getting questions from Ivy here.
Ivy
on the coast.
Oh,
I love the name.
This is just a volatile puppy. That's all I can say about this stock. You hit a benchmark. You took out the 600. I mean, this is just what this stock does. It's volatile and it moves around. And it had to move from under 510 to 610, $100 move. So there's got to be counter trend moves, right, in these things. And there you go. This is a big move, so it's just digesting it. I'll tell you right now, I'd be a little worried. 573.66 was the low on the 10th. He hit 573 today, but I think if you want to give it a little bit more, I mean, and they could do this and open right below it, 568.90. Then you got this big candle here. So, folks, when things go up, especially on the upside, when it goes up something 2-3 days, 4 days, it can go back down in one. What do they say? What a bull eats in a year, a bear scarfs in a day. And there you go. I mean, stocks can climb and climb and climb, and then in one day, look at how it can really take things out. But new all-time high, just pulling back a little bit. Let's see here. I'll get rid of this line because it's no longer relevant. And someone asked about AMD. Let's see how that's holding up. Haven't looked at this chart in a while. Oh man, not a very good typist today. AMD. Oh boy, this is not looking great either. Man, the rotation. It looks like it's coming out. You have the pair. This is a big area for AMD. Wow, 85.21 today, 84.66. I see another low at 85. Go back here. This is big. This is big for AMD. Looking kind of heavy here. Well, I better look at Intel. Is Intel getting killed too? Yeah, Intel's getting killed too. I dipped my toe in that. Little couple week or so ago. And I think that I thought the mobile chips were going to do a little bit more, but obviously not working today. So there we go. We're at the close. Where's the ding, ding, ding? Did I miss it?
Oh, you might have missed it. You might have missed it there. But I'll let you guys know really quickly. Tomorrow before the open, we got Macy's, Home Depot, Armstrong World Industries, and Metatronic. So we'll be watching those at the morning. See how those do.
Okay.
How we looking here at the close? How's the charts?
Well, let me pull up the S&P here. I mean, we leaked. We didn't take out that intraday low. We're actually 3 points from that 9:30 open. So the Bulls gave it their shot today, but they couldn't get it done. They couldn't get us past 39.03 here. That was a close from yesterday. You are closing below last week's low. So if you want to keep an eye on a number overnight, we got to regain 36.80.50. That might not be too bad because we're right here right now. Things kind of open up on the downside. If we take out that low, I'll just call the low today 61.25. I'll throw that in with the February 5th low. Under that, it gets a little wide open. So keep an eye on that low from today, or you could be seeing 38.30. On the upside, that intraday high, 38.99.25. That's right near the close on Friday. So you get a pop near 3,900 overnight. I think you'll see some sellers.
All right, guys. And so remember, like always, guys, all content is informational purposes only, not to be used as investment advice. Opinions do not represent those of Benzinga, and hosts and guests may maintain positions in these securities discussed. And it looks like we got Jason trying to jump in here. I can't blame him.
No, it's just a great show, and I just don't know if you're ending at 4. I wanted to take over if I can because there's a couple earnings plays that a few of us in the YouTube thing.
Could you just tell me how the game went on Sunday? I couldn't make it.
Yeah, they won. They won. It was definitely tougher than it should have been, the game. We made some like bad defensive plays, but we won, and yeah, that's the story.
Does this set the stage for next Sunday?
Oh yeah.
Okay, we'll talk about that later. Take it away, Raz.
Yes, take it away. Thank you, Joel.
All right. So there's only one more thing that we got after this, but Jason, I'll let you knock out a stock right quick. We got the Benzinga happy hour that's going to be coming on next, and I'll be bringing them on. And once you're done, go ahead and
wait,
let
what
us know
time
about
is that?
the trade.
What time is that at? Oh, it's scheduled at 4. Oh, okay.
They're already starting up, but hey, the BZ Pro members get it first. So
happy hours at 4.
Yep, you got it.
Okay.
They go until 5. So.
All right, so I'll get them in there in a second. I just wanted, there's a couple earnings plays that we're doing here, and I was just going to show those. So if that's cool with you, man.
Yeah, no,
Is it
of course. I mean, and there's nothing like earning plays, and I've been seeing in the market. I mean, as of late, even aftermarket trades, pre-market trades, you always got to be careful with these, but you can make some great trades in the aftermarket. I mean, Dennis Dick, that's all he pretty much does. That guy makes his money, his living is on the first half an hour or aftermarket or pre-market. So definitely there's some good trades. What are you looking at, Jason?
Well, no, Big C. I'm going to share my screen right now. 1 second. Here we go. 1 sec. Here we go. Okay. News feed. I'm going to turn my earnings feed on. Got it on. Share screen. Here we go. Chrome tab. There we go. Okay. So here's the earnings feed, guys. I'm going to have to click there. All right. So I'm going to zoom in for you guys. So these are more than just earnings plays, but we're going to change the categories right now to make it very simple so you guys just see earnings plays. So we go to this news category here, and we click earnings and guidance. That's what we want, earnings and guidance. There we go. So now here are all earnings plays that hit at the bell here. So SBA Communications, if I want to see what it's doing after hours, nothing really changing. You'll see in yellow as the new stuff comes in. Viper just reported. Diamondback Energy, 82 cents versus 81 cents. Basically flat. National Storage beat, and revenue was above. So I want to see if the stock's moving after hours. So I'm going to go here. I don't see an after hours quote yet. Conference calls tomorrow at noon. This is symbol NSA. Okay, so then we're going to go down to here. Let's see if any more come in. Are you still here, Mitchell?
I'm still here. I'm watching. I'm watching. I'm learning.
I want to take off that guidance thing there. Yeah. See, when I selected guidance, what that did was only show stuff with earnings and guidance, I think. So, earnings, I don't know. It's Henrik. I didn't see showing up before, so that's why I gotta check here. Hold on. I gotta know this. So, I'm gonna put guidance back on here. 12:02. Yeah, it did show up. Okay. So I'm waiting, guys. So one of the ones that I bought as some guy told me that he bought it. It wasn't much thought. I don't know if he's good. He's not my Brian guy that has been amazing. But I bought this one today because it's like a Shopify competitor. The stock has been getting killed. If you look at the chart, we can look at a 3-month. Look at that, it's all the way down from 96 to 69. So I made a play here on that one. We'll see what happens in a second because the earnings will be out any second. But we'll go back to our earnings feed. So now we're going to switch to that's watch list. Hold on. All right. So you got these are more earnings coming out. Let me zoom in for you guys. I'm sorry. This is way too zoomed out. Oh, the real. I didn't even realize the real. Okay, let me look at those numbers because StockX is going to go public. BIGC report is out. Hold on. BIGC report is out. BIGC report is out. 406. I bet you it's on Pro. So let's go to the press release. 39% year-over-year ARR, 4% year-over-year. To 181 says Brent Bellum, merchants of all sizes. Okay, let's go to the Pro earnings wire. Hold on. We're looking for. I don't know why it showed me all that. So it's okay. Forget that. So BIGC is out. I'm waiting for. So here it is. Big Commerce had a smaller. This is our team doing the work on this. Had a smaller loss, 12 cents versus 14, 43 versus 36. That's the headline numbers. I got to send this to my people that are watching this one because we're pretty fast at this stuff. And we actually do manual math on this stuff. So just give me a second, guys. I got to put this out there for our guys. Okay. So then we have a couple more. I know Spencer Israel was talking about 5.9, 12 cents. So I did 5.92. Sees guidance of this, sales of this. So I'm gonna guess we're seeing some moves here. So let's see if we got. Let me open up my E-Trade account to see if they have any ticks happening first. 1 second. We got 5.9 out and BIGC. Spencer was talking about 5.9. 5.9 is a cloud platform for telemarketing phone sales. So Big C is down in the after hours 1.35 or 1.98%. I know it has look on E-Trade, they don't even have the news in here right now. Just as upcoming thing. I'm gonna screenshot that. They should have that news there. So boom, no news there. Let's go to Benzinga Pro. Move here. Hold on 1 second. Okay. Yeah, so they don't have any of that. So beautiful. Let's see what's going on, why it's selling off. So Big Commerce adjusted operating loss 8.2 to this one versus that. So why is that so? Why are we selling off if this is the numbers? Operating loss 82, sales of this one. They guided higher on sales. They did. Let's go take a look at this one here. Hold on. We're gonna go look at a press release. Make it big. Is there any way? Is there any specific sector or way to find out what sector has moved to the upside after earnings? Yeah, there's probably a way to do that in Pro. I got to figure it out, but there's probably a way. What's wrong with my mic? My mic's not good. Tell me if my mic's not good. Okay, guys, tell me if my mic is not good.
You're good. You're good.
Okay, so here from accounts, at least one person. Hold on, I just want to see why this is trading down. Number of accounts greater than $2,000 in annual contracts. Maybe they're who are looking for a profit on this thing. The revenue up was 36% compared to 2019. That's good. All right. You always want to look to see if there's any things that you weren't expecting in this. Okay, here we go. The company's first quarter outlook is based on a number of assumptions. The company does not provide guidance for conference call. So this one's going to be about the conference call. I mean, this is like a Shopify for, enterprise. So instead of any Tom, Dick, or Harry, Sony, Ben and Jerry's, Skull Candy, as you see here. And supposedly they've been growing like crazy, but you're seeing the numbers here aren't moving on this thing. This thing is still staying at. Oh, it's come back. It's up, now it's up 3.3%. See, up 3.3% after hours. To 70 at 70.50. See, that's why that press release did not make any sense to me. Now we're gonna go. So I know you guys asked questions on a couple others. So sorry for clogging it. Exactly. Now it's 71. So yeah, I don't know what the.
Looks like the algos got it wrong there for a second.
So now we're gonna go to, yeah, exactly. You're right. So now we're gonna go back to the earnings wire. So you got Palo Alto Networks, Zoom Info, and you got 5.9 they want to know about. So FIVN. Remember, we bought Big C today. I bought call options and stock. I bought call options stock. Okay, 5.9 was down 12% today. 12% today. This is another one I bought when I heard Spencer mention it, because we're customers of 5.9. Anything that Benzinga is a customer of does well usually. Okay, here's 5.9. I bought just stock, not calls. So 5.9 is trading up. 5.9 is trading up 8% or $13 after hours.
What's 8%? The ticker symbol?
Oh, sorry. Thank you. FIVN.
Thank you.
FIVN.
All right, got it up there.
Okay, so 5.9 is trading up, and I need to talk to Bill Big D. I hope he can come on the show today to help me some of my trades. He's all over me on Upwork. Now we have Zoom Info. Chris Hayes has been appointed COO of Zoom Info. ZI, let's go to Zoom Info. Let's see what we got on this one. So Zoom, they're trading higher if the company reported better than expected Q4. So Zoom Info is trading up, guys. You see that right there? It's trading up. I got to get, it looks like 8%. That's Zoom Info. Symbol is ZI, Zebra Igloo. ZI. We're trading up 9% after hours. 9%. Okay, so it was down 6% during trading. It's up 9%. If I'm an owner of Zoom Info, which I'm not, I would take some off right now. I would, I don't know what's gonna happen in the market, but it's a nice 9% gain on Zoom Info. All right, let's go to a couple other ones you guys had in here was PANW raises guidance. That's going to look good. Here you go. You can see all the information. You make it. So here's your numbers. Our Newsdesk team is doing this manually. So they double check the numbers and they make sure it's the comparable numbers. And you can see the highlights right there. PANW is trading up. Hey, if you're listening to this, please share with your friends on social media, subscribe to the channel. So Zoom Info guided higher, but is trading down 5%, not Zoom Info. PANW is trading down on this stuff. So why is, let's look, see what's going on. It's trading down. Let's see, why are we trading down? There must be something that's going on. Raise guidance. See, falling 2% lower. These are automated. All right. All right, so now let's go. It's down to market, big red. All right, that's why I didn't buy PANW, guys. Okay, what else do you guys want? Carnival just announced a $1 billion stock offering. If you're not a member of Benzinga Pro, you're missing out. This is real-time news behind the scenes. So Carnival just announced a stock offering of $1 billion. Well, hold on. I didn't put the screenshot in. One sec, guys. Mitch, are you still here? Or are you?
I'm here in the back. I'm here in the back. Just ready to
Okay.
bring on the happy hour whenever you're ready.
In like 3 minutes. I got a couple more final trades. I got to figure out what's screenshot time. 4:03. Okay, here we go. I got it. All right. All right. So you see the Palo Alto networks. We're gonna go back. We're gonna go back to this. Straight. If you want to see straight news, you don't want to see earnings tickers. You just want to see on Benzinga Pro. You want to see straight news. 5.9 is moving up still. 5.9 is moving up. Yeah, all-time highs can be dangerous. So Carnival shares are trading lower after the company reported their commencement of the $1 billion offering. EverQuote. This is one of the ones in the lead gen space. EBITDA 4 to 5 million, sales 100 to 200, 102 million. Adjusted EBITDA 25 to 30 million, sales of 430 for 2021. Okay, can we beat them? Mitch, can we beat EverQuote? What do you think?
All day,
revenue wise. We got it. We have to get to 100 million, Mitch. We gotta figure out how to 100x what we're doing. Do you know any good
that plaque?
Mitch, if you know anyone, if you know any good talent, we can hire for the team because we got to get to EverQuote numbers. We need a managing director of our lead gen business. I wish there was someone listening right now that would look for an opportunity to do that. So EverQuote right now is trading basically flat after hours. Flat. It was down 7.5 for 2%. Market cap is 1.2 billion. And you see EverQuote is an insurance lead gen business. So we're gonna go look at this right here. Look at the numbers. You got to make profit. That's what it comes down to. Just trying to see. Here are the numbers. EverQuote. I want to listen to EverQuote's conference call. Actually, when is that? Let's see. I'll listen to a replay. I don't know, or I'll call in. But I want to listen to this one. I want to hear what their business is and what's going on in the space. So this is EverQuote. I'm going to go here. We're still trading. We're trading flat on EverQuote. I know you guys are wondering why do I care about EverQuote so much. We're in that space, a little bit of lead gen and stuff. Big Commerce. I don't know. The conference call. I don't know if we have an interview with the CEO tomorrow or not on the CEO show. Dillard's is out. DD. Yeah, 5.9 is cloud. It's like calling services. It's kind of like a Ring Central, but it's more for sales teams and stuff like that. Okay. Air Lease Corp. If you guys were in Air Lease Corp before earnings, before the close today, you're up 5%. Do you guys like that? AL. If you're in Air Lease Corp, press 1. So here we go. So now Cadence. By the way, I didn't know I was going to go live on the show, but I saw they were ending it, so that's why I just said, "Hey, want to go live?" If you're listening right now and you enjoy this, can you please slap a like and subscribe to our channel and share with your friends or tell people? So you guys, please just let people know that we're here. We need to have 80,000 subscribers by the end of this month to continue these shows. If we don't, then we're gonna retire the shows and go back to just producing news and writing it. We got to get to 80,000 subscribers by the end of February, or we have to go back to just writing stuff. I hope you guys heard that.
I'll tell you one that's getting hit right now. API
after hours too.
Yep.
Why don't I see it in the feed?
It's getting hit right now. It's a little bit ahead. It looks like the conference calls today is at 8 p.m. That's gonna be an interesting conference call. You can listen to that one.
What's going on? API is up after hours. What are you talking about, Mitch?
I'm looking at the daily chart. It's looking like again a little bounce there. I know that their earnings are confirmed after the market today, so I'll take a look if it's already out. I know it's scheduled at 4:30, but I think it came out a little early.
Oh, API has earnings today.
Mm-hmm.
Well, if you guys, if you want to see all the earnings for today, let's make that easier. So we go to calendar, but I just want to see who's after the bell, not before. So, and I just want to see today. So today's 2/22, right? So confirmed. I think we have an after the bell thing. Hold on. Aftermarket right here. Okay. So here's what we got for earnings, guys. So yeah, we need 80,000 subscribers or we can't continue doing these things. So we've got to focus back on just writing news. So here are the ones They're a little delayed when we enter this numbers in because they do it first for the news thing. But Mitch was saying that API has earnings today. So what I'm going to do, I'm going to sort by symbol. So now I'm going to go alphabetical order and see what's going on. I see it right there. No number out yet. Okay. But these are all the ones with earnings. You can click, you can do filters, you can do columns, you can do whatever you want with Pro. It's your tool. Yeah. I mean, yeah, to keep the shows going has to make business sense too, you know? So, BIGC, let's get an update on BIGC. The community is asking for it, so let's do it. BIGC is now up 4.32% to 71.20. We bought call options today around 66 and bought stock. I told Meet Kevin if you were listening earlier, and that was my trade. Thanks, John Lopez. Next year the date will be 2/22/20. That's crazy. 2/22/22. Okay. So train higher. This is kind of the, so this is the Mr. Beast holds Twitter drawing for $10,000 in Bitcoin. We should interview him. Look at that. All right, I like that. Whoever wrote this story for Benzinga, I like it. Don't know how to open it. Let me see. I'm going to tweet it. I'm going to tweet it from my account. That's what I'm going to do. I got to at him, though. Mr. Beast. There we go. Okay, so BIGC. BIGC is moving up to $71. I don't know if you guys got into it. You saw that I bought it today. Bought call options, bought stock. Now it's at 70.45. I mean, what my friend says is it's a competitor Shopify for the enterprise. Listening to the conference call at 5 could be good for you. If you're looking into Benzinga Pro right now, Transocean just reported earnings. Republic Services just reported earnings. RSG. I mean, we are moving. We are moving. This is fast. This is fluid. You gotta have your finger on your mouse or your keyboard to make these trades. RSG, Republic Services, not trading. Nautilus. Wow, look at that. Now that could be a comp for Peloton. So Nautilus is trading. It looks like the guys are saying on 12%. Nautilus is a $800 million market cap, right? And it's Bowflex and direct retail. And you know what Peloton is? Now I'm an owner of Peloton. Fair disclosure. Peloton is a market cap of 37 billion. Nautilus is like a rounding error for Peloton. All right. What else do we got? Oh, Weingarten Realty. Do any of you guys have any REIT plays? REITs are good if you're looking for dividend income, guys. I own a few different REITs, but not Weingarten. Bill Big D, the stock and option trading programs. I don't know which one you're referring to. Also, Bill Big D, yes, I did some option trading in Tesla. What were you saying? Upwork, the options are expensive. Freshbet just did a $300 million $300 million offering. So $300 million offering. Are any of you guys shorting Peloton right now? Press 1. Short or not? So we got Diamondback Energy. So Freshpet, $300 million offering. FRPT. Let's see what's going on with FRPT, guys. We're going to go to the by the way, Ford has been taken off. I own a decent amount of Ford, guys. That's a Luke Jacoby recommendation. Freshbet stock hasn't moved yet. Okay, then Climax. So Transocean rig. I know a lot of you guys like those oil plays. Let's see what's going on with rig. I am not long rig. It's up 28 cents. I can't believe the market cap of rig. I remember when that was like a $40 billion company. So, all right, guys. Yeah, I mean, super SPAC, man, I've been hedging and taking off stuff. And Bill Big D, we have new stock and option trading programs. You can go to benzinga.com and there's a orange link on the top right side called Premium. Bill Big D, I would like you to come on the show to talk about options trading around Tesla and Tesla and also Upwork. I sold some calls on Tesla today, and I bought a couple puts. You guys know I've been trimming my Tesla, but I'm long term a fan of Tesla. I was way too into Tesla. That's it. So CWBHF. CWBHF. Let's go. Oh, Charlotte's Webs. Yeah, I mean, I know Charlotte's Web pretty well. I'm not an investor in it right now. I'm in TerraSend and Care Relief. I trade what I know, you know. I trade my earnings monitor. So here's your earnings monitor. Look, so if you want to see a calendar of all earnings, guys, here we go. Look, all earnings. Here are the results. You just click the screen. You go to the front page. Hit plus. Boom. There you go. Beautiful. You want pre-market? You go boom. Beautiful. Look at this. All the news in the pre-market, and then all the movers pre-market, the prices. Yeah, love it. Love it. Okay. Let's see if we have any other earnings, and then you guys can go to the club, not the clubhouse meeting. It's not clubhouse. That's wrong. You're going to go to the happy hour. Mitch is waiting for me to shut up, but I just don't want to yet. Investors increased quarterly dividend. Weingarten Realty increased a quarterly dividend. Is that expected? I don't know. I got to check that. WRI. That's a big increase, though. So it isn't moving. That could be expected. If you like Solar Edge Technologies, if you invest in Solar Edge Technologies a year ago, you'd be up roughly 190%. Hope you guys did it. The growth in the sector isn't limited to just one stock. With the Invesco ETF 10 is up roughly 200%. Hopefully you guys got in that. Here are 3 other stocks. So I like this. This is a story that gives you trading ideas that I need to click on to see who wrote it because I like the story. And I want to tell the writer I like the story. So I hit the pop out and I still can't see who freaking wrote the story. So now I got to Google it, and then that's how I'm going to find out. Okay. Life around here. All right. This is all I got here, guys. There's a couple more earnings plays, but I think we're good for now. If you have any questions, hit up VIP accounts at benzinga.com. And, you know, there's support, there's help, there's chat rooms. So if you want to see what the chat room's talking about right now, we'll go into the chat room, chat right here. Okay. So here's a chat room, and they're talking stocks all day, every day, right here. I want to move this over, but I can't. So, and there's different chat rooms. You go down here and you see the different chat rooms. Benzinga TV. So if you go in the TV, I think you may see me right now. If you go to day trading, you go to options, there's a way to learn how to trade options. Support, how to use the thing. The strategy setups, I don't know that one. That's new. All right, guys, I'm going to transfer over to the other show, the happy hour right now. Mitch is going to do that. Thank you for tuning in for After Hours. I hope you guys enjoyed it. And this will be better.
The Exxon Mobils, the Chevrons, the Marathon Oils. Don't be dissuaded by some of the smaller cap stocks that may move in sympathy to this. If you're going to trade them to try and get some quick gains, that's one thing. But if you're going to try to swing that or really kind of make some money or do more than just kind of scalping or short-term trades, be very, very careful. Stick with the market leaders in this.
Real fast, we got to welcome the YouTube audience here. Jason has been taking it away for a while, but we are here. This is the Benzinga Pro Happy Hour. So yeah. Welcome, YouTubers, and if you have any tickers you want to share, feel free to send them in the YouTube chat, and I'll try to give them over to Ryan as quickly as I can.
Thank you very much, Andrew. Appreciate the looking out. Just to get back to the discussion here on ExxonMobil, Tim says, I think oil is good for 5 to 30 years, probably only get more expensive due to politics. I have several companies, and yep, I have them for dividends. So you pretty much hit exactly what I was talking about. And you gave specifics about your situation, and I really, really appreciate that. This is exactly what I was just talking about there being some trades left. First of all, let's take the political part first. There's definitely going to be political headlines in both directions. It doesn't matter what side of the fence you sit on. You're going to get headlines that's going to move the price in both directions. You're also going to have the very real effect of supply and demand, which is what we're seeing play out today. I agree with you, though. I think, again, that transition is going to take a few decades. It's not just going to be, no matter what any politician says anywhere, it's not just, okay, when we wake up on January 1st of this particular year, fossil fuels are going to be a thing of the past. That's not going to happen. You can forget about that. This will be a phasing process. It will take decades. And you're being, if in the case of having ones that pay dividends, you're literally being paid to hold the stock. All right. You're being paid to hold the stock. So if that's part of your investment plan, if you have a longer term horizon, you want to play a little bit less risk, I don't think that's a bad move. Again, looking at this technically, we really want to clear this 55 level. If this trend reversed and we kind of broke down past the 51 or even a little bit lower than that, maybe even 45, I'm going to wait for the trend to be in my favor before I actually play this to the upside. This definitely you can play with options. I think that if you don't have a very specific time horizon, you're probably better off buying the equity. So great job. And thanks for the things. K1s are annoying. Yeah, I bet. I agree. I added XOM holding for the dividend. That's exactly what I mean. Dividends can be very, very intriguing. It's not just something Kevin O'Leary talks about all the time. They're actually quite good. All right, so let's go ahead, and Andrew's rapid firing me some tickers from the YouTube. So let's take a look at it. First one we got here is GE. Everyone knows the story here with GE. This thing really, really took a beating. You want to talk about downtrend. I mean, if we look at this on the weekly chart, we got quite a downtrend from the highs of 2000. So we've definitely made some we've definitely rebounded to some heights, but we're still not in the greatest trend here. If we zoom in a little bit, you can see that we're about we're at an inflection point here, right? We definitely want to see a close above some of these recent highs, and by recent I mean back to February of last year. We get a close above these highs, maybe we can start making a formation like this. But again, know what you're trading here, right? Understand exactly what your plan is. To me, we're in no man's land until this actually breaks and closes above some of these recent levels. I would just say 13, just to kind of make this a nice round number. As long as we break above 13 and we close above 13, then maybe it's risk on. Trade it with a tight stop. Again, this is one of those things where unless you are looking for something that's not as volatile, maybe this is something for you to hold for a little bit longer term. This is not something where I would choose to deploy capital right now. I would look for something else that might have more movement. Hope that was helpful. Next ticker on here was tech. Takeda Pharmaceuticals. This one, let me take a look real quick here at the news here. This one definitely makes some biotech headlines. I've recognized this before. Don't necessarily have an edge on this right now. From a technical perspective, this is very, very simple. If I'm going to take the, again, I'm not going to trade this short. If I'm going to trade this on the long side, I'm going to trade this right against 1684 or even maybe 17. Anytime that we break above, this looks like pretty hardy support here. If we break beneath that, the next step is going to be a 1530 test followed by a 1250-ish test. I'm not interested in that. I would want to hold this for kind of a bigger run. When it comes to biotechs like this, one of the intriguing things for me about biotechs is that these companies tend to move like crazy. A $20 stock, you might wake up and with some data, that stock might be $40, $50. That's one of the benefits of biotech. Can also serve as a negative in case bad data comes out. A company that's like this, that's this big and this well established, I think you're a little bit safer in that, meaning I don't think that you're going to lose 80, 90% of your investment if you trade that. But be advised, biotech is definitely headline driven. We look to be at some pretty decent support right here. If you wanted to take a position at this price, I don't necessarily see a problem with that. Maybe scale into your position so that you can more or better limit your risk. I do like to see buying interest in this, right? So if some of these volume sticks start to curl up with more buying interest in it, that could really be a good sign. If we break some of these recent highs and make a run towards 20, I think if we break 20, you're going to be risk on here. Ideally, we'd like to have that gap up to 25 filled. So this is an interesting one. Definitely one to watch. Not one I'd be running to buy right now, however. Tesla. All right. So Tesla, this is a cult stock. Everyone knows about Tesla. Had a real rough day today. This would be one of those stocks where I think that you might be able to play a bounce here. Couple of things. I know that they bought a bunch of Bitcoin and Bitcoin went up like crazy after they bought it. Bitcoin had kind of a sell-off today, even though the sell-off was bought, and Tesla really kind of sold off and closed on its lows here. If you're going to, this is full caveat. This is a stock that I have not been able to figure out in terms of trading. The people that I trust that talk about stocks with me for like swings or longer term holds, they all love Tesla. Jason from Benzinga here loves Tesla. Tesla's doing great things, but I've not been successful in trading this. So take that with a grain of salt. Now, with that being said, anytime we have like a big red candle like this, it's often bought back up and it often bounces. I mean, in fact, if we go back here to January 29th, we had kind of a similar candle in terms of its degree. The next 2 days were just ragers. So that if you're going to trade this for short term, you may be able to get away with this. Obviously, with it being down, what was it down today? Down almost 9%, 8.5% today. There's definitely some room here for this to bounce. And if you're trading options, you can really make a killing on some of those options. I have no edge here. I'd be worried if this continued to break down past that 700 level. I think that up here, there's quite a bit of emphasis placed on some of those round numbers. So the 700, 650, basically the 700 and the 50 levels, you could see some accelerated momentum here. My gut tells me that we're going to bounce here tomorrow in Tesla. We will see how it plays out. I'm sure someone will remind me tomorrow. But again, just keep in mind, I have not done well with this stock over the course of my career, so I just don't trade it. I trade other things that I do well on. DocuSign, here's actually a stock that I really, really like as a long-term hold. I liked this when the stock was 60. The DocuSign, I feel like, is being adopted. Anytime, or if you look at some of the fallout from the whole coronavirus, the social distancing, all of that, I think that this is going to be the way of the future. Even if you remove that, simply having a convenient way to go through forms, sign an initial form so you're not reading these lengthy forms and having to pass around paper and mail it and wait and all that stuff. Really, really intriguing. I think especially if home buying continues. I mean, DocuSign's obviously going to get used. I know they're used in a lot of other applications. I really, really like this. From a technical perspective here, I do like the trend that we're kind of making, right? This recent trend that we're making, definitely like to see this, right? Definitely want to see this trend continue. And I would be aiming to look for a break above the recent high that was put in September of last year, right? So a 290 high here, we snapped that. You got blue sky breakout above that. I mean, you can own, I don't know where it's going to go. I feel like you'd be all right holding that for the long term here. For right now, I would play this a little bit shorter. I would actually wait for support levels to be hit before I buy. So right now, right where we're at, about 244, 245-ish, looks like this is some pretty good support. We'll see what happens when this next level is tested here. I'd like to see a break above 256. I think that would probably send us closer to that 290. I like this stock. I don't really have an edge on where we're at now. I think that there are a couple of things that have helped give this the boost, but I like this company. I've used them myself. I think that they're here to stay. I don't have any flashing red lights about this one. It's just, I'm not sure about this as an entry point. If you were to take something like this, maybe starting small here and trading it with a tight stop might be prudent for risk. But we'll see how that goes. Love the company though. Upwork, and this is another one of Jason's favorites. This thing has been an absolute tear. I remember laughing at Jason when he bought it. Now he's laughing at me because he's up, I think, over 100% from his buy. This thing, a recent high flyer, definitely in a nice uptrend, but I'd be weary about this coming back in. If we do come in, I want to make sure that there is a reversal that is confirmed by volume, right? So if we trade back down to any of these different levels here, 49, 45, I want that level to hold, and I want the reversal to be accompanied by buying volume, excuse me. If I see that, that's a really good potential swing trade. We use Upwork quite a bit here. The gig economy really kind of favors Upwork's business model. Working remotely definitely favors Upwork's business model. So there's a lot of positive catalysts here. Be advised that we do have earnings tomorrow. I have no edge going into the print tomorrow. So if you're long going into tomorrow, it looks like it's after market close tomorrow. So you'll have tomorrow to figure out if that's a decision that you want to make. If you're holding this through the print, good luck. I don't have any edge for you. This would be definitely something that I would avoid as an earnings play, simply because I have no edge. So, okay, thank you for your opinion on Exxon. You're most welcome. I don't like G anymore. they sold off too many parts, and that makes me nervous. I totally understand. Andy, you were asking about ticker CNC. It looks like it's forming a bottom. Let's take a look. All right, so first of all, in the daily part, I wouldn't say that it's forming a bottom. It definitely looks like it's forming some support here. That's without question. It looks like some of these recent candles, we've bounced off of them several times. I'd be weary of a breakdown here. So I like to see this particular trend. Right, this is good, but we are really at a decision point right here. We are right at near where these lines intersect. We've effectively made some pretty heavy support here, but if this gets broken, I think the net you're going to 53 for sure. And if that breaks, I think you're definitely going to 44, maybe a little bit less than that, maybe 50-ish, and we might get a little bit of a bounce. But I want to make sure that this trend is still intact. If I can confirm that this trend line here is still intact, I like this for a trade back towards the 70 handle and in some really good conditions, maybe even 75. We break above 75. Looks like that is a double top here. So if we're able to break 75 and that's confirmed with volume, that could be another blue sky breakout, as they like to say. So really kind of at an inflection point here. What I like the most about this is that this trade's going to be fairly easy to understand, right? We're about at support. If that support can't hold, I don't think that there's a long trade to be made here yet. If that support does hold, we're really, really close to that support. You can use that as your stop trade against that level. So good call here on CNC. I'm actually going to watch this myself. Great call there. Looks like the bottom's forming. We'd love for you to talk about SFTW. And I apologize. We have a lot of interaction today. I absolutely love seeing that. I'm going to run through as many of these as I can. It's quite possible that I missed something. If you want to go ahead and throw that in the chat or mention here on the stream, that would be fine. This here, so right away, SFTW, you know what this means. You've seen this formation before. I've talked about it ad nauseum. This is your floating island, right? So I want to mark off the bottom of that island. As long as we hold above this, it looks like we're going to want to go higher. This red candle here, this actually looks good to me today, right? Because we had a pretty steep run up. We gave back some of those gains, but the buyers stepped in. Let's zoom in a little bit here. All right. So we gapped up in the pre-market. We sold off here, could be in sympathy with the rest of the market. Once we got low enough, we did get some buyers to fill in. We've been trading back up in the after hours. So let's watch how this stock actually opens tomorrow. As long as we stay above 1334. In fact, we're only at 1451 right now. So you're going to trade this to the long side, maybe start a little starter position, keep your risks a little bit smaller so that you can have a little bit more play in your stop. I do think that if we hold this 1334 level, we are going to then test 1750-ish next. So again, we want to see this come into 1334. I think if you take a starter here and you see it continue to trade off, you can use 1334 as your stop. Maybe add if it gets closer to that. If it is able to hold, then you're going to be in good shape with your cost basis. If it breaks, just get out, look for the next play. Otherwise, upside target, we're looking for a 1750 break and beyond. So Mark said Elon knocked on Bitcoin today. So is that what the big sell-off was for? And Mark's nodding his head. Okay, so that's what the big sell-off was for. It's interesting. That guy, man, his words carry more weight than Bitcoin for the no pun intended. Pun actually intended. He can talk about a particular stock. He can talk about a particular coin. Wasn't he the one responsible for moving Dogecoin? Is that, I see lots of nods out there. Yeah. Okay. So, I mean, this guy seems to have some power over the market in terms of headlines. Here's what I'll say about headlines. Kind of fits into my plan about you with TDAC and some of my other stocks that were beaten down today. Headlines can cause things to move against you. If you still believe in the story, the headlines are not providing you an exit signal. Instead, they're providing you a discount on that asset. And so I'm not sure that the story, even if Elon says some bad things about Bitcoin, I'm not sure that the fundamental thesis on Bitcoin changed. I would actually add on weakness in that regard. I haven't added to Bitcoin. I wish that I have more recently. I've just kind of been running with my smaller coin portfolio, my wallet, if you will. And I'm up quite a bit on it now. So at this point, I'm just kind of waiting it out. If you're looking for new trades here, I would wait until this comes into support. Days like today, where it gets where it gets sold off and then buyers step in, that's generally a good sign, right? That means that when selling pressure is applied, buyers are not afraid. Some of these small caps today were bidless going into the close. GoGo closed on the lows. Twitter closed on the lows. You might not even consider that a small cap. Tesla's certainly not a small cap. SLGG closed on the lows and is actually a little bit lower after hours. So some of these small caps were just absolutely bidless going into the close. This, on the other hand, did catch a bid, right? We did catch a bid. There was actually a little bit of a run up. Buyers definitely stepped in here. So this is slightly different than some of the other positions that we've taken a look at. Tomorrow should help give us some more information. We'll get another candle drawn here on the daily chart, and we'll be able to see what the next move might be. Again, 1334 here is going to be your stop. Hector, you asked about Sava. Let's take a look at Sava. I know this was talked about quite a bit recently. What about Sava and long-term? Big news today, made a major pop to close to 69, sold 62.5 and bought back in at 52.75. Okay, so a couple of things here. So, all right, so you sold then, let me see if I'm understanding you correctly. You sold stock at 62.50. And then you bought back in as the stock traded down. Is that correct?
That is correct.
Okay. So first of all, great job. This is exactly what you did today is exactly what I should have done on TDAC. I should have sold it in the pre-market and then I should have bought it back after it bled. I didn't do that for two reasons. Number one, I just bought the stock. I wasn't really trying to go back and forth. And number two, I just kind of let things happen today. I had a lot of stuff to do with work. I was comfortable in where I sat in terms of my positions, so I didn't want to follow every tick. And if I had, boy, I would have been pounding my head against the wall. Today was a tough day. You managed to actually do that, and you did it successfully. So great job. So your new cost basis is $52.75. You're up $2, $1.50 from that cost basis. You already sold. I'm assuming for a profit. You sold earlier for a profit.
No, I've been kind of playing Sava back and forth ever since the original big news about their Alzheimer's medicine came out, and so I actually took a big loss early on in that whole movement, and I've been kind of mitigating my losses by selling, rebuying, because I actually do believe in the stock, and I believe in what's possible with that drug.
So you hit on a couple of good things there. Let's break them down one at a time. Number one, you believe the story, so you're not giving up on the stock. So even though you took a loss, you're finding other ways to claw back some of those gains. That's awesome. That's a great way to try and become familiar with the stock whose story you still believe in. Excellent job. As far as your trading today, based on what you have listed here, another excellent job. You're able to actually navigate through kind of a weird day today. Now, from this longer term perspective, I love that despite the selling pressure that we got today, after good news, mind you, we're able to hold this level that we've kind of carved out. This is some of the impulsive move that kind of took this from 22 up to 115. Now we're giving some of that back, but we're holding here in the middle right around 53. That's what I want to see. So from a trade going forward here, I'm actually going to make my downside stop here a little bit tighter. I'm going to trade this against 49, let's call it, and I'm going to hope that we try to fill this gap up back towards 100. Now, I just gave you $3 of downside, or excuse me, $4 of downside versus $47 of upside. Please understand that that is not normally how stocks work. It actually might, although it ran to 100 really quickly in the past, it might take a while for that move to materialize, everything considered. Now, if we look at the whim here, Cassava Sciences shares are trading higher after the company announced the meeting with the FDA resulted in a clear path for the company to advance its Alzheimer's treatment into a phase 3 study. So a couple of things to take away there. That's awesome. That is definitely good news. I can see why it popped. Because we don't have anything definitive and we're still in some of these studies, we gave some of that back here. What I will say is that going forward, we've talked about this before, Alzheimer's is a huge market. If you are successfully able to deploy a drug in the Alzheimer's space, I mean, there's almost no telling where the stock price can go. So that's great. You found something with some huge potential upside. We've also, using some technical analysis, discovered or figured out a near-term downside. So you can have your plan for each direction. Here's what I'll say. If we're going into a phase 3 study now, you're really going to have to be mindful of some of those headlines. Like I said, you're going to get headlines going in both directions. And with biotechs, it can really, really move that. So I like your idea of trading around a core position. You believe in the company as a whole, but you're taking smaller trades here to make sure that you don't expose yourself to that huge move that wipes you out. That is absolutely textbook 101 risk management. Keep that up. If you're able to protect your capital and then tactically find spots where you can try to use the risk reward in your favor, that's going to serve you well going forward. So I like your idea here. This is definitely one that we talk about all the time. I'm going to add this one to my watch list too. So hopefully I can be a little bit more prepared when we go through this. I know we have another ace of a BZ Pro member. Elena trades this. I believe she's in this for the long term too. She really knows her stuff. So real good stuff to see. This is really interesting being at this point. Looking at this chart, looking at the news, my gut feeling and being a long bias trader, I do think the next move is up here. Just make sure you continue to have that downside plan. Love it, Hector. I think you're doing a great job. Doku is the best channel play ever, in my opinion. I would agree with that. Andrew Weiss talking about AMC here. Let's see. So again, we're up after hours. Shares of several companies in reopening sectors such as theme park, travel, hotel, and cruise are trading higher as the rate of new COVID-19 cases decline amid the vaccine rollout. Okay, so now it looks like we're starting to move away from the short squeeze headlines and we're starting to move back to more fundamental things. AMC is going to be able to make money if people go to their theaters. It's pretty simple. If COVID starts to dissipate and people are more trusting in going outside because of the vaccine or because of the lower case numbers or a combination of both, I think that plays into the thesis here for AMC. Now, this after hours move, to me, that again, with after hours and pre-market, I try not to trade during those sessions. I want to see what happens when the volume shows up. Do not chase this here in the after hours. If we wake up and this thing is 14 tomorrow and you guys are all like, but you told me not to chase, I will apologize. But I don't think that's going to happen. I definitely want to see some confirmation here. I want to see some of this volume pour in. I do like seeing this pop later here. I'm assuming that some of this news looks like we popped right out of the open too, and then we actually broke those highs here. This actually looks like a potential volume expansion day trade that we could have had here, right? We set these highs in the morning. We broke through on this gigantic volume candle. We held that, and now we're trading up afterwards. So if you're already long, really good candidate for a gap up tomorrow. Would not chase it here in the after hours. Be aware of those headlines. I do like that we're switching away from short squeeze headlines to COVID headlines because, again, this is more comment on the fundamentals of this business and whether or not they can make money. Those headlines are going to be easier to play, in my opinion. All right. Vuzi. All right, Joseph, walk me through Vuzi. I know that the community was trading this earlier. I saw it in the chat room. We had a massive run out the opening. So my first question here is, did you trade Vuzi today?
No, I've been in this since after the small market or small caps conference that Benzinga had.
Oh, that's right. No, you said that. I apologize for not being able to remember that.
But I did trim today, because it had a nice spike before the market started sinking.
Yeah, I think that's definitely a prudent move. I don't remember when we actually talked about this, but as far back as Christmas, as this most recent Christmas, this was a $4 stock. Here we are up at 20. Definitely okay to trim. Love that it looks like we're creating a floating island here. So the first, obviously, whenever I see this formation, the very first thing that I want to do is mark some of these lines off. I think if we come back in towards 1950, that might be a safe play for a move higher. If we break 1950, we're probably going to go back down to 18-ish. If we take a look at what happened today, Vuzix shares are trading higher after Kathy Wood's ARK Invest reported it bought 2,900 and excuse me, 292,091 shares of the stock on Friday. Okay, so they bought on Friday. It traded back up today. It gave back some of those gains, but this bleed, again, considering the market and considering we didn't actually go below where we opened today, I'm not concerned about this, especially from a swing trade perspective. Joseph, in your case, you've had this for a while. You're up nicely on it. Love the idea to trim and protect your profits. I would, like you, I'm assuming that this is the camp you find yourself in. Like you, I would want to hold at least a partial position here because to my eye, it does look like at minimum, we want to test going higher here. With you already having some gains locked in, that's great. I think that should make it a little bit easier to trade. All right, let me keep going on here. People want AMC to the moon. I'm sure that they do. Let's take a look at some of those other tickers you suggested, Andrew. FTFT. I believe that this is Future FinTech Group. I believe that this is a China play. Maybe not. Maybe I'm mixing this up with another one. This is definitely blockchain, Bitcoin related here. Interesting. If anyone has any color on this, I would love to hear it. This definitely is kind of a wild one, right? Let me go back to that daily chart here. So we moved off of a $2 level, spiked all the way up to 11, came back in. So you can see this is kind of like what we were talking about on Sava, right? We had a huge pop that was just orders of magnitude larger than the current price, retraced quite a bit of that. In this case, we retraced a little bit more, but we did bounce, right? It was, in fact, able to hold that, and then we tried to test the top of that. Now, we've come back in a little bit here, so looking at this for a trade going forward, I'm definitely, this is the level that I'm interested in, right? 614, this is a point of no return. We break 614 to the downside, we're definitely going to see fours. We could even go back down into sub two levels here. So we'll see. I don't have any edge in terms of this company. I know that we're still kind of playing along with some of the Bitcoin blockchain headlines. I'm wondering if the price of Bitcoin is having an effect on this. We'll see. To me, though, again, this is one that I probably wouldn't choose to trade this over some of the other ones. I would actually look for a day trader on this. I would look for an intraday trade. One of the things that I like about hitting day trades is that if you scale out of your position and the strength remains in that name all day, I don't have a problem carrying a little piece of your position over into the next day to see if it actually gaps and if that momentum continues. That's not in play here at all, right? This big power move that we got out the beginning, that we got in the morning here, we gave most of that back. We tried to bounce, really couldn't. We didn't break down further, which is good, but let's wait and see what the next move is before we actually deploy capital to work here. Vuzi in the ARC portfolio, that's definitely a catalyst. We've talked about that. We'll see if that actually materializes. XPEV here is one of the other tickers that was thrown out by YouTube, it looks like. All right. So why is it moving? Shares of several Chinese stocks are trading lower on a sell-off as investor concerns grow over high valuations in the market and potential policy tightening. All right, that's a word salad right there. Additionally, an EU paper seen by the Wall Street Journal called for greater U.S. cooperation in pressuring China. Okay, so right away here, this definitely seems like this is a bit of a political battle. China has been in the headlines for, through most of Trump's administration, and now we've got Biden's administration trying to undo some of the stuff the Trump administration does. So I'm sure there's going to be some headlines back and forth here. For me, again, I'm not someone that trades China stocks. I need to be confident in some of the fundamentals, and I'm not confident of any numbers coming out for any company in a state-run country. The socialist China, communistic China, I just don't trust their numbers. That's not going to change. I'll find plays elsewhere. For the sake of answering your question here, we are at kind of an interesting level, right? So we already made this bottom that we bounced off of pretty ferociously. What was this, back right around New Year's, right? So right after Christmas, we really kind of bounced off of this level. Now we're starting to test that level here. Again, depending on how you want to look at it, if you're a bull in this company and you're saying that we're at some of this more recent support, the next move might be up here, but I just can't help it. I see trend lines wherever I go, and it's a blessing and a curse. Right here, this trend is down. Until this trend is broken, I'm not interested in this. I want to see trend change, and I want confirmation in volume. This looks like this is relatively mediocre volume. We're really struggling to kind of break some of those recent highs, so we'll see. Andrew, how are we doing?
Doing good. I mean, it's almost 5. We can keep going. It's up to you. I mean,
Let's
people
do it.
got
Got
another tickers.
Nope. You already said we could keep going, so I'm rolling. So the next ticker we got suggested here is Plug. Yusuf suggested Plug. This one definitely a favorite. Now it does look like we're rolling over here. This is a bit of a concern for me. When I first found out about Plug, this was a $2 stock. Now, albeit that was a long time ago, and a lot has happened since then. But with earnings coming up here Thursday before the market opens, that means Wednesday is going to be your last session to actually trade this. This chart formation scares me. We've definitely had some recent power moves here, right? We had several gaps that took place on this name. One right after another, two right after another, excuse me. But now we've given some of those back. We've actually broken beneath those, and we've closed beneath those several times here. So these levels that we're in here, we're kind of in a volatile zone here. I absolutely would not hold this through earnings. I do not have enough of an edge. This thing is up pretty crazy. In fact, this would be a good candidate to get a fib picture on, right? We want to go from here to here. All right, so it looks like we've retraced. We're almost at the golden ratio. If you want to take I'm never going to poo-poo anyone for taking a reversal trade off of the golden ratio. So when you're looking at a Fibonacci retracement, if you're trading off of that 0.618 level, more power to you. I hope it works. It works more often than it doesn't work. It looks like we did kind of bounce and get that wick. So it'll be interesting to see what formation this makes tomorrow. Wouldn't hold this through earnings. For me, with earnings being so close, this is more of a very, very short-term trade, probably a day trade. So one of the things is I don't think that we'd have anything like an offering until after earnings. In fact, if you want to listen to the earnings call, I would highly advise that. I would not be shocked if you had an analyst or multiple analysts either hint or flat out ask the company if an offering is in their future. I don't know the specifics of this company. What I will say, though, is that if we bounce, look for a return to your 65 level. I think that we're definitely going to try to test that, but I got to see that bounce first just to make sure. This chart really kind of just looks like it's rolling over, and then with any type of downside momentum, we're for sure going back to 33. If that breaks, I mean, we could go even lower than that. So it'll be interesting to see how this actually keeps going. Again, the earnings really kind of scares me away. We got another one here. John mentioned Sens. This is a stock that I've liked for a number of years. I initially bought this stock back when it was like $3, so probably back in 2018. And I actually sold it for a loss when it approached the $2 line. And I said, you know what? It was kind of a bummer because I actually believe in this company. It's more of a bummer now after we see this move that it's making. I do like to see this, right? So we see a big pop here. We see the corrective move, but it holds midway through that channel and then pops again, and then holds and pops again. So if we hold here, I think your next move is back up towards 50. Again, $55. This, I believe, deals with some type of implant that helps diabetic patients. Correct me if I'm wrong. You might have more of a recent angle on that. It's focused on the design, development, and commercialization of the glucose monitoring system, which helps people manage their diabetes. Bang, I still got it. Its products and services include glucose monitoring system, a smart transmitter, and I believe that actually goes into the body and can be managed from the mobile app. So that's definitely helpful, and I think that eliminates finger pricking and any of the other types of things that you have to do to test your blood. If it's already in your body and then can report the results to a mobile phone, I think that can kind of stop that. That is pretty intriguing. So I like this long term. One of the other guys that I've been following for a while really likes this. He actually was able to hold it through this downdraft that I was unable to do. So I think long term the future is bright for this. Let's hope the product works. There's a lot of people out there that would like some type of help with the treatment of diabetes. So we'll see. I do like this one right here. I definitely like to see it hold. I think some of this recent price action is bullish in the sense that we're holding some of these levels as we take the next leg up. So I'd like to see that pattern repeat, maybe move towards 6. Andrew, how are we doing on time?
You're good. I mean, there is no one after us. I do have two tickers. I've just shared them with you. The first one and the second one's coming right here. If you want to go over those real fast.
Yep, absolutely. Let's do it here before we call it for a day. And as an administrative note, while everyone's here, we've finalized the schedule for this particular show. This particular show will run Monday through Thursday from 4 to 5. We had some people try to show up on Friday. That was our bad for not letting you know ahead of time that we weren't going to be here on Friday. We have a company-wide meeting that we all like to participate on Friday. So I think what we're going to do is we're going to run this show Monday through Thursday. And Thursday is going to be the day where the developers join us. So if you have any questions about future products or you want to speak to one of the developers live, Thursday is the day for you. Otherwise, we're going to be rolling through stocks, different opportunities, and different trades, just like we're doing today. So anyway, back to the ticker VISL. You can see what happened here, right? This is good old support and resist being manifested. So we broke down from this $4, $4.13 level. We made a more supported $1.25. And then once the volume came in, we really started to push off that level. We went through 413 and now we're back testing this level. So looks like we closed here. Let's see where we actually closed here today. Closing price was 411. That's right where we're at right now. As long as we hold this going into tomorrow, I think that bodes well. Again, I think that in the near term, we definitely want to break 530 for if we're going to have any type of big run like this. If you're looking for a day trade, you're probably going to be pretty good scalping this for 15 to 30 cents on a regular. Let's zoom in today and see what it looks like. So you're going 14.21. Yeah. So 15, 20 cents. It looks like if you can capitalize on some of these intraday reversals, I would use volume as your guide on that. You can probably get scalps in here anywhere from 15 to 20 cents. So what that means is, let's say, for example, let's set up a hypothetical trade on this ticker, right? Let's say we actually gap down to this 390 or trade down right after the open to 390. I'd be willing to bet there's a bit of a bounce there, and I'd set my target at 405, right? That's looking for 15 cents. I can go plus or minus a couple of cents depending on how it actually reacts when the time comes. But to me, again, I would say that this is probably more of a day trader. I don't have any angle on this for a swing trade. Looking at the technicals here, we definitely want to hold above this level, then break one of these more recent highs around 5 before we actually send this to a little bit higher level here.
Well, Ryan, do you want an angle? Because the CEO, Mickey Miller, will be on Zinger Nation tomorrow at 12:30.
Great plug. Hopefully he didn't see me just badmouth the stock a little bit. I hope that you're able to get some insight from his presentation. That's really awesome that we're going to be able to interview him. If you guys have questions on the business model as a whole, show up to that show and see if you can get your questions answered, much like you're doing right here. I think that's one of the things that I really like. Whenever an executive comes on and we're able to ask them questions, I love seeing that. I love transparency when I'm investing. So seeing something like that would be really cool. I would like an angle, and Andrew, thank you for telling me that, because now it looks like you've given me some homework to do. I'm at minimum going to make sure I'm ready for that presentation and have an angle tomorrow. So let's see. The other ticker that you were looking at is VVOS, Vivos Therapeutics. This one. So first of all, with no angle, the earnings is unconfirmed, but I wouldn't hold this through earnings anyway. I like the chart formation that we've got here, right? We had a huge move. We had a corrective move. We have a rounding bottom now, and we're starting to trade off of that. We're doing this on low volume here, right? So if this volume increases, look at what can happen to this move. I'm willing to bet that this is a low float stock. Let's see if we have float numbers on it. 12 million, 12.5 million. If that's one of the more recent updated, this is a super low float. This thing could really, really move. I mean, you get a lot of volume in this thing could double in a day. If you get that float traded over the course of a day, I mean, if it trades its entire float over the course of a day, there's no telling what this thing could do. You could have moves in both directions. I would also imagine that this is going to be pretty prominent on the interwebs, Twitter and StockTwits and all of that, if you do get any type of move like that. Those lower float stocks really seem to get soaked up in terms of some of those mentions, and you're going to have people playing both sides of that. So I do like the the chart on this. I wish I knew a little bit more about the company. I want to see some continued pressure. I think if we can break today's top candle tomorrow during the session, we might actually be able to touch some of these low teens here. So this is a really interesting one. I'm going to go ahead and add this one to my main watch list as well. This, even if you don't swing this, this could provide some spicy day trading. Be very, very careful with lower floats, though. You really don't want to get trapped in your position. You certainly don't want that to go against you.
And once again, their CEO Kirk Huntsman will be on the Zinger Nation show tomorrow. So,
well, we're getting you set that up. That was almost too good. You set that one up.
That was 100% set up.
Yeah, you set that one up.
I just wanted you to say some like bad mouth. I wanted something crazy out of your
mouth. All right. Well, let's see how this goes tomorrow, and we'll reconvene tomorrow and see what they say about it. So be sure to check out those shows. Be sure to join us tomorrow again, 4 o'clock. It is going to be 5 o'clock. I'm really struggling. 4 to 5 every day except for Friday. So Monday through Thursday, 4 to 5. Developers will be here on Thursday. We will see ya tomorrow.
Yep, and pre-market prep starts at 8 a.m. So we'll be on YouTube all day again tomorrow. Everyone have a great day. Hopefully the markets are a little brighter tomorrow, and have a good one.